Dude, I'm dropping my phone, everything. I just banged on my computer. Good morning, guys. Holy shit. What a morning. Good morning. Hope you guys are well. Sorry that I'm late. I ended up waking up this morning at like 4:30, 5 o'clock, and I was up, and then I guess I fell asleep. Back, it was I think I know I seen 7 o'clock. I know I seen 7, but I don't know if I fell asleep prior at like 6:45, 7:15. So I was a little wore out yesterday. Um, let's go right into it because I want to hurry up. I need to get my game plan going here. Um, so CPI just came in right in line, pretty much like we said. But look at the jobless claims, right? Look at those jobless claims back down to 202,000. 202,000. This is not what the Fed wants. All right, I think this is why the markets pulled back like they did. I know everybody could say, "Oh, this, that," expectations 210, forecasting 209. All right. So when this stuff comes out, some people don't know what the hell they're looking for or what's going on. You know, I mean, hell, you bring up the bank term funding program and they want to laugh at you. But anyway, we're on the road to 1,000 subscribers. If you got a little heart in you, hit that like button, subscribe, join us while we get to 1,000 subscribers, and we're gonna and we kick some ass. All right, let's go right into it. So the SPY is just holding that spot yesterday that we pulled back to. All right, that's the markets. All right, that's pretty much the markets. Qs are doing the same thing. Just watch for that pivot low from yesterday. Watch for yesterday's close. So, higher for longer is what I get. All right, you got to watch yields. Look at yields. Okay, I guarantee you, how many people watch somebody that's not even looking at yields? Watch people that they're not even checking yields out. All right, that you have to. I mean, you could say that the market's pulling back, and you look at yields and they're not pulling back. Then, you get shaken out because you think the market's pulling back. You want to see something solidify. Like this is telling you right here, higher for longer. Okay. Labor market. Remember, labor market is what's on the Fed's mind. Okay. Not to say that we'll start rallying, but this is a 15-minute chart. Come on. Hold on one second. I got to turn this volume down. All right, let's do this. All right, so that's the Qs. The IWM is setting up pretty nicely here. I am upset that I did not get long Google and Microsoft, so let me bring them up after I'm done this. So here's Microsoft, or not Microsoft, but the IWM. All right, it's just hanging out. All right, now let's look at it. It's starting to turn this level into resistance. So if we don't get back above here, this is the level I'd like to try and have an opportunity to the short side on the IWM, because if I take you to a daily chart, all right, look at this daily chart. Once again, just like COVID, consolidation. You tried to extend it high. You tried to break through those highs, and you immediately pulled it back and started that bear market. Not to say that we're going to do that now, but we're turning this whole area into resistance. Let's see, support. It's actually making some progress. If you look at these levels right here, really the level would be right here, and it looks like it's holding it, and that's at 195 or 194. So I'm going to keep 194 on my watch. Even though this is resistance, right? This is still resistance up here. I wonder if we can get a breakout and test this gap fill back at this prior resistance level here. All right, so this is an idea that I'm watching. Why I know for a fact I have um what you call it on. All right, so right there, let's see if we can get a gap fill to there. If we end up rallying, okay, which I wouldn't doubt that we do. We have PPI tomorrow. I don't think we have any other major catalysts tomorrow other than PPI. I don't think we have like non-farm payrolls or anything. I don't think that's until next week. Yeah, PPI, and that's it. And that's it tomorrow. It feels like we haven't had an exciting month in a while. I mean, we've had exciting months leading up to now. Like, we've had some really good months, but I feel like next week could be a week where we have some other data that I'm looking forward to. So let's go over some of some of the names that we've been looking at. We got to look at the elephant in the room, and that's going to be Bitcoin names, ARK, right? Coin, Mara. All right, sorry about that. Let's see here. So let's go to Google. I want to see where Google's at. 5-minute chart. It's just pulling back. It's strong. Google is still strong. I wanted to take this long yesterday in Google. Well, that's a good. Maybe it wouldn't have worked out. I mean, it did go higher on the off of that pullback, but unless it was, yeah, that was the day 130. Yeah, yesterday I was looking at it and I thought that we could get a little bit more upside on Google, and it did. Pulled back, double bottomed, right? Double bottomed at the previous day's high. Sorry, I'm just trying to drink some coffee. I got to turn that mic off. So all right, let's do this. All right, so 15-minute chart here on Microsoft, just monster, okay? It broke out yesterday. I never was able to get the long yesterday, and I'm a little upset with myself that I did not take it. It's been a monster. Google, Microsoft have been a monster, and it looks like Amazon's trying to join the party as well. So this is why I said to just don't get over your skis and think you're going to short Microsoft, because it very well could pull back up to the upside. All right, you have a bit of a rejection up there at the prior high, and then I want to see if the markets do try to trend higher today, and we end up getting this extension on Microsoft. Now Google is still continuing. Google, I replay Meta in my head, right? I replay Meta in my head, and it's just every day there's just no stopping it. It just goes up and up and up and up. So what I'll do is I will look for, if Microsoft can give us another test of this 382 level, I'll look for a long then. Okay, I'll look for a long then. Maybe it can break out. Let me get my pen. All right. All right, so that orange line is going to be our target. Okay, and that's 382, right? Yeah, 382. All right, and it's holding prior day's highs. It's holding prior day's highs as well, so I can't ignore that. Or at least I won't ignore it. Okay? I'm not going to ignore that either. Now, if we can bump into this and turn it into resistance, you know, that might be cool too. Alright, that might be cool too. I know I have so many lines on this chart. It's so many lines on there. It's crazy, but it is what it is. Yeah, I feel like that 383 is the area. Oh, it pulled back here. What was I doing? I thought it pulled back to 382. Hold up. What was I looking at? Yeah, maybe it turns this area into rejection, 385. And we get a 385 pullback down to 382. Alright, that's what I would look for. See if you get the bounce. Okay. Short. Up at this area. Wicks. And then you just, I mean, it may not do it in one try and just pull all the way back, but then I think you get your pullback. Alright, and then we figure out what we're going to do as far as PPI tomorrow and if these things are going to break out to new highs. Alright, so that's Microsoft. Where's Apple? Where's the darling Apple at? Alright, Apple. Look at that. Look at Apple. This was a nice long. We got over 100% on this trade. It was a beautiful entry, right? This retest here. Hold on. Hold up. Alright. I'm sorry. I just got under 100%. You could have easily have gotten yesterday over 100% on this trade. Mine was just under it. So we took the long here off of this bounce, right? Right here at this rejection point is where I was able to get in, where I got myself in on this tail. Okay. I took half off on this extension off of this pullback, and it extended again. It looked like we had some trouble. I took half that position off right there. So Apple's pulling back into a nice key area right here from Monday's highs. Monday's highs. All right, this was our target to get to it. Well, really our target was 184. And we ended up having to buy off of it because it just went, right? This thing just went, and I never got my entry here. So I'm going to keep my eye on Apple and see if we can't. You know what? I'm going to make this. I'm going to make it this level right here. I don't know what. You know, I'm looking at two levels here on Apple. All right. It's going to be these two levels right here. And you're going to see it. All right, this level right here. What is this? The 380. Where is this? 186. Okay, so we're pulling in 185.65. Okay, yeah, so we pulled in here. All right, so we've pulled in here. I can probably get rid of all this stuff down here. I'm not sure if I want to get rid of that, but I think we're looking for. Let me go back because now I'm confused. But there's a key level here that I don't have drawn out that you guys may or may not see, and that's right here. All right, yesterday's pivot high at 185. Yes, it's at 185. All right, 185. We'll look for that 185 area. Now, it could pull in, and it could just pull back and literally test 184.80. Okay. So, but this is your double top resistance. All right. Support, resistance, resistance, resistance. Made it minor support yesterday. Now you're pulling right back into that level. If it does break, If this level does break, I will look to see if it can try to hold yesterday's pivot high or yesterday's low. I would probably be better off with yesterday's low, as a matter of fact. I would rather look for yesterday's low um, as a target. You know, I feel like Apple should hold here. Feels like it should hold. All right, and that's Apple. And what's right in our way? The 50-day moving average. All right, so there's that. And if you guys have not yet, hit that like button, subscribe. Hit the like button, subscribe. Hit the like button, subscribe. All right, so we still have this huge gap up here. Still feel like there's some opportunity with Apple. Just pick our spots correct. The volume has been pulling back just a bit. The higher we get. So keep an eye on that. Let me see here. Let me see here. All right, that's Apple. Let's look at Amazon real quick and Nvidia, AMD. Go to an hourly chart real quick. If you guys didn't see yesterday, Meta had a monster move. A monster move. All right, I did not know that if there was any news yesterday or not. I'm so upset, man. Today was gonna be a huge day. So Amazon, all right, watch Amazon if she pulls back in here to 154. All right, watch Amazon if she pulls back into 154. If we take it to the daily chart, man, we have so many ideas. We have so many ideas here. I feel like Amazon may have room up to 160. Okay, if Amazon gets going, she could have some room. But I want to buy a pullback. I need a pullback for me to feel comfortable about this trade. All right, so it's like 158.30 to 160 area is the area I'm going to be watching. Let's see here. Yeah, 158, 160. Yeah, that labor market is just fire. It's just strong. There's just no breaking. There's no breaking it. It feels like, but it will eventually. It'll pull back. All right, so we pull back in. 154 entry is what I would like to get. Now you can see here that Amazon is holding yesterday's high. All right, it's trying to hold yesterday's high. All right, you have some resistance up here. All right, you have a bit of resistance. Once you start getting up to 155, that 155 to 156 area, you have some resistance. Okay. Let's see here. I want to try and catch a pullback. I mean, I feel like I need a pullback. I don't want to sit here and buy at all-time highs on Amazon, and I think it's a bit extended. But as far as the daily chart goes, guys, I still think Amazon can go higher. All right, I still think it can go higher. See if you can get a pullback to like 153 or so on Amazon. That's what I would look for. I don't know where my trader. I just had to set my stuff up real quick. It's 9:06. Let's get into it. All right. So the big elephant in the room. We gotta watch Mara, Coinbase, okay, Riot, all those fun names. And I'm gonna have to charge my phone. I looked at Microsoft. Let's look at AMD. So Mara is jumping right up into resistance. All right. We should be getting a ton of volume in this name, and you can see that we already are. Already getting a ton of volume on this name. All right. Pre-market highs. This is a big pennant, guys. That is a big pennant on Mara. You have a really nice... nice support level right here at 1950. 1950 on Mara. All right. 1950 on Mara. This is like just about the same setup as you had on Microsoft. Literally, just about the same setup. Well, look, if I take you to Microsoft MSFT, look at this. It was a little bit more drawn out, right? But you put in that high, you pull back, and you cannot get above this that previous level here, right? High, gets a bounce, breaks it, and it starts turning that into resistance. And if I take you tomorrow, literally the same exact setup, just about, literally, right? So we'll see what happens here. We'll see what happens. All right, 20-day moving average looks like it's the go-to. Let's go to a 30-minute chart. I should pull up the hourly chart, really. Yeah, let's go to the hourly chart. I want to see a pullback on Mara. All right, that's what I would like to see. If we can get a pullback in even here, okay, I'll start putting a position on at like 24. Okay, $24. It's an area. It's actually an area. Let me pull back the reins a little bit here. Right there. All right. Maybe just start the position. If we start to pull back in this area here, notice how the volume is. Okay, we'll see how the volume is. That's what I'm going to look for. All right, so that's Mara. All right, so I'm going to have that area on watch. And then, of course, 2750, this area, 27. If it breaks it and pulls back into it and holds it, then we look to take it to a new all-time high. All right. I want to see if we get a pullback on Mara. That's what I would like to see. I think we could. I think we could get a pullback. But we don't get that pullback until you get a bounce. I'll be for real. That's what I think's going to happen. All right. I think we're going to get a bounce. You may pull it back this morning off the bell, grabs a bid at 26. It tries to attempt to get back through this area, and then it pulls itself back. All right. So 24 to 22 long, 24, 22 long, and then a 28. Break and hold long. You guys writing this stuff down? Huh? Where y'all at? Good morning, Ray. What's up, buddy? All right, so Tesla. Let's go to Tesla. I gotta clean this chart up on Tesla here. She is just, she's pulling back into the area. Everybody's getting all crazy. I think she needs to pull back to that area. All right, I think she needs to pull back. Pullbacks are healthy. All right, pullbacks are healthy. All right, what's not healthy is you just going higher and higher and higher and higher and don't accumulate some real buying. Again, this is where all your buying is. Okay, that's where all your buying is. Let me actually do this real quick, guys, before let me go to... Alright. See, I can't even see my charts. That's a shame. Alright, so Tesla, I think, needs to pull itself back down into this area. And for it to get long. Down into that low 200 area. Alright, that's my opinion. Man, I wish we could get a 240 Tesla, guys. I would like to see Tesla bounce back into like 240. And then we get like that pullback into that level that we're talking about. But this is a clear pennant. What did I say? 238. And what level is that? 233. Alright. Weekly 50 day? Or 50 weekly moving average? Yeah, resistance, support, support, support. Looks like it's going to try to get there. So 225 on Tesla looks like where she's heading. Did anyone even know that there was a final Republican debate on last night? It's hilarious. If you guys notice, what is funny is how the TV is trying so hard to get people to vote for her, because they come out with things like they see Nikki Haley as to this and that. Oh, do they? It's so funny. It's so funny. But it's actually sad. It's not funny. It's sad. It's sad what this world's come to, man. Let the people decide. The fact that the TV, because I see it, right? I could see some innocent, lonely people sitting in front of their TV, old, and the stuff that they just throw right in their face. It's just crazy. They try to feed them. They try to feed the most ridiculous nonsense. The persuasion starts on the news. That's for sure. All right. So because they're saying Nikki Haley's leading the thing, but then they say, oh, Donald Trump's leading a little bit over Biden. So who's leading again? All right. Anyway, Tesla 200A getting a bid. I think she's got to pull back into this area. We start pulling back into 225, 220, 215. I think you're going to start seeing a decent amount of volume to the buy side, possibly. I think Tesla's got to pull back down in here. Okay, she's got to pull back down in here. There is a minor gap here. If you guys haven't seen, there is a gap on Tesla still that hasn't been filled. All right, right here. It's very small. Very small. That's what she said. I'm just kidding. I mean, we obviously have this gap, but, listen, to me, wicks don't count. Unless this wick came down and actually put its foot in the ground and it came back down and test this area, then I may consider it, right? So you have a really small gap here. All right, 205. Hold on. Yeah, 205 to 207. It's about a $2 range. I think now, two 237.50. I feel like needs to be tested. I do. I think we need to get a bounce on Tesla if you guys are looking for a real sell-off. Yesterday, we said that level would probably hold, and it did. And it looks like it's just given all of that rally back off of the 50-day. Now we're cracking the 200-day, so it's on. We cracked the 200-day. It is on. All right? It is on. It's on. All right? As for me, I'm going to look for... See, it's got to stay below that 200-day moving average. Look how it went right into that level, guys. Look how it went right into that level. I'm not going to have time. I got to start getting these streams a lot better. All right. I want to see if we can bounce to yesterday's low, that pivot low, and see if we can get short Tesla. I mean, this is crazy. That is crazy, right? Am I going crazy? Damn, it's really selling the hell off. You can pay for it, and B, we presume you can drive it. And we ask for your license on the latter. The reality on EVs is that there are millions of Americans, in fact, millions of consumers around the world, who are knowledgeable, experienced in EVs, and they ride them well. There are those that did I write down IWM? Let me see here. I'm trying to look back at some of the names from yesterday. Alright, so IWM is still rejecting. It's still rejecting this level. This is going to be the level that I'm going to watch for 195.50 on IWM to get short. And today's one of those days. Today is one of those days, right, where things can get fishy. All right. Now again, if we just start cracking that level, I'm not gonna wait for the bounce. Right. That's gonna be my new entry, if we end up breaking it. And you don't have much meat on the bone there, so it's like, what's the risk to reward, right? What's your risk to reward? How much meat do you have on the bone? Look at Tesla, or not Tesla, but look at Meta, trying again. Just going again. And that 15-minute has room. It's got room. That's insane. Hello, 380. I told you guys, if we were to break out of this level, right, watch for 350. And I never took that swing on these lows. So I need to do a better job of writing them down. See, I'll write them down, and I'll have my intraday trades. But I gotta remember and start looking at what trades and what ideas do I want to start swinging, right? Because there's a lot of opportunity out here. There's so much opportunity, and you're not going to be able to take advantage of all of it. But you can, it's just something I think that if I do it for myself, I'll be able to not forget about those things. Because I wanted to be long Meta, So do I start thinking about that for Microsoft? This is something I'll have to look over, tonight, going into the weekend. It's got a little bit of room left to it, in my opinion. You're getting into no man's land, so it's like the pullbacks, you're not going to know where they are, right? Maybe psychological $1.50 whole numbers. The weekly chart, I don't know. I think Microsoft needs a pullback, or could use a pullback. Because now it's just getting overextended. Microsoft's getting overextended. You know, so it's just it all depends on the chart. So, all right, we're back up to that previous high. You can see a bit of pulling back there. So, if Microsoft pulls back to 385 and holds it, see, even like this is hard. I'm not taking a long on Microsoft. I don't care. This thing can just go and go and go. 15-minute chart in intermediate term, you have a little bit of room, which tells me 10, 11 o'clock. Maybe I can set myself up for the short on Microsoft. All right. Oh, it's crazy because I know there's probably people that click here and they don't understand the value that they could get out of this channel. So, but it is what it is, you know? It's all good. We just keep showing up. That's what we're going to do. We're just going to keep showing up. So, 922, 385. All right, 385. I'm going to look for a pullback on Microsoft. And I want to see if it kind of just dolls itself out during the day. Let me look at CNBC real quick. They're going to take that fucking trade away. That sucks. Alright, they're taking this trade away right off the bell. Fucking assholes. So Citigroup 5220, I may want to take a short. We still need to look for Boeing as well. 52, we're not going to get it. They're going to take that trade away. We have banks tomorrow. That's right. Tomorrow's going to be a fun day as well. Almost forgot about that. All right. Let's see if Citi can try to hold this area. That sucks. All right. That sucks. It is what it is. This thing's going to sell off a bit. Let's see here. Let me look at this daily chart. We only have just we only have a few minutes. I got to hurry up with the analysis. $50. Let's see, resistance. This thing just has resistance up here at 52. And 44 is the support. That whole range. Alright, if you see here. Really, I should do it like this. Like that. That would be the way it should be done. Come on. Alright, so there's that. That's awful. It's a awful attempt at technical analysis. And then look, tests it, pulls back, and it rallies, breaks it, holds it. So this looks like a key area here on Citi. Just by drawing that out. We'll look for 49 area if we're able to get it. Alright. See, that's a good thing I did that, because now I can start to see what's... Come on, man. I gotta hurry up. Just struggling. Just struggling. I'd like to see if we can take this down to 49 if we can get her. If we can get this thing going, look for a pullback to 49. At least for the midterm on Citi, okay? 49, 49, 49, 49. And you'll have little like 50-50. We'll have like you'll have at this dotted line, you're obviously going to have your bounce backs, okay? These are just areas to take profit. We'll see if it gives it to us. I think it will give it to us, but I think we need a bounce, all right? We got to try to get it up to pre-market highs. 52.80. 52.80 is where I'm going to look to get in, all right? 52.80 area. And yesterday's close. 53. 52.80, 53. I'm looking for the short. All right, what's that mean for JP Morgan and crew? Probably nothing, but we can look at them. I've been waiting for them to pull back a bit, and they haven't given it to us just yet. They may not. They may get a bounce here. Let's look at KRE. All right, KRE still just hanging out because they're coming into earnings here, so they may not move too much, right? Bank of America looks like it's getting ready to pull itself back down to $33. Flat. All right, looks like they're trying to pull themselves back a bit if they can break this level. It would be nice if you could get a test on Bank of America of $33.75 and look to short it back down to 33. Nice 75-cent move there. All right, I wouldn't mind that. That'd be a nice little trade there. Bang. Bang. $33.75 to 33. But you want those bigger days, you know, that it gives it to you. So it may not be time to play it. The volatility is going to be high. And all that fun stuff. If it gets down there, I may try to get along for the earnings. All right, let's look at Apple real quick. Let's bring this up. Good luck today, everyone. I don't have my coffee ready. Okay, so we just Apple. It's holding the level. It's got to break though. Apple's got to break that 50-day in this 186 level. We got to break this level. All right, we got to get through this level here. We got to get through that level. You know what? I'm going to make it a dotted line. We got to break through that level. All right. I think we do. Let's look at... So let's see if we can just get a quick pullback. If this thing continues to rally, look for a quick pullback on Apple, like right here-ish, right around this area. And then see if we can't get the long at like 186.25. Okay, 186.25 area. Good luck today, everyone. I'm going to be... Targets on that. You have some gap fill, by the way, on Apple. Going right into this level up here. Look at that pullback. Trying to. Let's pull it back. Pull it back. Pull it back. No, 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 no. I think you're not going to get it till you get up here. Oh my gosh. I'm sorry, guys. I know. The chart's just being a little, just being a dick. All right, if you guys see any high volume plays, throw them in the chat. If you guys see any momentum, we're here to help one another. Let's look at Mara. Is Mara going to give us our pullback? Let's look for that pullback. All right, Mara. 242, 24 to 22 long, or a break of 28 and it holds this 28, 27, 50 area, then we take the long. For now, Mara, I'm waiting. I went down here. All right. Give me 25. All right. 25 might even be a nice area to take this long. Okay. If you guys are looking at crypto names. Okay. I would like to get time on this, though. I may get like I may get like a few months out. All right, I want to see how liquid it is though first. Let's pivot low from yesterday, close the gap. 26. See how she reacts at 26. All right, see how she reacts as we go into $26. If you guys are watching Mara. I mean, you know, some of the other names should be setting up the same way. All right, see what happens here. See if it tries to start to catch a bounce. And it doesn't mean that like the bounce is going to take us higher, but this bounce could just go to the pre-market highs. Look, you're seeing them buy in front of this level. All right, you're watching the buying start to happen in front of this level. In order to move markets, guys, it takes big money. It takes a lot of money. So you're going to start to see it right in front of it. So there you go, right in front of that $26 level. Bada bing, bada boom. Just like that. All right, now you're going to want to watch for your next level will be 27. Do you start to pull it back off of 27 or do you stretch it out and break it? Chances are, if you get enough volume to come in here, you could break this level. All right, I think you could possibly break that level. You got to back it up, though. It's got to be backed up with volume.
There have been some cautionary catalyst notes out of the city on Hood, for example.
27 flat, 26.99. That's what you want to see. That right there. If you're looking for, if you are bullish, that's what you want to see right there. This is what you want to see. All right. Now watch, like I said, that 26.94. Ping these levels. There you go. You're starting to get that break. Watch time of sales level 2. See what starts to happen here. Because what's going to happen is anybody that's short is going to start getting a bit worried. All right, so that's a nice rejection of VWAP, 27 rejection level, but you're getting an increase in volume. So anytime these pullbacks happen, you may get some people that were short this name may start to take profits. All right, so this thing could start to get froggy. I'm not sure if I want to play dailies or if I want to get some time. All right, I'm not sure which one I do. I would like to get 26 again and retest that. See if we can put in like a double bottom, gap up, put in a double bottom. Would be a nice setup. Let me pull up the SPY. If you guys have any questions or anything, just let me know, and I'll let you guys know as soon as I get into a play or if there's something that I see and I do. I will let you all know. All right, so IWM is stuck between this level here. Damn, it's just struggling. Here's your sign. It's insane. Markets are up here. All right, markets are up here, and the IWM's way down here. Oh, shit. Fuck. Look at that gap fill, guys. So it came into it. Look at those Disney contracts. What were we in yesterday? 88s? Was that the contracts we grabbed yesterday? You know, we're not in them right now, but that was a nice trade yesterday.
Speaking of tech, a lot of think pieces today about the echo boom of layoffs at Unity, Amazon, Google today in hardware, CRM memo saying we're going to freeze some hiring.
Look at that rejection, guys. There was the rejection at 90. It just needs volume. Let's look at Tesla. Sorry, look at the SPY. SPY bounced right off of that key support level up there at like 475.17. All right, and you're getting a very nice increase in volume. You may get a buy day today, guys. It could be a buy day where it just climbs higher and higher and higher and higher, higher. all throughout the day. Tesla is just cracking the... That was the trade today, right here. 200-day rejection, taking it down to 225. Fuck, it's not going to give it to me. That sucks. Look at the volume already on the 15-minute. It's already higher than yesterday. It's not even done yet. Damn it, that sucks. Tesla was the play. Alright, so again for Tesla, I'm looking for 225, 220, 219. Alright, those are the two levels that I'm watching for Tesla. We'll see if it gives us another opportunity to take the short. That's a crazy reversal there. That's a pretty crazy reversal there. Wow, look at that reversal. All right, I feel bad for anybody that just got short Tesla and it reversed it right in. It jammed it right up into him. All right, so here's the daily chart. Okay, there's daily chart. I got to bring this 200-day back up just a hair. All right, and there's your 50. Alright, I'm just trying to see if I get a double top on Tesla, guys. That's what I'm looking for. SPY's up at resistance. I want to see if I can get a double top or another test of that 200-day moving average. Alright. It's showing weakness. Alright, it's showing the weakness. Fuck, I need coffee. Damn it. It's not giving anybody, it's not giving anyone the follow through. So there's another rejection. Look at time and sales. If you guys can see that, right? You guys can see that time and sales on the left-hand side, because I can't see the stream. Alright, so you're getting a bit of struggling up here, but you're still getting a ton of buying. It's mixed bag. There's a lot of selling stepping in here. Backed up with a lot of buying, guys. It's getting a bit red. It's leaning to the red side. Now it's shifting to the red side. See, buying still coming in. It's like these buyers are relentless here. But I'm getting that sense. Look at that. Yeah. So there it is. There's your area. Let's take it over here. Where are we? So we're coming up into VWAP. Oh, we're above VWAP on the 3-minute. Pre-market. Coming into that pre-market low. I wonder if there's going to be a trust issue thing here with Tesla. I'm really wondering if people are going to be a little trustworthy. So here's what I would do. I would wait until yesterday's close. I'm going to wait and see if we get to 233. 233 is where I'm going to look to get short Tesla. If it gives it to me when we get there. So if you guys need to, set an alert. Whatever you guys have to do. Don't jump in early. Plan your trade. Have a plan. Alright, have a plan. Alright, I want to get it up in here. This is where I want to be short Tesla. Let's go look at Boeing. I completely forgot about Boeing. I'm going to go right back to Tesla, though. Yesterday we said 230 short. That would have worked out pretty nicely for you. think today might be the day she does what she does. It's just, I don't know if they're going to let people profit off of what happened. But I think the Dow is what we need this market. The only thing that's been holding Boeing up is the fact that the markets have been going higher. All right. And that's why you haven't had this humongous sell-off. All right, so a nice rejection on the S&Ps there. Nice rejection on the S&Ps. Let's look at Microsoft. All right, I need just a few names to look at. Look at Microsoft, guys. Damn. I can't go long there. Let me see. Hold on. Actually, let me see. Yeah, it's overextended. It could just keep going and going and going and going, but I can't jump. I cannot put risk on in something like that. So whether it does this all day, whether it does it or not, I don't know if I can be a part of it. There it is. It just, that right there just took over Apple there. Now this may bring some volume in. I freaking knew it, man. This thing's just, listen, when stocks are going up, they can and will remain oversold. By the way. I don't know if I can take this trade. But it'll probably go up. You're going to get so look at the volume, guys. Look at that volume breakout. Beautiful volume there. All right, beautiful volume. Look at that. Look at that increase. You ain't had volume like that in a long time. So this is the area. If you like Microsoft for a long, just understand that it may pull back to pre-market highs at 385.50, and you got to be ready for that. Come on.
Let's get to Bob Masani, both the markets and the Bitcoin ETFs. Hey, Bob. Well, we finally made it here. Bitcoin ETF is a reality. Here's one of
All right.
ETFs for Grayscale.
So I don't know if you guys see anything with volume. I'm trying to give out ideas here. All right. Again, I'm not watching Tesla until we get up to 233 area. There's no reason to. All right. There's no reason to watch Tesla until it gets up there. Your real move's going to happen up around this area. 232, 233. Let's look at Apple. If you guys could hit the like button, that'd be awesome. It would really help the stream out. If you guys haven't subscribed, subscribe. We're trying to get to 1,000 subscribers. All right, Apple broke. And what did we say? 185, right? Was the other level? Shit. Look at this. What did we say? Right at that freaking circle. I did not see it not holding up. That's crazy. That's crazy. There's a lot of hate on Apple right now. All right, so here's your pop.
How are you justifying this fee right now? Look, fee is one consideration when investors are making a decision on an ETF. Remember, GBTC is a premium product that came to market in a differentiated way. We have 28 billion in assets. We have 1 million investors. We have a 10-year track record, and we are going to be something that the marketplace can rely on.
Apple's hurting, guys. Apple's hurting.
They're using parallels with the gold ETF 20 years ago. Is that a fair comparison? How much money overall do you think these ETFs
Apple.
Pulling back here, 546,
will attract in the next few months? Bob, 30 years
I want to try to take a short on Apple, but I can't do that right here. All right, so I'm eyeing up Apple. This is huge volume. I need a pop. I need a pop. Why is it doing this to me? Why does it keep doing that?
are high-end wealth managers going to start recommending this, or is there still legal concerns?
Yeah, give me 185.50. Give me 185.50. That's where I would like to take it.
And we absolutely think that there's going to be inflows for retail investors, the advised market, and institutions alike. Okay, thanks very much, guys. We're going to be standing here all day.
He said, "Why do you guys charge so much?" And his answer was, "We're the." He's just like, I don't know if you guys seen that or not. He was just trying to give every reason why they charge people so much money.
Thank you. Yeah, Bob's right. That spread's going to be fascinating, right?
Yeah, I think people are trying to figure out, one, is it an asset class? And two, if it's an asset
It's not going to give it to me. This is weakness.
of a big,
That's weakness. That's fuck, man.
and I think that that's going to be
Damn it.
more determinant than individuals. Will it be something that they want to own and they now have something that
Come on. I need this. I need this. I want to finish this week out strong, guys.
after today we see?
Ladies and gents.
I don't know whether
It's just not holding any level.
enthusiasm just
Not holding any level.
Well, every headline has a phrase like watershed moments, right? The legitimization of an asset class as a whole.
Well, look, I think that when the SEC lost that case, as Bob referenced, that really
I can't get over this.
wow, the federal judiciary is okay with it, and I do think that Bloomberg reported Google and cloud switching.
I gotta wait. I'm gonna be like, if it just falls out of bed and it goes without me, that's fine, guys. That's gonna save me money. Okay, I go chasing this thing right now and it pops all the way back up to the area that I want to get short. Then what happens? Then it goes up to that area. I'm down money, and then it starts to pull back into my area, and I'm still not even making any money. So entries are key. Let them go. If they're not where you want to get long or short, let them go. If you don't, you're going to lose. You just might as well give it up right now. If you can't just sit there and pick your spots and get your trades on where you want them to get on. You trade the market. Don't let the market trade you. Remember that. All right? It's a nice rejection on the S&Ps. Let me pull up the 5-minute. Oh my gosh. Oh my gosh, I'm talking the whole time my mic's not on. Feels like we're pulling back. All right, feels like we're getting this pullback. 475 on the SPY is where I would look to take the S&Ps to if you're looking at the SPY. Here's Boeing. Boeing, pulled back at this level right here. Okay, right there at 226, and it retested it, and now it's just falling out of bed. So I told you guys to be patient on Boeing, and that's why. And look, that's a rejection off the 50-day moving average. Is what that looks to be. So I gotta get on something here. Gotta get on something here. Gotta get on something here. Where we think we're going? Where are we going? Where are we going? Where are we going? Where are we going? All right, we're going to 220. Let's see here. Let me see if I can get me a 220. Let's see if I can get me a 220. There's no way. There's no way I'm paying fucking 60 cents for that. You're out your damn mind, bro. There's no way. I can try to go lower, but so in a sense that's okay, because that's telling you, guys, that's telling you what the market is planning on for the day, guys. You may get your continuation to the downside here. So I'm going to look to be leaning on the short side, and I'm just going to hang on that. Let's look at IWM. I forgot about that. Okay, forgot about that. So IWM's hanging on a bit. That's a nice test of yesterday's pivot low. The volume isn't really there, in my opinion. It's gonna start. It's gonna start doing it now. We're seeing some divergence because so guys, take notice. What do you guys see? All right, there's the IWM, the SPY. Okay, so they are all lined up still. They've been lined up. They have not been lined up like this God knows how long. So the Dow has broke. So the Dow has broke. That should help with Boeing. Okay, that should help with Boeing if the Dow cannot get back above this level and it starts pulling back off of it. I don't know if it's going to, because of the, it just doesn't feel like there's any strength there, and my stuff's messed up. Damn it. Oh shit, Tesla popped back up, didn't it? Be careful. Be careful. Alright, so I'm probably going to start thinking about a Tesla trade here. I wanted to see the Dow. So the Dow did not break that level. Shit. I want to see the Dow break. But it may have to test 376.50 before it goes to the downside. Or it may not go to the downside. The volume looks like it's to the upside. So I'm going to be honest. It may just go up to the upside. Alright, so there's Microsoft pulling back in, guys.
Let's get stop trading with Jim.
Something that hasn't happened since 1999, Carl, when things were really promotional and exciting. People keep buying something on the same story over and over again. Here's a piece by UBS that I'm looking at. NVIDIA did really well at CES. Well, here it goes. NVIDIA again. All-time high. I mean, that you could...
Alright, here goes Tesla. Tesla's going to try and bounce to the upside here, it feels like.
It's a little counterintuitive. Let the good times roll, they bolt on roulette. Yes, so.
There's at least half a dozen notes on NVIDIA CES just this morning.
NVIDIA would crushed it at the healthcare conference.
Fuck, I didn't even look at AMD, guys. I did not even look at AMD.
With the Chiefs versus the Dolphins, right? They've got to be there.
Speaking of which, tell everyone what you're up to tonight and this weekend.
Okay, so I'm doing my show, right? I'm doing Mad Money, and we've got the Beckham tickets this year.
So AIM down is only down 0.2%.
Prepared that my iPhone is going to die because
I'm looking for a 149 on AMD.
and then we're doing our show,
Let's look for a 149 short on AMD. 149.
and then I'll be doing some
See if it gives it to us. 149.
today, talking with the people who run NBC Sports, and obviously I'm a daily fantasy player. I'm a fan. I have more championships under my belt.
That's my trade. That's what I'm going to look for. But that does not mean semiconductors are going to be weak today. Doesn't mean it's going to give me 149.
Do you have favorites for the postseason?
But if she does, I will take
When you have the favorites,
a short on AMD.
oh, I'm sorry, when you have San Francisco versus
Let me look at a few things here. Yeah, give me 149.
something, but I can't
Give me 149.
going to be in outside chance that you only upset.
And I don't like to be short, but
Yeah, because they're the hot team.
Yes. Yeah, talk about momentum. It's what a season it's been.
The Bills, by the way, are meta because
All right, and what I'm gonna look for is AMD. Shit, it could pop higher. Fuck.
He's a very
Um. Hmm.
Well, I can't wait. We got to get through tonight and tomorrow, and then to watch you on Saturday.
I can't wait either. Wild card weekend is the weekend.
So we were talking about this name the other day and how it just went, and it never really gave us. Man, that's such an ugly pattern. Such an ugly pattern. So it may hold here. Looks like it's going to hold here at 148, 147, 147.90s. Okay, so man, if we could just start to bring this thing down. I want to get short. All right, I want to see if we can start to bring it down a bit. All right, so 150 and 150 area. 149 to 150. That's what I'm looking for. I'll put a starter position on if it at 149. I want to see how it gets to 149 if it gets there. All right, I want to see how it gets there. So that's what I'm looking at right now. That's my idea that I can get ahead of, that I feel like hasn't left me. All right. So 149. I don't have my page up. Oh, there we are. Animal, what's up, man? Good evening, Brody. Good morning from me to you. It's early in the morning where I'm at from the United States. But yeah, good afternoon, buddy. How was your day today, man? How is school going? How was your day? All that fun stuff. Okay, so there is testing the opening price. This is actually a little area of resistance at 148.50, but this is not where I want to take it, man. I don't know if I should take it there. I feel like this is the area. Here. And here. So I think what we could get here is a failure to communicate. No. Oh no, I'm sorry to hear that. I'm sorry to hear that, man. I'm sorry. I really am. I'm sorry to hear that. I'm sorry to hear that. I hope you get well, man. Feed your body the fuel that it needs to try to help itself take care of itself. Electrolytes, vitamin C. I'm not a doctor, but stay hydrated. I'm sorry to hear that, though, man. All right. I knew it. She's going to pull back here, and she may put in a double bottom, right? So the trade may not be ready yet. All right. It's not just going to do it in a straight line. It's going to bounce around. So I think AMD has a minute. 149, 150. All right. This is what we want to see. But, guys, yeah, Tesla 225. Shit. So now it's pulling the trade line back up with it. Damn it. Let's see if we can get a Tesla trade on. It's already down 3%. 228. You guys can see here that it's bouncing off of that level. So if it gives me 229, which I'm curious if it will or not. VWAP is not anchored down that well. Yeah, give me this level here, 229, and see if we can take the short on Tesla.
this morning as a number of mega cap
This is
names
ridiculous.
more in the state of Texas later
This
this
is so
month.
ridiculous,
And
man.
then Home under pressure after revenue and
Fuck.
profit came in lower than a year ago, though the company's management did sound optimistic about demand this year. But I think the top story we've got to be talking about up front, Carl, is inflation. And the takeaway is a little hotter than expected. And if you look at the annual inflation rates, they're higher than the Fed wants it to be, and they're higher than the 2%. So I'll just review the two top line numbers. 3.4% is the annual inflation, headline inflation rate.
You can see there, they're coming in, they're bumping up into resistance. So see if we can get this around 120. That'll give us a nice low of 86, high of 180.
Why did it come in a little bit hotter? Why were prices rising a little more this month than we thought? Well,
Bounce it back, please, Tesla. Please.
It's been stubborn and it's been a problem. Apparel ticked up a little bit on the month. Medical care costs were a little bit higher. Airfares.
I know you guys can hear that on my phone. It's just.
Which might be helping those stocks. And then the other one I'll just throw at you is the
All right, so yields did pop. We could look at look, fucking EMPH, man. I'm missing all these trades. I blame it on me not getting up early enough. Well, I was up. Let me rephrase that. I was up and I fell back asleep. I was up at like 4:30, 5 o'clock this morning, and I ended up falling back asleep. And I cut my alarm off. All right, no excuses, no excuses. So that's a nice test of that level. It's pulling back. It's got room. It's got room. It's down 4% already. That trade's done with. Come on, man. I gotta find something here. This is bullshit. What time is it? It's fucking 10 o'clock. Let's go. I gotta get into something. So semis are kind of just hanging out. All right. I'm looking for that bounce back on AMD.
Coming up at 10:30, natural gas storage, a draw of 14 BCF.
All right, Tesla trade's not happening, guys. I apologize. If you guys were able to take it, that's good. But, unless it gives me a bounce back, it's not giving me what I'm looking for. That's all it is. Yeah. Well, I get it. Yeah, I wouldn't either. You got to take care of yourself. Yeah, you can't just. I don't blame you there, buddy. I don't blame you there. So here's the S&P's pulling right into 470 what? 475. 475. Should become support here. Let's look at the strong names. If the SPY's going to hold, what's been the leaders? All right, well, looks like they're selling here. Looks like they are selling here. All right, guys, so 475 flat. If you can get another test there, is where I would look to see if you can get a pullback in the S&Ps. She's fucking killing me, man. Abby, you're killing me, girl. Why? You have everything you need. You're not hurting. You're not sick. You're not feeling well. And look at the SPY. Look, there it went. Shit. So she's just spoiled. She's just a little spoiled ass. That's why. What is going on here? This is crazy, guys. This is crazy.
on a sustained basis.
Holy shit. Look, you just cracked that level and bang. Look at the extension it gave you.
There's no sharp reaction.
What the fuck?
Trading
Huh?
off of sort of consensus kind of
You just went $1 in less than a minute there. You just pulled back. Like, look at that. That's insane. Look at that. 1, 2. You just boop, boop, boop. It felt like guys. It's Thursday. It felt like one of those days. God, fucking damn it, man. Excuse my language. I'm going to be mad today. All right. What I'm going to do is this matches up with the 90 and 90 EMA right here. 475 entry, if I can get it. All right. I'll make it a dotted line. Bang. So we hit bang, bang. Fuck.
And then housing picks up a little bit, right? These mortgage rates have come down. CFO KB Home, listen to how he describes the market.
If the recent favorable economic trend continues through the spring selling season and beyond, we believe there is upside to our full-year estimate as further declines in mortgage interest rates, combined with the pent-up demand for housing and continued tight retail inventory conditions, would provide an opportunity to reduce homebuyer concessions.
Sounding very optimistic on the
Is it not going to give me 475?
let's bring in senior markets
It's a lot of volume there.
into the conversation. Market reaction
Which is right there at that low of day yesterday.
taking a leg lower here.
Back off a little bit after 10 a.m. I mean, the big question, I think, tactically has been were the mega cap idiots.
We're going to need some serious volume if this is going to hold and take us higher. We're going to need some serious volume off this level. I think you're going to see 473. I want to be able to get a bounce back. It's not going to give it to me. It's not going to give it to me. It's not going to give it to us. So it is what it is. You know, sometimes it's like that. Sometimes you just gotta realize you missed a trade and you gotta be ahead of it. So if the market's pulling back, what could we look at? Maybe Microsoft, right? Well, I'm still on Google. So what's Google doing?
Really, I totally disagree. This is a market that is addicted
Google is green.
to craving lower rates.
So where are rates now versus where we were at the low?
We were 5% at the 10-year.
I want to see us get
That's right.
to. Why is this on a 1 minute?
The Fed necessarily. I think it's addicted to let's make sure yields don't go to the moon.
So what I would plan on doing is, if this market you start to, it's not gonna fucking bounce. It's just pulling back further and further, guys.
Because the Fed Fund futures has a view expressed at this point. So I think that good news is always ultimately good news and vice versa for the economy and the markets. So I think that's the fix we're in right now because we're not getting.
473 is where I'm looking at the SPY.
Market still seems like it's in one of these routine payback phases.
Oh God, there's so much anger in here. You guys just don't even know. You guys have no fucking clue. You have no clue.
Totally compatible with the market being able to deal with that. The stock market being able to deal with that historically.
It's all good.
And I did see some of the work.
It's all good.
Reaction to the CPI. If you translate it into PCE terms, it's not as scary. Morgan Stanley basically saying, if you look at how the PCE counts things, shelter.
All right, so what are we looking at? Tesla was already falling out of the sky.
Direction that we need to go.
Tesla's falling out of the sky. We missed. I wasn't able to get that trade.
Story in hand, and then the burden of proof is on the.
You know, again, I need the bounce backs.
Whereas we still want to make sure the economy.
Mara putting in a double bottom.
Yeah, and separate from the last 30 minutes notwithstanding, a lot of the desk commentary this morning talked about long-only demand.
So here is
10 days.
Mars pulled back to yesterday's close, but
That's exactly what it
feels like Mara's got a bit more downside. So if you get a bounce on Mara to like, which it's
is. Credit spreads say no. The volatility
kind of there now.
not. Hoopla over a Bitcoin ETF.
I may try. Let me see this real quick.
But at this point, I don't think
Is Apple still fall?
at the moment. And again, the last couple of days we've had an internal correction. The small caps relative to the Nasdaq have
Oh my god, all I wanted was a fucking bounce. All I was wanting was a bounce on Apple. That's it. I couldn't even get a bounce on Apple.
getting a little more defensive, at least in the very short term, while we absorb what's probably a routine pullback.
So you still think the bigger risk to the market is weaker economic data than stickier inflation?
I don't think a bull market ends because the economy's better than we thought and the Fed just can't cut as quickly. That to me is not the formula. After we've had no IPOs for 2 years, after we've kind of had a reset.
Alright, so what's going to happen here is you're going to start getting people to try to buy the dip and it's going to bounce and they're going to get screwed. Now's about that time. These are these trend days, okay? These trending days that just go all day to the downside. And I said it this morning. Alright, so you may get people that get that may try to get short at the bottom and it goes higher and then they exit and then it just you on the pullback and then it continues back down to the downside. I need to use the restroom.
No, don't think so. It was a noisy print. We got another disappointment on homeowners equivalent rent. Still not telling us what the real world is telling us. But in general, I think it's just noisy and the underlying.
I'm going to let this market do what it needs to do. I'm going to get a cup of coffee. I'll be right back. All right, guys. So let me get my charger.
This puts up the time where the market goes next.
You got to be smart, right? You got how many people do you think just got their asses handed to them because they went long there or went short and it ripped back up in their face? All right, so this is what I'm talking about. You got to know how these trend days go. You got to know what you're doing. You got to know how these days go. Sorry to drink in front of the mic. All right, let's go look at the SPY. I am going to get a position on. So here we go. On the SPY, 375. Come on, man. Shit's fucking freeze. Like, I'm having a difficult morning today for some reason. I really am. But that's okay. We're going to keep it. I don't know if it's going to give that to me. I mean, just like things are moving really slow and here we go. So this would be a nice entry on the S&Ps if it's going to give you that continuation. All right, right there. Bada bing, bada boom. The trade line's a little bit higher, so it may pull back and then bounce on the SPY.
Congratulations, Tamara. You made it. You're watching the trading just like I am. I wonder how you could characterize the initial trading. I'm looking. Looks like
All right, so
I think you're the volume leader.
I know. You guys hear her yelling at me? She's just fucking yelling at me. Like, she has everything she needs. She's just yelling at me this morning. All right. All right, so I'm going to look at the SPY real quick and grab, let's see here. Tomorrow, let's look tomorrow. I want to actually look for tomorrow's. Okay, cool. Let me double check that I'm doing the right thing here. Capital preservation. Okay, live by it. I know, it just stopped. 472. I'm at 474. I'm looking for a 473. I'm looking to see if we can't get back down to 473. 473, hell, even 470. All right, so what I would look for on the S&Ps, the volume's getting pretty nice here as far as to the upside.
How investors are going to use Bitcoin ETFs.
Yeah, I think the important thing here is the first 45 minutes was very impressive trading. The next big question all the viewers want to know is, and the investors want to know,
all right, so she's still going.
big institutions, do they change their position? Do, for example,
Let's look at Tesla.
financial advisors,
Okay, so Tesla popped back up.
Gensler, the head of the SEC, admitted defeat yesterday and changed his position, but then also said, we want to remind everybody that anybody recommending these products have certain fiduciary obligations. He referenced regulation best interest there. Do you think institutions are going to more widely adopt this product now that it's in this particular
You know, and it's funny that we're bringing up the IWM because it was clearly showing us, you know, a lack of strength with, you know, diverging from the rest of the market.
Access to Bitcoin through an ETF wrapper. There are other wrappers that they might want for different reasons, and so I really think this is going to be a wide.
So if Apple can give us that bounce to 185, that's what I'm still looking for. If Apple's not at 185, I'm not getting short.
Who are you marketing this ETF towards, and what are you?
And honestly, I was hoping to be able to catch the, you know, to get it higher up, but It is, sometimes it is what it is. You know, it just does, sometimes it doesn't work like that.
The characteristics of the wrapper, the convenience of the wrapper. And of course, to your point, it's our expectation that investors will look not just at the wrapper, but also at the underlying, as they do for ETFs of all types, and consider the volatility and the volatility characteristics in figuring out what's the right fit for this alongside any other.
Does anyone have any questions? Does anyone have any stocks that they're looking at?
Some investors,
Say
is they
the Echo
want to
Romeo
see
Alpha,
their
SCRA.
portfolio of risk, and they want to see it in one place. And so one of the things that
So here's Boeing bouncing back. This market's tricky, man. Think about, guys, think about all the people that were impatient. You know, I would much rather be frustrated and not have, you know, gotten into a trade and gotten irritable with it and either lost money or something, and not be the person, instead of being the person that got into a trade, market bounces, and now they're selling for a loss, and now they're frustrated because they lost money. I'm frustrated. I haven't lost money. This is what separates a real trader from somebody that is just failing and failing and failing. It doesn't know what the fuck they're doing, right? Especially if they don't understand, they're going to need to make more when they're right than what they lose when they're wrong. All right, that's the biggest secret, okay? And it's not a secret. You just have to understand how to go into the markets, like with your position size. How do you position for to capitalize when so you're not, you know, you have to understand how to trade the market so that you are going to make more when you're right than when you're wrong, than when you lose when you're wrong. All right, you know, it's tricky to say. So Microsoft MSFT. All right, so we got that. It's making a bit of a recovery here. And we said we were looking for, what did I say? We were looking for Microsoft to start to make a new high.
That's a big difference. There's a lot of sticky money at Grayscale right now, and they're relying on that. I wouldn't be surprised if something changed on that particular.
Why are they all moving in different directions right now? Shouldn't they be tracking Bitcoin higher?
You know, I'm going to give this a day.
Just like that, Microsoft's oversold.
This one is down 1.5%. Bitcoin's up 2.5%.
I want to ask.
If I'm looking for a long, that long's got to be Google instead of Microsoft. I got to be honest.
House Republicans to bring charges that they say typically wouldn't be brought. They're only being brought, as they argue, because of his last name.
Carol Hunter was previously
CNBC. So what I'm doing here, man, this thing is just oversold. It can remain oversold, but it's just very hard to try and.
I'm not waiting. If it's COVID, Paxlovid.
If it's COVID, Paxlovid. If it's COVID, Paxlovid. If it's COVID, Paxlovid. Just sorry, I'm just repeating what's on the TV. Just being an idiot. Just checking out the Baker Hughes word count. It's an inside joke. It's an inside joke for you. You know. We're going to put it in double top. What do you guys think? Type in the chat. You think along Google, it is green and the market is green. Right? No, down 0.3%. And it's coming up into resistance right now.
Ask your doctor today.
The volume, guys, on the SPY is just like, this is what real volume looks like, and it looks like we're let's see, 5-minute chart, 27. We got like 3 minutes here, and I feel like it's getting ready to dictate what's gonna go down. All right, I think you're gonna get a little pop on the S&Ps. You know what? I might as well just do this. I might as well just put a hedge on. Let's go down here. Boom. 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 All right. So let's go see what's going on today. A lot of red. A lot of red. Just got your strong names. Meta, Google, Microsoft. I wouldn't even put Amazon in there. I mean, I get it's starting to. It was a little behind, but you know, you Amazon should be in there. All right, Amazon should be in there. It is kind of strong as well, but um, really, it's Meta, Microsoft, and Google. Honestly. All right, so SPY. That's what we're going for. All right, SPY. All right, SPY. I'm gonna go take a short here. All right, I'm gonna try to get it for tomorrow. They're just the volatility and the VIX. If you guys don't look at the VIX, go look at the VIX. It's gonna be the price of your options contracts. Look at the VIX. Pop it off. Get ready to come up into support or resistance. Really, the resistance is up here, but prior support. All right, it's pulled back, so now's the time. Bada bing, bada boom. Let's go for a tomorrow. You know what? I'm going to do a little 470. I don't like that. The fucking delta is the same as the option. I don't like that. Shit. What? No, it isn't. I'm sorry. No, it isn't. All right, give me... I want... 472. Give me a 472. That's what I'm going to go for. All right, I'm going to take some 472 puts for tomorrow. We could look at today as well.
Natural gas. Larger draw than expected. Natural gas futures up more than 2% now. Is optimistic, or they wouldn't be able to do their job.
I mean, yes.
Let me be patient. So what I'm saying is right here at 475. All right, 475.35.
Or the inflation problem that's still out there. It's not like
This thing could still bounce a bit. And watch, because it could just pull back and hold 474.49. So be careful. Make sure you enter correctly. All right, try to get the best entry. There's a nice pop on low volume. Bang. There she goes, right? There she goes. Let's go. Let's go. Right there. Bang. Let's go. 470. No. 472. Shit. It's going to pull back, I think.
so that's still a bigger
Oh.
concern
No.
demand fall off.
72. Bang. Keep going. Keep going. Please keep going. Please keep going. Please keep going. Please keep going. Look at her go, guys. Look at her go.
Academia, I'm worried about think tanks, I'm worried about a couple of really well-funded foundations that are coming out.
Dude, watch out. If she keeps going, you may get a whole lot of volume to come in here.
On the right who don't talk about being pro-business anymore or pro-growth. I mean, what's the opposite of free markets? Is that really what people are?
All right, I'm in tomorrow's 472.
Ideological driven agenda in the
Tomorrow's 472 put. I'm just going to manage this.
American security. It's about advancing political agendas through these really political
Wait.
agendas, and it's a problem.
Yeah.
Although some
I should have looked at AMD.
industrial policy, some argue that it involves national security. I mean, reshoring chip production, which
It's
is
trying to hold there.
bunch of grants and picking winners and losers, but some argue that the intent is to
You know what? That's not a good idea.
in our supply chain. Does that make sense?
I took some off here.
Look, what I'm talking about
Wait, what the hell happened? Hold on.
seeing in competition in markets.
Yeah, I got 6 cents a share there because it's going to pull back. Here's what I'm thinking, guys.
It's not that there isn't a role for
All right, notice how there's low volume.
there isn't a role for government.
That was acting on. It's a scalp. It's a scalp. All right, right back into that dotted line. You could take a long here. What I would look for is a test the highs a day again. I'm going to be honest. See if you can get that 477.24 area, yesterday's high. Like, that's what I would look for. Unless we're going to solidify this as the resistance level. All right.
To an agency is, and when that authority is overreached, when they're moving into places that
Let's
do
see.
not
Let's see.
have
Let's see.
the
Let's see.
authority
Let's
to work,
see.
that we have to challenge
It's a
them
nice
before we
rejection.
constrain their impact
It's a nice rejection off of that pivot low from yesterday. I mean, the volume is obviously to the downside. The volume is obviously to, look, they're already 64 cents now. If you're not taking profits on 70, all right, damn near 70 cents on those that we got in at 50 cents. All right, 50 cents to 70 is like 18, 20% ish. Take some off. I mean, it's borderline 25%. I'm sorry. 75 cents on 50 cents is almost 50%. Just like that. It's been 2 minutes and you're almost up 50%. Take some off. If you took them. All right? Think about that. There were some things that happened yesterday that I didn't say on the stream. Not like with me or my account or anything. It was more so the markets. Look, and then it breaks. Look at that, guys. What an entry. What an entry. That was tomorrow's 472s. Tomorrow's 472s. So she broke there. That was beautiful. That was beautiful. And this is what I said. What did I say? Look for that bounce up on a trend day like today. People are going to be like, oh shit, I got to get short because it's at the bottom. It's just going to keep going and going and going and going. And you catch that bounce. And they get short, they take it as a loss, and then it bounces back, and then they sell, and then it just goes right back. But even then, you still don't understand that when the market bounces and then they sell, and then when the market moves back in that direction, if they're trading options, and especially if they're trading the wrong options, they're barely even going to be up, if not break even. Now, depending the speed in which it does move back into that direction is what matters. But just getting that spot on entry right there. I sold a bit too soon because I started to think that we were going to hold this level. All right, because now I'm starting to think that I wanted to show me a little bit more. I'm starting to think that we're going to get ourselves back up to the the actual resistance level, which is 47750. Okay? That doesn't mean I'm taking a long here. Doesn't mean I'm taking a long. I'm sorry, guys. Let me do this. Let me do this. And let me do this. Because I need to see without the... I need to see... Let's see here. So... I need to get my other monitor up and going so that I can start trading on my computer, because this phone shit's getting old. All right, yeah, we are so overbought on the stochastics on the hourly. So that is a nice. See, this is why I should have looked at this. That's a nice area right here at like we said, 475 to become resistance. 475 to become resistance is a nice area. Why can't I move it? So let me take you guys to what I'm seeing. Okay. Look at that. Right here. Right there. All right. Came right up. Wicked it. Now where are we going? I got to say we're going to 472.50, guys. I would look for 472.50. I would look for 472.50 as the area we're headed to. That's where I'm thinking the SPY is going back to, 472.50. So if we're able to get a bounce back to 476, 475, if it gives it to us, okay, if the SPY can give us that 475, I'm going to look to get short and see if we can't get back down here to 472. All right, 472 is the level I'm looking for to see if I can't get another long opportunity. Looks like we're it looks like we're having a hard time here right now. So it just looks like an area that we haven't made support, but it was resistance. All right. 472.50, I guess it would be. Let me see here. Yeah, like 472.50, guys. I'm sorry, 472.50. It's like right here. Right in this area. So that's my game plan for anybody that's here. If we are able to get ourselves back up to, I mean, this is somewhat resistance level right here. Now that I'm looking, 475. What am I doing wrong here? Okay, so resistance, support, support, support. We break it. Resistance. Come up, we break. We fall back below it. Yes, right here. 476. That's what we want. That's what I'm looking for. All right, guys, that's my final plan. Final answer, 476, 475.50 to the short side. My final answer. Give me that pop. Pop, 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 pop. Come on. That's my plan. Does anybody have any questions about that? Does anyone have any questions? If I have to pay up for it, I'm okay with it. It's all right. I'm all right with it. I'll pay up a little bit. And I'm not going to cry and whine. And look, what do you have right here on the 15-minute chart? All right, 15-minute chart. Dude, we bottom ticked those options, bro, at 50 cents. We bottom ticked them shits. All right. Looks like we're struggling a bit. Give me that VWAP. Give me a fucking test of VWAP, please. Give me a test of VWAP in this on. It's on. I don't have my watch on today. I don't. Come on, don't do it to me. Just pop right now. VWAP. They're going to get ahead of it. God damn it. Okay, there's a 9 EMA on the 3-minute. It's all good. God dang it. All right. I'm feeling like that's it. All right. Let's see here. So keep an eye on Tesla down about 3% right now. Sarah, I'll send things back downtown to you folks. I'm still sticking to my plan, and that's going to be VWAP. If we can get up to VWAP, I want to see if I can get short up there at VWAP. It just feels like we're struggling where we're at right now. Feels like the SPY is having a hard time right now. All right.
We have a new home. What's next? We have a garage door that doesn't lift, and we have a gate.
Dude, these options go up so quick. So quick. So did you guys see why I brought up the VIX? Because the VIX really kind of showed you, if we could get some likes up, that would be awesome, man. That'd be awesome if we could get some likes up. So the VIX, if you guys have any friends or anything, or just share it, that would be cool if you guys share it. So if the VIX can pull back to this support level here at 1206, okay, 1206 on the VIX. And again, you guys can get exposure to the VIX as well. You could UVXY, you know, double, triple leverage ETFs, that maybe that's what I need to kind of think about. All right. And there's also the mathematical equation to using triple leveraged ETFs. And like, there's so much. I think, I don't know if some of you guys know some of these techniques that I want to get out to you guys. All right. So we're coming into, no, we turned it into support now. We broke it, pulled back to it. Let's see here. All right, 15-minute chart. We pulled back to it. Man, if it could just give us a pullback to 1260, I think that's where things get offset and things take off. See, that's the level there. Okay, so it's kind of getting below that level. This is the other level I'm looking at, right where it dropped into, right there. If we can pull it back in, I think we start to see a lot of buyers to the VIX, and we can get the SPY to try to get that entry. You know, all we can do is try. All we can do is try. It may not give it to us. Man, I think the SPY could pop. And it's trying to. Come on, pop. Come on, SPY. You can do it. Give us VWAP. Give us VWAP. You can do it. We're almost there. It's consolidating, guys. See, it's consolidating on low volume. Okay. See if it pops here. See right here. See if it pops. See if it pops to the upside. Come on. All right. I would look for, I wouldn't mind a scalp there long to VWAP. That's what I would be thinking right now. My stop is pretty damn clear. Boop. And then reject. It's going to fall. It's going to reject it. This is the resistance. This is a resistance level right there now. And it's trying to hold it as support.
You make an interesting point about sort of this lock-in effect that we're seeing regarding rates and how we.
Let's see what old Twitter has to say today. I wonder if they're all looking at the Baker Hughes rig count at all or not. Sorry, that's just an inside joke. Have the makings of a down all-day type day trade. That's exactly what I said. That's exactly what I said. It's my guy there. Let's see. All right.
Is that they spent much of last year while the Fed was raising rates and mortgage rates were shooting higher.
Value point of control.
Because of this inventory problem.
I think it can work.
Is it harder to pinpoint the right valuation now that activity and rates are coming down and activity is going up? Because that backdrop is one of strength.
It's a great question. And look, I think that there's
Come on, man. She just has no. It just doesn't have it. You can sense there that it has no strength. I may have to try to pay up for these options. Or, oh, man. We had such great volume there for a little bit.
Are you expecting existing supply to come on?
I don't like that volatility. I got to get tomorrow's.
It's the big question. We're modeling officially existing home sales increasing about 5% year over year. I think it's important to keep in mind that 80% of mortgages are struck at 5% or below, 60% or 4% or below. So I think
come on, pop. There it goes. Come on. You can do it. You can do it. Don't be scared. You'll be all right. Just go higher. Just go higher, then we'll go lower. So sometimes, you know, I don't know if you guys have heard like gardening and like farming and stuff like that. You got to talk to your plants. So there was a study they said, listen, they said, not me. Look, it's trying to turn it into resistance. Shit. All right. Let's see here. Let's go. Oh, look, we might get our opportunity on Apple. Big banks take little bank.
Is there more room to run here? We're going to get you ready for earnings tomorrow from Bank of America, JP Morgan, and Citigroup. Stay
Market could wait for that as well, guys. Market could be waiting for these banks and earnings to kick off.
I'm genetically predisposed, so we created Nutrafol. Nutrafol is the #1 dermatologist recommended hair growth supplement. It's never too late to improve.
So what I'm going to look for is the IWM
.com/man.
to see where she's at. Look, it's already started to pull itself back and grab support.
This thing, it's making you get an ice bath again.
What do you mean? The straps are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery. And you are? I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100.
So what I'm doing right now is I'm looking at the overall indexes to see where they are, right? And it's going to give me an idea on sectors. Okay, like the Dow right now, looking like it could hold this area, tries to go to the upside. Let's go look at the Qs. All right, the Qs. What are the Qs doing? All right, Qs are pulling back now. Qs are breaking, so is it going to hold? Doesn't look like it. Come on, come on, come on. And the SPY should be right behind it. Or it's right in front of it. You see how the SPY's bouncing? All right, see how the SPY's bouncing right there? Go to the Qs. And the Qs are bouncing. So they're like tied up right now. Things are tied up.
Closing bell overtime. Weekdays 4 Eastern, CNBC.
If your child has diabetes, you'll want the most accurate CGM.
IWM, there might be a long here.
On and he's off.
I may think about a long on the IWM here. If it can hold this level. I don't know how well it'll pay or not pay. That's another option here that we have to see if this level holds. That's a bear flag, false breakout. Look, it's gonna. It may break down, guys. It may break down. It may break down. If it holds, that'd be really cool. And why do I expect it to hold? Because I would like another test, a bounce to VWAP. That's all. And that would be, you know, on a longer term trend, a lower high. It doesn't have to do anything, I say, though. But that's what I would like to see, and I think it could. I think she could. It's going to try hard to wick people out of this name.
Tomorrow morning is set to be a busy one. Results out of Bank of America, JP Morgan, Wells Fargo, and Citigroup.
Shit, I forgot about Citigroup. So Citigroup got to the 5120 target. See if Citigroup pulls back here. I don't know if this stock is really spready or not. I'm sure it is. But that's a nice rejection here off the morning lows. So if anybody's looking for a short, you know, do your analysis on Citigroup. This might be a good option here. Might be. Just watch for the double bottom and then works its way back up here. And then the 5280 short. 5280, 53 short. Okay. Let's go to Baba. Just to look at some of these stupid ass ADRs. Some of these Baker Hugh rig counts. Alright, Baba. Alright, let's go to AMD. So AMD is pulling itself back here. AMD is at 1.75% right now. The volume on AMD is very low. You guys notice that? I didn't notice that when I first was looking at it. The volume is very low. Which is good. If it pulls back on low volume, that's what you want to see for a hold and an extension higher. Oh my gosh. It's going to break down. It's going to break down. Shit.
With the interest rate stabilization, they started to talk about green shoots a little bit last year, but then rates kind of backed up a little more, and then they calmed down that excitement.
I don't know why I'm looking at NVIDIA.
Yeah, I think that will be really important.
All right, Google. So Google's breaking down. It just went red.
To capital markets, and a resurgence there is being
All right, so things are starting to break down now.
banks that are
Microsoft.
exposed to investment banking, exposed to trading, exposed to IPO and debt issuance, and
Microsoft. Trying to think of some of these names we were watching.
revenue capabilities, as opposed to just the prospect of potential deals that may.
And again, all this is since. Think about what happened. Think about what happened, guys. The markets bounced. Thank you so much for the likes. I appreciate every single one of you guys and girls. The market bounced, right? Google, Microsoft, Apple. Look at this run on Apple. We were long this thing. I wish I got in a little bit sooner and lower, but what's going on right now? So it's not surprising that we're getting a pullback. For 3 days, we have just done nothing but rip. All right, I missed this entry below. 1, 2, 3, and now it's just time for a pullback. Apple can get back to 183, no problem. That doesn't mean that we don't extend the trend into next week or whatever, or start to pull it back. But this to me is more so just a pullback off the rally and a bit of a give back for the past 3 days. What are some of the names I was looking at? Disney, GLD. Just Disney does not want to fucking do anything for us. Excuse my language. Just does not want to give us any follow through. Just like Boeing. All right, let's look at Mara. So did Mara already pull back into that level? Are you kidding me? All right, Mara pulled into that support, guys. So, oh shit. Look at that volume. God damn. This could be a rejection here. Could be trying to reject here, but this is a support area right here.
It's just a reference price that people are using. Give it a few days, then we'll start talking about how well all of these
wow.
are tracking against Bitcoin, guys.
So
wow.
We saw this incredible run up in the price of Bitcoin itself in anticipation of these ETFs getting approved, which would drive more demand for Bitcoin.
Just the volume, the sell volume on that is pretty crazy.
ETFs when they're created, and what happens with the underlying asset, and how much room it can run up just because of the increased demand and accessibility.
I'm totally neutral on the question of where Bitcoin goes, but there is a very clear effect that goes on here. It's called an inclusion effect, and it happens with stocks, and it happens here. When people anticipate something is going to happen and it's going to be good, they buy ahead of the time. So we saw Bitcoin run up from, what, 30,000 to 45,000? As soon as BlackRock got interest in June, was reported last year, price started moving up. I wouldn't be surprised to move it sideways.
All right, so let's look at Tesla. Tesla's still just crashing. Tesla's still just getting dumped, which is okay. It's a nice little double bottom on Tesla. Boop, boop. I doubt that it recovers. It's got to hold 227. Did it do it? Did it get 226? I would hope that you would start to see a bunch of buyers step in here. But I'm not sure if you're going to.
IBM Vice Chair, former NEC Director, former Goldman Sachs CEO Gary Cohen's with us when Money Movers begins in a couple of minutes.
Alright. What ideas do we have? Let me see. GLD's holding. Let's look at Meta. Meta, MSFT. And now I'm looking at solar names because of yields. All right, looking at those names because of yields.
So I went on Angie. It took me just a handful of minutes. So vendors, you were knowledgeable. They did higher quality work. They wanted us to be happy with the work done as well. It is a beautiful garage, I have to say.
Get started today at Angie.com.
Let new age products transform your garage into an area of your home you can be proud of.
What do we have? All right, what news do we have today? Citigroup, Lyft. Oh, Oxy. So they bought again. Go figure. Did we start walking Oxy back up to 58.50?
I thought my prescription was covered until it wasn't, but GoodRx helps with that.
I think it needs a pullback first, and then we can.
And I still check GoodRx.
I'm on Medicare. I check GoodRx because it can beat my copay. Who wouldn't like that?
Even if you have insurance, GoodRx can help you save.
Okay, we'll see you next time.
Another good reason to check GoodRx.
I seen that Chewy news. And then Salesforce.
A force to be reckoned with. No, not easy. Your business bank account
Salesforce.
earns 5% APY.
5% APY? That's new.
Yep, that's how you business differently.
I have not traded CRM in quite some time.
Moments that matter, but you can invest in them. At T. Rowe Price, our strategic investing approach can help you build the
Looks like it's struggling here.
T. Rowe Price. Invest with confidence.
Tomorrow, Kramerica's got playoff fever. Jim's bringing Mad Money to Kansas City for the game. Tomorrow, 6 Eastern, CNBC. And don't miss the Dolphins versus
Looks like she's struggling.
Saturday, 8 Eastern at
266.
Visit peacocktv.com.
266. 266. Doesn't even really have.
MSFT, Microsoft unveils new generative AI.
MSFT.
Trust shopper journey.
Come on here. Come on here. Come on here.
Microsoft Cloud for Retail. That's Michael Sandy. Tango. MSFT.
So we said what? 382? 382 long?
Plus, Wisdom Tree CEO
Not sure if anybody's here or not. I think it was 382 long here. That was the level we were watching. Alright, let's see Spy. Spy's still trying to hang on a bit. She's trying. She is trying to hold on.
what's happening with the markets. A little bit weaker this morning. S&P's down 0.5%. We've basically been sitting here over the last hour. Only sector that's higher right now is energy. Everybody else is getting hit. Technology was
We're coming right into earnings. So
lower, and so has
see if
I'm still tracking for an up week, 2.5% for the week.
I want to see if we could get a bit of a bounce here. I gotta fix my phone. Alright, so here's Microsoft coming right into that level.
A little bit of a reversal on the Treasury side. 10-year yield sits above 4%, but has been a little buying after post-CPI selling. We're going to talk all about that report, and that tops the tape for us. The slightly hotter than expected CPI report coming out this morning, along with sector that's higher else is getting hit. Technology was higher, but it looks like it's turned lower, and so has the NASDAQ. It's still tracking for an up week, 2.5% for the week. For the S&P, we're up almost, let's say, 1.28%. Treasuries are part of the story, although we've seen a little bit of a reversal on the Treasury side. 10-year yield sits above 4%, but has been a little buying after post-CPI selling. We're going to talk all about that report, and that tops the tape for us. The slightly hotter than expected CPI report coming out this morning, along with an initial jobless claims print that continues to show a strong labor market. Here's the early reaction. Bank of America just out with a note saying, quote, "We maintain our call for the first cut in March." Fitch saying this gives the Fed caution and unlikely to cut as quickly as the market expects. UBS adds current pricing of a 70% chance of a March cut may be too optimistic. A lot of disagreement there. Just in the last hour, former PIMCO economist Paul McCulley telling us the next move is a cut. Let's bring in CNBC senior markets commentator Mike Santoli. Does it matter whether the first move is in March or is in May or is later if the next move is a cut for the markets?
I don't think it matters tremendously, Sarah. And it's interesting because it does seem like a lot of disagreement there in all those reactions, although it's mostly a matter of emphasis. I mean, you could say that the market's ahead of itself, thinking that there's going to be 100 basis points plus of cuts in the next year, starting in March. But you could also say the next move is lower, and in general, things are moving in the same direction. I think we have to keep in mind a couple things. One, the market is taking this largely in stride today, in part because no Fed officials have been out there saying, you know what, we won. We defeated inflation. It's all over. Don't expect us to have any sort of stutter steps on the way to 2%. Everyone knows it could get sticky along the way. The other piece of it is the Fed funds rate's above 5.25 right now. And you're talking about inflation in the 3s, headed probably for the 2s on the PCE before too long. There's 2 months till the March meeting. A lot can happen in there. And I think for the stock market, most of what matters is the Fed told you late last year they no longer feel like they have to completely kneecap the economy to get the job done on inflation. So inflation's coming down faster than the economy is buckling. In general, we can make our peace with that.
I think it kind of matters whether it's in March because those who are expecting the first cut in March are expecting more cuts this year, which
Right.
ultimately would be better for stocks.
It's not necessarily obvious to me that the maximum number of plausible cuts is the best scenario for stocks. At this point, I mean, if you want to talk about the 1995 scenario I keep going back to, which is the idealized version of the soft landing, the Fed just kind of trimmed around the edges. I think they cut it once or twice. They were spaced out. It was not a major easing cycle because the economy didn't seem to need it. So to me, that's the more ideal scenario for equities. Maybe a lot to wish for, but that's more ideal than we're rushing to get down to, under 4% Fed funds by the end of the year.
Finally, Mike, on a day where we're getting some cautionary notes from the likes of Citi about the low-end consumer, still a lot of discussion about what real wage growth is looking like year on year. And I wonder if you think that's going to neutralize some of those concerns about delinquencies and so forth.
I think it's in aggregate, I think the muddle through scenario is still okay, that the total picture for all spending and the median consumer still seems positive. And, it's somewhat of a familiar environment where you do see a little bit of weakness in pockets of the economy. You have a delinquency cycle without a doubt. And yet, you know what struck me yesterday? One of the 52-week highs was One Main Holdings, which is the old Citigroup unit that is basically Main Street personal lending, and it's somewhat at the lower end. So it's a weird flux kind of a moment where all those stocks ramped at the end of last year because we thought it wasn't going to be as bad, and now we have to sort of wonder about what's in the models already in terms of weakness. I did note that Citi report said that the bottom 10% of income households are responsible for 20% of overall spending. So it's material, but it's not decisive.
Mike, thank you. Mike Santoli with the S&P down now.
All right, fam. What's ES doing here? ES is trying to hold this pivot low. All right, we're trying to hold this area here on the ES. If we break, we have room, down here to 477. So, I personally, see, we've already tested that level. I want to see. Bounce. All right, so we should get a bounce here. Short term, what is this? The 5 minute? Yeah, or 15 minute. Wow, okay. All right, so longer term trend to the upside. What's going on here? What's going on here?
Like they started raising, they started with 25, and they saw that 25 wasn't working, and they moved quickly to 50s. I think you will see a couple, 2 or 3 25s this year. I think it's going to be a relatively sedate year for cuts. I think the curve's going to start to de-invert. I don't think the 10-year is moving. I think you're going to see, as Mike just said, Fed funds is over 5.25. If you get 75 basis points out of Fed funds, you're down to 4.5%.
Dude, sorry, like now.
10-year, we're still in an inverted curve. We've got a lot of work to de-invert this.
Okay. Good. I don't know what happened there.
I think it's baked into people's overall scenario that the front end is coming think the back end's coming down.
Sorry, I was just having issues
100-year plus average for 10 years is 4.6%. You take out the 70s, it's 4.
here.
It's 4.3%. We're used to having a 10-year rate in this country over 4%. This is what the normal economic trend looks like. We've just lived in a world for the last 15 years that we forgot what normal looks like.
So you think the curve uninverts, but we're not going to have a recession?
Yes, correct. The normal curve in the United States is a positively sloped curve.
All right, so this is working. Okay, so the stream is working.
There's a risk premium on borrowing. The U.S. government, even the U.S. government, should pay more for long data maturities than short data maturities. There's a risk premium.
All right, so it looks like ES is going to pull this thing back here.
And I think we're going to return back to positive.
Looks like we're going to get oversold, oversold, oversold. All right, then. So if that's the plan here, let's look at this retracement on futures. All right, we said the other day that, what was it, like from the low would be like a 50% retracement. I mean, right now we're at the 38.2 fib. That 50% retracement is probably like right here, right next to this pivot low. If I had to say, it'd be like 4767-ish for the 50% retracement. Let's see, 4777, which lines right up with, yeah, so that 50% mark goes right here, guys, with Tuesday's low, Tuesday's pivot low right here. So if we go to the SPY, looks like that's what's going to happen. It's getting ready to be 11 o'clock. We should get another extension to the downside. Shit. Sorry for the curse words, but Wednesday, Tuesday's pivot low, 471-ish. 471, 471, 471, 471. Let's do it. What do we got here for, get up on this shit. Man, we could get a bounce, though. I want to take it here, guys. I want to see if we get 474.50 bounce, and then we take the short. 471, 471, 471, 471, 471. All right, so there we go. Get your ass on up there to 474.50. That's a low, really low volume. Gotta perform. I 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 gotta perform. Gotta do better. I might start trading futures. I mean, I usually don't do it until there's like a special occasion, but I don't know. It just crossed my mind. What is this? 471, 470, 471, and what is this? This is 0.96.
So we keep compounding on the number. And I think it was pointed out on the show earlier this morning. If you look at the compound effect, pre-COVID to today, we're 20% higher. So that's what, when people talk about...
That's 1.75. That's definitely doable, guys.
So dissatisfied, they're looking
470.
what they buy, whether it's goods or services, they are compoundingly paying 20% more.
All right, so I am going to put this on. If we get, as soon as we get a bounce, which I think could be coming up very soon, I want to get short. I'm going to get my short on. I'm going to get my short on.
But then what do we make of charts that show household debt as a percentage of disposable income or GDP? All good-looking charts.
Oh, Carl Cantonia.
We threw an enormous amount of cash into people's pockets, and people had no ability to spend.
Carl's went off the deep end, man. I thought I liked Carl Quintanilla, and then he just kind of like changed. And it's not cool. It's not cool.
All of those you didn't commute. So all of those normal daily costs got wiped out, and it went into savings. So we built the
There she goes, guys.
not out of choice.
Fuck.
We were forced to save
That's what's going to happen. Sometimes just...
because they were still on payrolls, they were working from home, and the government was sending you
There she goes.
getting paid money. And
It was turning it into resistance, too.
I'm not criticizing, but a lot of people saved that money. You could see when you came out of COVID, the amount of savings and household balances has never been in that position. The savings rate in America, in the United States, had not been in that position in a very, very long time.
Gary, finally, quickly, would you be buying?
I'm telling you guys that where I think we're going is 471. That's where I think we're headed to. All right, I think we're headed to 471.
The whole approval process of Bitcoin.
This looks like a good area to catch a bounce.
What's really behind
This looks like a really good area to catch a bounce,
so interesting?
even though it's already kind of bounced back to those levels and turned it into resistance. Got to take a 471 on the bounces. I think that's where we're going. 471. 471. So let's look at the what were we in? 472s, guys, from 50 cents.
So now you've got an ETF that the underlying trades real time and settles real time. And you put that
Yeah, 472, 50 cent entry. They're $1.29 now. So that's
future when we get to real time settlement and real time trade
what, 140%,
that way on the stock exchange.
150%, because 100 from 150 would be 200%. So those options are up. Those options are up. I don't know, 175, like 160 ish, 175, something like that. I'd have to do the math. So if you guys were able to capture those, great job. Great job. Great job. Great job. So right down here, guys, is what I'm going to expect is a 15-minute trade line bounce. And see if we can catch that. We're not going to get 474, but in order to...
What about when they're not? That's why you need this. Call for Fisher's retirement survival kit, featuring your guide.
We're coming into it right now. Fuck.
Market outlook plus the Fisher investment difference. 3 indispensable guides.
I don't know. I hope somebody was able to take advantage of those. I did. I did. 50-cent entry to $1.39. I need to work on things. I messed myself up as far as getting it because I thought that I could get a better entry. But that apparently wasn't the case. Let's go look around the markets and see what we have here, like what's going on. I still think you have some room on the SPY.
You've got more options than you know. Look now.
From pep in their step to shine in their coats. When people switch their dog's food to the farmer's dog, the effects can seem like magic. But there's no magic involved. It's just smarter, healthier pet food. It's amazing what real food can do.
Davos 2024, your all-access.
It's not going to give it to me. I was just looking. You're going to get... Guys, you'll be at 50, 100 to 150. You guys will be at 200%. You get a test of 473 and a pullback off of 473. Those options should get you to around 200%. And it's not even 12 o'clock yet. If you're still in those.
Begins 6 Eastern Tuesday, CNBC.
I don't want these. I don't want these at all. I don't even know why I'm looking at dailies. I don't want dailies.
It's All American Roofing's winter sale. Install your new bathroom now and pay later with no payments and no interest until 2025, or get a free shower door with any shower.
I'm glad we went with All American. There's never any trial and error with those guys.
Food is my obsession. Cooking is my life.
And with hsn.com, it's never been easier to turn a boring dish into BAM. Discover online cooking demonstrations.
It's already gone. I was just trying right there to get in, and it just extended on me. Yeah, it's all good.
Explore, watch, and shop all of our top chefs at HSN.
You guys are really close to 200%. You get this bounce off of this rejection level, you guys will be at 200%.
Today, following that SEC approval overnight, and the competition is pretty fierce. There are 11 options for investors so far, with most issuers offering low fees to entice investors. Grayscale, though, is an outlier. The second largest player did cut their fees to 1.5 from 2 when converting their commodity trust to a spot ETF today, but that's much higher than the competition.
All right, I'll be right back. I gotta get something to munch on, something to drink, some water,
Investors should have choice, but
something.
GBTC is coming to market in a very differentiated way.
Following that SEC competition is pretty fierce. There are 11 options for investors so far, with most issuers offering low fees to entice investors. Grayscale, though, is an outlier. The second largest player did cut their fees to 1.5 from 2 when converting their commodity trust to a spot ETF today, but that's much higher than the competition. CEO Michael Sonnenschein spoke to Squawk Box earlier this morning.
Investors should have choice, but GBTC is coming to market in a very differentiated way. It is going to be, as of this morning, the second largest spot.
Be careful. Look at this volume that's starting to show up down here. All right, look at the volume that's starting to show up. All right, they're still buying the dip, so don't get it confused. It's going to be a down day, but chances are, you know, you think you're buying the low on a break and retest on 473, and that ain't what it is. All right, so
Just help investors understand what's important to think about on a day like this.
I do think this is an important milestone for the asset class. Like you said, 11 ETFs or ETPs coming to market on one day is actually historic for the ETF industry. You haven't seen this kind of level of competition on an exposure day one ever. I think that means that there are many firms that believe there's merit to the asset class and pent-up demand. So I think it's quite an important opportunity for the going forward period. It's taken a long time to get here.
Yes. Can you help viewers understand, or what should they be thinking when they see some of these intraday charts with some red arrows?
There's been when you think about crypto as an asset class, particularly Bitcoin, it's got more than 15 years of history. Its 1, 3, 5, 10, 15-year track record actually is superior to virtually every other asset class. I think for many investors, a small allocation, 1 to 3%, is might be a very sensible decision to make. It's quite an active decision to say you will not allocate it all to the asset class.
Can you talk to us a little bit about the plumbing here, how it works when you're buying Bitcoin, and whether there are any concerns about supply of Bitcoin, which is pretty limited?
No, there isn't.
I'm just scanning through the markets, guys, looking for some opportunity here. Looks like Apple could see a bounce.
$10 trillion of Bitcoin. What's interesting about Bitcoin, though, it does have a limited supply, which is what makes it of interest to many investors, particularly outside the United States, where either you have a very high inflation in your local country or a very weak banking system. So And then when you contrast Bitcoin with the fiat currencies, it's very attractive that it is a limited supply. But the mechanics here are going to be very similar to gold. Investors, this is actually what ETFs were made for, to take difficult, complex things and make it simple and compliant to trade. This will mainstream the asset class.
Except for the SEC chair, even with this nod of approval, did call Bitcoin primarily a speculative, volatile asset that is used for illicit activity, including ransomware, money laundering, sanction evasion, and terrorist financing. Why should people own it? Why should people invest in these ETFs?
If they want the exposure to an asset that has, for the last 15 years, outperformed everything, including private equity. Gensler is an outlier of the global regulators. Yes, Bitcoin has been used for illicit activities, but quite frankly, the number one asset used in illicit activities is the US dollar. I think that this is an alternative. I wouldn't villainize this, I wouldn't romanticize it, but it has generated enough of a following. I believe it's fair to say that Bitcoin is an alternative global currency in a world where currencies are, being with the unlimited supply of yen and euro and dollars being created. It does offer an interesting.
If you guys have any questions, just holler at your boy.
It's connected to the mobile phone, and it is really the preferred way to deal with things in much of the world. This will allow a less technology sophisticated investor to buy Bitcoin in a way that they're very comfortable with, just like any other ETF or ETP.
We're seeing some pretty crazy, I won't say crazy, aggressive long-term price targets now being set for the underlying coin as a result of this historic decision. Do you look at those with any caution? How much stock do you put into sort of those long-term either base or bull cases?
I think you have to be very careful. It's a tremendous amount of hype. Some people are speaking in such explosive terms. I think you do want to take that with some caution again. But a 1 or 2 or 3% allocation may make sense just in case those predictions are accurate. But the last 15 years have shown it's a worthy asset class.
There's no doubt about that. You can go back and look back a decade and a half, and to your point, John, it's been pretty incredible. Amazing day, and it's great to get you on with it. Thank you very much.
Thank you so much.
Wisdom Tree.
Although I always, the alternative currency thing, I mean, you can't buy anything with it, right? It's not useful. It's not a currency. And also, as long as people still want U.S. Treasury bonds, the dollar is very much in demand right now, and so are other currencies.
So I didn't tell you guys yesterday what happened. Man. I went and got something to eat yesterday. And twice they had to take back the dish because it was just crazy overcooked. Like it was just like there was no pink in the middle or anything. I'm like, I don't know if they didn't know how to cook the steak or what, man. But I'm like, I didn't ask for this thing well done at all. You know, medium. So I want pink. Dude, there was 0 pink. I'm like, you guys just ruined it. This is what I'm looking for.
I'm just looking at things here. The problem was
All right, on Google, 141.
the numbers, the inflation numbers, a little stronger than expected. Really cost us about 40 points to get to 830. We started moving down. We opened modestly positive.
If we get a bounce, okay? Let's look to see if we can catch a bounce on this, okay? On Google. And we'll get next week puts on Google. All right, I don't want to just, this could be a buy. It's like, what do we do, right? This is a low volume pullback. You know what? Even this whole rally was just low, very low volume. Look, it's already breaking. So,
positive on the day, it turned negative. We had new highs right at the open. Amazon, Alphabet was a new high, Netflix was a new high. All of them turned negative. There's a few that are out there still. Salesforce, here's of course a big Dow component.
Yeah, I want to look for a bounce off of 142.80. All right, there it is. There's the wick. I think. Hold on. No, right here. As a breakout, I want to see us get a bounce, see if we're able to catch a bounce and get short up around this area and get it for like next week and see if we can get back down into 140. I'm going to write that down.
Up today. That's a two-year high for that. That's been holding up pretty well. Some of the software as a service names have been holding up pretty well. Here, ServiceNow. This is still up fractionally. This is an historic high, 720. Look at that. Bill McDermott, regular here on CNBC. I'm sure he's very happy, the CEO for that company. That's a new high. But elsewhere, a lot of companies have hit new highs either today, yesterday, last couple days, and just couldn't hold up. The card companies were doing very well. MasterCard was a new high. That went negative. Visa was a new high. That went negative. We had a small smattering of consumer discretionary stocks also. Home Depot was at a new high earlier. But again, they all sort of faded here in the middle of the day. Still, the market, it's good for the market still to be very sensitive to the course of inflation. And the CPI wasn't, delightful for people who are hoping for a clear glide path for consistently lower inflation numbers. Guys, back to you.
All right, Bob, thank you. Time now for a news update. Pippa Stevens has that for us. Hi, Pippa.
Hey, Sarah. A new report suggests U.S. military aid to Ukraine has not been properly tracked. The Pentagon says more than $1 billion worth of missiles, drones, and night vision devices were missing or unaccounted for. The report raised the possibility they were diverted or stolen. The New York Times first reported the Pentagon's conclusions, which come as Congress weighs sending another aid package to Kyiv. South Africa presented its genocide case against Israel today to the International Court of Justice. The country highlighted civilian deaths in Gaza as Israel wages war with Hamas and asked the court to order Israel to end the violence. Israel will deliver its response tomorrow. And a group of Jewish students are accusing Harvard University of discrimination, saying it allowed a culture of anti-Semitism on campus. The lawsuit comes just over a week after Harvard's president resigned following a host of plagiarism claims and criticism over her congressional testimony about anti-Semitic incidents on campus. Harvard has not yet responded to the claims. Carl, back to you.
Pippa, thanks. Pippa Stevens. Bank earnings, as you know, are kicking off tomorrow with B of A, JP Morgan, Wells Fargo, and Citi. We are going to get you ready for all of those reports. The KBE more than doubling the S&P's gains over the last few months. We'll see what tomorrow brings us. We'll talk more about it after the break.
I want to look for a bounce, guys. And then see if we can't get that bounce up here to 474.50-ish. Again, in order for me to take this, I mean, that could be our bounce back right there, but I just don't think I can. I'm not comfortable taking it here, even if it just sells off.
We did just get some new numbers of the dollar volume Bitcoins on the first day of trading. The ETFs, $2.3 billion has been traded as of 11 a.m.
If I get short, which I'm planning on, I'm just being patient right now. I will let you guys know. I mean, I kind of told you guys where I'm looking. Where I'm looking for the entry. All right, I'm already told. I think I already told you guys. No, I don't think. I know I did. See if we can't take this up to. Shit! Just knocked over my mic and stuff. This could be. I don't know. I just need a bounce. We need a bounce here going into lunchtime. And I hate chips, but it's just the first thing I see. Sorry that I left and did not put this on. Shit.
And if so, it's from that re-rate.
It 100% is relevant to them because I think what we're really looking for so last year, KBW cut our 2024 bank estimates on average by 25%. We spent the entire year adjusting the forecast for interest rates and for deposit costs, essentially. We think that period is over. And now we're going to be a little bit more focused on growth and on credit. So what we want to hear from Brian Monahan and JP Morgan is what's happening with the consumer? What are the prospects for loan growth? And we think some of the more traditional conversations are going to be critical to how we forecast earnings in the future. But I also think, we're approaching a year since the banking crisis started. Really putting that period of time in the rearview mirror. I think that's what's happened with this recent bank stock rally. Go ahead, Sarah.
I was going to ask if you're as optimistic about the regional banks as you are about the big banks, because they are forecast to show earnings pressure.
Yeah, we like big over small on average. And really, if you look at how hard the industry rallied into the fourth quarter, it's a little bit more of a stock picker's market in bank stocks right now than an overall sector move. And we like the bigger banks because they're less spread dependent. And also, our firm is pretty bulled up on a return to investment banking revenues. We think that there's been a long time out. I help manage an investment bank, so I can see the animal spirits building. And when investment banking revenues rebound, they typically don't do it slowly. They tend to come on pretty quickly. So we like banks that have investment banks embedded in them. Goldman's been one of our top picks from our analyst. And so we like the diversity of the bigger banks at the moment. And they also have a little bit less commercial real estate exposure.
Finally, Tom, I did see 60 Minutes teased a spot this Sunday, I believe, about commercial real estate and specifically New York. To what degree does CRE exposure matter tomorrow?
Let's get to work, gang. Let's get to work.
Wells Fargo. Wells Fargo is one of the few lenders that breaks out their large commercial real estate portfolio for investors. And in the third quarter, they took loan loss reserves for that portfolio, which is the type of credit that you just mentioned, to 11%. Our opinion is that 9% is global financial crisis type reserving. They went beyond what we thought was conservative. And you could say, oh, wow, that's really bad.
If you guys have any questions, reach out. Hit the like button, subscribe if you haven't already subscribed. We appreciate you guys being here. If it's your first time, welcome. Right now I'm going to take the lunchtime to go over some of my afternoon thoughts and where am I going to buy, where am I going to sell to finish this day off strong. Tomorrow's not promised, so we need to make the most of today. All right, we need to make the most of today. I was a little frustrated in that I didn't get the bounce back that I was looking for in some of these names. Apple, Tesla, the S&Ps. I did take a short on the S&Ps, okay? The 472 puts for tomorrow entered at 50 cents. All right, let's go to the SPY. Let's see where they're at now. I am no longer in them. Again, I want my entry. All right, I trade the market. The market doesn't trade me. Plain and simple. So these are at $1.30. These are at $1.30 right now. You could have had them if you were here earlier. Just, I call the stuff out when I see it. And when I do it, I let you guys know what strike, where are my targets. I already showed you my targets. You guys could have taken it upon yourself to do what you wanted to do. That's completely up to you. All right. My mic's all the way over here. So 370 is going to be our target for the S&Ps. All right, that's going to be our target. That's a 50% retracement pullback. Feel like we need to solidify this whole area here as support. All right, so I'm looking at 470, 471. 471 would probably be a final take profit. Maybe I would leave a little piece on to see if you get that 470 extension. Maybe a gap down. hard to say. All right, you have PPI tomorrow. Not much other than that. What I would look for is a bounce back. All right, and try to get a short here at like 473. I doubt it'll give it to you. We're just falling. All right, we're just falling. So, which it already did. It already did test 473. It already tested 473. Volume is pulling back a bit. Let me pull up a 30-minute. You know, and it's not like today is just like this insane volume day, but it's decent. Excuse me. It's decent, right? It's decent. But it's nowhere near some of the bigger volume that we've had. So, light volume pullbacks are buyable in my book. All right, they're buyable in my book. All right. So that's where I'm at right now. And you're starting to notice you're starting to get a little bit of a dip by here. And that makes perfect sense on why it would. Okay, this is a support level. All right, that is a support area. So you should get some buyers to step in there. And I want to look for that lower high to see if we're going to get an extension further. All right. Again, this is just in the long term. This is just a minor pullback that's been due. We just haven't gotten it. All right. But anyway, hit the like button, subscribe. If you have questions, throw them in the chat. If you have a stock, you want to look at, you want me to look at it, you can throw that in the chat. If you have just anything I can do for you, let me know. All right, don't be shy. Say hello. We're trying to build a community here of great traders. All right, great traders. We do great things, and that is, more than just making money. Because being great is more than just, oh, hey, I got a little bit of money here. All right, it's a little bit more than that knot in your pocket. All right, yeah. Like, subscribe if you haven't already done so. We're going to 1,000 subscribers. Are you coming with us? That's the question.
Could also be the beginnings of a massive labor shift enabled by AI itself. Look at where the latest cuts happened. At Amazon, it was Prime Video and MGM Studios. At Google, it's the hardware division that makes Pixel smartphones and Fitbit watches, as well as in its core engineering unit and the team working on its AI assistant. If generative AI is a full platform shift that affects every part of its business, more projects may grow out of those ambitions and not exist separately. So Google Assistant, for example, could be seen as redundant. Just yesterday, OpenAI launched the GPT Store. It's a marketplace for personalized AI apps. Essentially, it's Apple App Store moment, adding more urgency. And do tune into our Tech Check podcast, where we will discuss this and more of how it relates to big tech and the AI drive. Jeff Richards at VC firm GGV, he argues that recent tech layoffs are also part of a broader labor shift that is just getting underway. He says that the 22-23 Get Fit trend dovetailed right into the 2023-2025 AI adoption trend, driving a massive upside in productivity. So essentially, companies, they learned that they could do more with less, and then along comes AI, further enabling or even supercharging that drive. Mark Zuckerberg, who led the year of efficiency, he has said as much, and over the last few years, reduced Meta's engineering hiring targets, and he could have just been the first. Look at the hiring trajectory of Amazon and Google. In the second quarter of 2022, Amazon's workforce was growing at a 14% year-over-year rate. Over the last 4 consecutive quarters, the workforce has gone the other way. It has shrunk. Here's Google's headcount. In both cases, they peaked in 2022, 2023. AI may make it so that we never get back to those levels, a new era of efficiency that could stick around. This is good for tech.
Let me ask you guys a question. Is the market closed Monday? Is Monday a holiday?
but to be done. I've been asking heads of IMF, what do you, because if it's going to have profound effects on productivity and economic growth and labor market, it's something we have to understand. When does that happen?
I mean, and this is an indication that it's happening right now. We've had this conversation ever since we started talking about artificial intelligence.
Martin Luther King Day on Monday. That's right. God damn it. As soon as we open up, we gotta freaking close again.
I mean, job numbers from last year showed that
Shit.
IT hiring is down by thousands. So, you know, it happens slowly and then all
right.
at once.
So that's that. Yeah, I had a feeling. Damn it.
Alphabet,
all right.
Amazon to start the year. They could be part of this broader trend that
know that
AI
if you're
is
thinking about
enabling.
buying leaps
And like you said,
of sorts.
Sarah, like, are we going to see this in other industries? You can imagine that we will,
I don't mean leaps as in 2 weeks. Sorry, I didn't mean to say leaps, but if you're looking at like a month, 2 week away, know that there's a vacation that you're going to get hit with. So.
Thank you, Deirdre Boza. BMO's CIO is coming up next on why he says March is too soon for the Fed to start cutting rates after this morning's hotter CPI print. We're also going to get into some of the opportunities he's seeing right now in the biotech sector. It's been on fire. IBB up nearly 20% in just 2 months after significant underperformance in the past few years. We're back in 2.
All right, I think I missed it, but 460, I know it's way out. I know it's way out there, guys. Shit. I just had my opportunity. Look at that test.
Welcome back. Following that hotter than expected December CPI print,
I'm not in it yet. I'm just letting you guys know. I'm looking at like 2 weeks out. That 460 area. 2 weeks out. I just got my bounce and I did not. That sucks, man. That really sucks. That really sucks. You know, because I feel like we could get a longer term bounce here. That doesn't mean that we will, but
Athletics.com.
Let me see something.
Welcome back. Following that
Let
hotter
me
than
see
expected
something.
December CPI print, our
Let me
next
see
guest thinks
something
that
here.
Wall Street is currently pricing in too much easing and says now is the time to find some value in areas like small caps and biotech. Joining us this morning, BMO Wealth Management CIO Young-Yu Ma. Young-Yu, it's great to have you. Mester is on
The
the
thing
tape
is,
a
if we
couple of moments
if we
ago,
catch this
argues that
bounce,
March is probably
if this thing
too
bounces
early.
and puts
Sounds
in
like
like
you
that
agree.
lower high up here at
Yeah, it's great to be here, Carl.
475
We do
area,
agree.
that's
We've
where I'd like
actually
to
been
be
saying that
able
for quite
to
some time. We think that
get
March
this
is too
trade
early.
on at.
And
Unless we're just going to
CPI
continue to
reinforces
extend
that.
all the way down
And
here
we
to
want to think about the
470
Fed's dual
and
mandate.
then
The
bounce to
Fed's dual mandate
475,
is maximum
472,
employment and price
473.
stability. And we see
You
from
know,
today's
that very
initial
well could
jobless
be in the
claims
books as
that
well.
it continues to be the case that maximum employment is pretty
So,
much checked off. And really, the Fed has to focus on price stability, and there's not a lot of incentive to start easing rates
so
prematurely.
yeah,
when
guys,
the Fed,
if
at least
if
in
I
the back
take
of its
this
mind, is
trade, I
concerned
will
that
let you guys
inflation
know.
could still
I'm just
creep
waiting
up,
for the
or
entry.
we could get these
It
spotty
kind of gave it to us
reports
there,
like
but
we
I
had,
wasn't.
last
I
month.
didn't
So
realize
we
it.
do think the
I didn't
summertime,
realize
probably
it.
the June
So
meeting makes more sense for the Fed to start cutting rates, and March is probably too early, and today reinforces that.
That said, you've been in the soft landing camp. You say they're still there. Talk about how that leads you to some areas like small cap value.
Well, small cap value, we think that's the intersection of what has lagged the market for probably more than a decade here. Both small caps and value have been big underperformers, and we just see a lot of value and low valuations and stable companies in that space. And we do expect the Fed to start lowering interest rates this year, and that'll ease some of the pressure off that space. And we think the valuations are attractive enough that it makes sense to start moving into there.
You also like biotech, and I am just curious for how long you've liked it, because it's been painful for people who have for the last few years and is finally showing some signs of life.
Yeah, we turned positive on biotech a few months ago, and really it's a few things going on at once. In the sector, we have a lot of innovation, and we don't want to overlook the importance of that innovation. But this year, we also are going to have interest rate decreases. We think that'll help the overall sentiment in the sector. We think the M&A activity will pick up by year end. And overall, we think that the underperformance that biotech has seen over the last couple of years is probably going to be reversed here. But the backbone of that is innovation. And we think that investors are going to start focusing on that more this year.
You know, I think it was probably the middle of last year. People started coming to us arguing that Japan was a real story that was turning. Now we're looking at the Nikkei at 34-year highs. At what point do we start arguing that Japan equities have priced a lot of good stuff in?
Well, they've priced some in, that's for sure. It's had a good 2023. We think the tailwinds for Japan are very long-lasting, multi-year tailwinds. Structural change is relatively rare, and when it happens, it's something that usually lasts for many years, or at least several years. And we think the focus on shareholder friendliness, corporate governance, return of capital, a better overall environment for shareholders, M&A activity, share buybacks, all of those things together in Japan really point to a longer-term trend that if these companies start returning capital, they make a lot of money. If they start returning more capital to shareholders, that will really be beneficial to equity holders in the market.
Finally, Young-Yu, as we get ready for big banks to start reporting tomorrow, we're going into earnings season, and I wonder how you are positioning given the big drop in terms of expectations for earnings growth.
Hold on, guys.
Set the bar lower, or has the market
Oh
already
shit,
rallied
I don't
off
know
of
what.
that? And then what happens with guidance?
Hold on.
Expectations have come down. The banks have rallied, so a fair amount is priced in here. We think it's probably somewhat of
All right, I'm in that trade. I didn't mean to.
later in the year where the Fed starts cutting interest rates, but definitely the guidance for banks.
Fuck.
The big banks are on tap.
I did not mean to get in there. All right, I entered that by accident. I guess with me just being here, I had the order up and I got into it. 38 cents. That's what I paid. It market ordered me in, unfortunately.
Young-Yu Ma joining us from BMO sort of brings us to, I guess, the day where we're putting into some context CPI, and then it's all tomorrow going to be about deposit growth and credit quality and so forth.
And the economic outlook, loan activity, investment banking, capital markets activity, and we're going to get PPI, wholesale prices, which have been softer than consumer prices. Going through the economic research, it feels like the consensus is, and how the market's reacting, we're still in this disinflationary period where we've made a ton of progress. A little progress halted last month, whether that's just noise or whether it means it's going to be harder to get down to 2% from here. That's the big question mark, I think, for investors and for the Fed.
Meantime, VIX back above 13. Oil is making a bit of a run here on the topic you're discussing. When you get oil tankers with armed men coming on board,
oil tankers. We're watching that story very carefully. Anytime Iran enters the fray, oil moves.
Yeah. So rest up for tomorrow. Frank Collins in for the Judge. Let's get to the half.
Carl, thank you very much. Welcome to the Halftime Report. I am Frank Collins in for Scott Wapner. A few key items front and center this hour. Stocks pulling back following a hotter than expected inflation report. Most of the Bitcoin ETFs are pulling back in their trading debuts. And of course, earnings season's about to kick off with the banks on deck. Our investment committee is standing by right here at Post 9 to break this entire thing down. Join us for the hour. Bryn Talkington, Josh Brown, Brenda Vingello, and Jim Leventhal. But first, let's get a check at the market at noon Eastern. As we mentioned, all the major indices in the red right now. The Dow down more than 200 points. The S&P down nearly 1%. The Nasdaq Composite down 1%. The Nasdaq 100 on pace to break its four-session winning streak, looking like it's going to lose today. We also want to pay attention to bond yields right now, the 10-year in particular. Take a look. Yields back above 4% at 4.03. Something that everybody on the market's been watching right now. So I think we want to jump right into it. Josh Brown, I'm going to come over to you. What do you make of that very slightly hotter than expected inflation report and also yields going back above 4?
So I have said on the show that I feel the big risk in the first half of this year is not things like commercial real estate or bank loans going bad or credit card default. I think the risk is the economy overheating and the stock market overheating. And this is one of those data points, unfortunately, that could potentially be another stair step in the wrong direction, quite frankly. So CPI up 3.4% year over year is an acceleration. Now, granted, it's an acceleration from 3.1. A little bit we're splitting hairs, but again, directionally, it's not what we're looking for. The 6-month annualized rate is now 3.2%, and in November, it was 2.9. We had these two really tame prints in July and August, and that is what set the market on fire leading up into that. And now the concern is, were those the aberration? So I think it's too early to say. I still think when you're thinking about anything near 2.9 or 3.2, you are splitting hairs. But if next month is 3.4, Houston, we have a problem. One last thing on this. This is why we don't make all-in bets on things like the direction of inflation going one way or the other. Look at oil. Oil is up 3% today. Natural gas is up 5% today. The XLE is the only sector green. Yesterday, it was one of the only sectors red. This is what diversification does for a portfolio. You don't have to live or die based on one potential macroeconomic outlook. You can just have a portfolio that's durable enough to get you through days like today.
Bren, what do you make of CPI? Was there any part of it, whether it was shelter, food, was there any part that stuck out in your mind?
I think on the positive side, core came in at 0.3. I think the market was thinking it could be on the high side of 0.5. But listen, to Josh's point, and to flesh that out a little bit more, interest rates do not just fall in a linear fashion. And so I think that we're going to have the market understand that there's a low likelihood that we have 6 to 7 rate cuts, and more along the lines of 3 or less. Because as long as inflation, forget GDP for a second because they're not necessarily correlated, inflation is in that 3 to 4% range, there is zero reason for the Fed to be cutting rates. And so I think as the first week we saw,
looking at
slightly negative
474
calls,
we'll
see how the first month ends. But
for
I think
today.
We're setting up for a more volatile
All right, I'm thinking about
kind of
those.
Like 2017, then we had 2018 with a tremendous amount of volatility.
Oh,
I think that's where we are right now.
What's the?
So, Jim, Josh pointed out it was a miss, but it was still a slight miss, and directionally it's
Come
not going the
on.
right way. But this is the smallest gain.
I'm
on
going to
CPI
wait till the
since May. We
afternoon
talked
to
about core
try
CPI since
and
May
do
of
what I want to
2021.
do.
What do you make of this
I'm a
report
little
and the reaction
frustrated
of the
that
market?
I got into these because I did not mean to get into
We can
these.
parse it the way you were just doing it. We can find reasons to think maybe it's not that hot, but I'm not going to do that. I think this is a moment to bring out that very hackneyed analogy.
I did not mean to get into these.
The markets
are a dog, a little yappy dog on a walk with a dog walker. The dog walker is the Fed. Okay, the Fed, we know which direction the Fed is going. They're done with rate hikes. At some point this year, they're going to cut rates. Are they going to cut rates 6 times? I really strongly disagree with the market's assertion that they will. Are they going to cut in March, which, by the way, the CMA futures market right now says 70% probability? I disagree with that. But
Like this is this is how I want to be able to get into these names, and it's like on bounces. That was a complete accident on getting into that.
Dog running from one side of the pathway to the other. We're going to have 6 rate cuts. We're going to have 3 rate cuts. We're going to have no rate cuts. We're going to overheat. Maybe, Josh, you're right. Maybe we do. I don't know. But that is the markets being this yappy dog. You've got to go in the direction that the dog walker is going. And let me be clear, we're headed in the direction of rate cuts. That matters. The reason it matters is in that context, good news is good news. We're no longer going to wring our hands if jobless claims come in better than expected. We're no longer going to wring our hands if the economy comes in hotter than expected. I think I disagree with you slightly on that, Josh, but that's fine. That makes a market. That context is dramatically different than the last 2 years.
All right, so Jim's using an analogy, the dog walker and the dog, it's like a chihuahua yapping. Brenda, what do you think about all this? Because clearly the markets seem to be wringing their hands today over, again, 0.1%, slightly hotter than expected.
Well, I think overall it is a disappointment, but I think within the figure there were some numbers that didn't make a whole lot of sense, particularly shelter, where we had been expecting more improvement because other measures of shelter are showing something completely different. Right. So I think it could be a one-off, but nevertheless, I think as we look to the market in 2024, hopefully it won't be a dog. I don't think it will be, because I do think that corporate earnings are still poised to be much better than last year, certainly if we think about the earnings recession that we had during the first half. And if we think about corporate sentiment, just if we can move beyond this concept of a recession being just 6 months away, I think there is room for corporate spending to increase in this environment that we're in, if we can all agree that the environment still remains relatively healthy, and so far it seems like it will be that way.
One of the weirdest things in CPI, to Brenda's point, there are always aberrant components within CPI, and we have the choice here in the media. We can either emphasize them or dismiss them. Vehicle insurance, which is probably the reason why everyone hates the president right now. As long as gasoline is low, that's probably the other thing. Can you believe what I'm paying for my car insurance? Vehicle insurance was up 2% in December alone. It's up 20% year over year. That is absurd. But that's the nature. That's the largest increase, year-over-year increase since 1976. So none of us sitting here on the panel have ever seen anything like that before. But that's an example of how weird these stats can be. The way they're collected, the way they're compiled, and then the way we process them. And so it's important that we don't completely change our investment outlook based on any one print. We really do have to focus on 90 days, 6 months, 1 year. What is the bigger trend, not what is the headline this morning?
All right. The next major catalyst for the markets is fourth quarter earnings season, which is set to begin tomorrow, of course, with the banks. Jim, I'm going to start off with you. What are you expecting from earnings season when we're talking about the banks? A lot of things, net income margin, commercial loans, credit availability, so many things to look at. Is there one in particular that you're focused on?
Well, first off, I'm really excited to start earnings season because the corollary to what I was just saying about the Fed becoming less important is that earnings take center stage. For us to continue the rally that we've had in the last few months, it's predicated on 11-12% earnings growth this year over last, and that has to come through. So with regards to tomorrow, yes, the banks kick it off. What I'm looking for, the banks never excite me in terms of, hey, does Citigroup do better than JP Morgan? It excites me from the point of view of what they say about things like consumer delinquencies, credit card delinquencies. That's been something we've been talking about. Market participants have been worrying about a lot. So I'm looking for JP Morgan and Citigroup to tell me, just for instance, are those normalizing or are they doing worse than normalization? And, there's other ancillary things that I'm going to think about, and some people may find these not ancillary. Net interest income, that should be getting better as the yield curve gets less steep. Overall loan demand. These are important macroeconomic indicators.
All right, one thing that wasn't ancillary, that warning from Citi expecting a deeper quarterly loss due to the decline of the Argentine peso and also restructuring. What was your take on the announcement?
Not the Argentine peso. Oh, no.
You want me to do the whole dog walker thing again?
Sell it all.
This is the dog walker. No, I know. Actually, in some way, I'm perversely happy to do this because Citigroup has had a tremendous discount to tangible book value, almost 50% for quite some time. That has been the market's way of saying we expect.
That's right. Bring that
write-offs coming.
15-minute trade line down. Let's go.
International businesses over the last 2.5 years. These were somewhat expected, and the size of them doesn't faze me at all compared to the discount to tangible book value that the shares sell at. So I do actually find this as a buying opportunity right now in Citigroup.
All right, Brenda, you're underweight financials. You own JP Morgan and BlackRock.
We do, and I think, in earnings season, I think we're going to hear some hopefulness probably about capital markets starting to turn up, although I don't think they did during the fourth quarter, but I think it'll be hopefulness about what's to come early in this year. I think those banks that do have exposure to wealth management will have a nice boost in the assets having grown during the fourth quarter. So I think there will be some bright spots or hopefulness in some of the earnings reports. We've maintained an underweight position. We've had a nice move in the banks, and if we look at kind of their sweet spot bread and butter, and it's moved on to the private market. We are propositioned weekly or more with managers with their products within the private loan market, and it has grown exponentially. And unfortunately, it's come at the cost of the banks. It used to be good, profitable business, and it's not there anymore. It has moved on. So I think that's a problem when it comes to overall profitability.
So Josh, you own JPM. You've been pretty consistent saying you think it's best in breed. Is there anything that you're worried about? Is there anything you're looking for as a possible flag, whether it's green, red, whatever color you want it to be?
Well, it's the acknowledged best in breed, and actually last year, finally, the stock market caught up to that reality. It was far and away the best performer of the group and deserved to be. It was the right bank for the right moment. The concern with JPM is and has always been, how much are investors overpaying for how great of a company it is? There's never any question, is this the best bank? So now the focus for me just shifts to, I think BlackRock's the most interesting story. So BlackRock, we don't talk that much about it on the show. It is a obviously mega asset manager. They're in a lot of really critical businesses for investors. And the question is, do the losses, the fund flow losses of 2023 reverse this year? BlackRock, like every other asset manager, had to fight 5% rates on cash. Very, very difficult fight, and they lost, and everyone else lost too, believe me. This year, that could reverse as we see, like even the 2-year didn't really react to the hotter than expected CPI. Like it's very possible that cash trade is coming to an end and the flows will reverse.
Let's go. That's exactly what I wanted to see. I want to see the SPY start to reject this area.
I'm watching to see what they say on that front.
And it's not going to, I feel like. Right there.
I think to build on Brenda's, since the
Right there.
crisis, the banks have, from a regulatory
Let's go. I want to start seeing some selling start to step up here.
profits they used to have, and for good reason. And so where that shift
All right.
into the
15-minute trade line coming in
a BlackRock
at this area.
And so we do a lot
And I want to bring it back down. I want to bring it back down. Bring it back down.
The way that I own them is through the toll roads of global finance. I own Visa. You could do MasterCard. I think that's a much more durable way to play finances without taking that regulatory hit that all of those banks will continue to, I think, weigh on their ability to have multiple expansion.
Interesting. So, Josh, I want to come back to you. JPM trading about 10 times forward earnings. I know you're not a big valuation guy, but in your mind, are financials cheap right now? Is a bank the quality of a JP Morgan cheap? Should investors just jump in?
It's not cheap. It's at a premium. It should be. And the way to look at JP Morgan is probably a multiple to book versus they're all going to trade 8 to 10 times earnings. JP Morgan trades at a premium to the other names.
So that long, that 474 long would have already paid for half of, what I got into it. I just didn't do it. So when I'm trading, I'm trying to figure out, how do I manage risk? Right? How do I manage risk? If I think I'm going to get a bounce here, this does kind of look like a Head and Shoulders. See, I don't like that delta there. Let's go. Pull it back, baby. Pull it back. Shit. Of course it did.
What do you make of what's going on in tech? And
You see, I could already be. That's crazy, man. I did not mean, guys, again, I did not mean to get into this position. I did not mean to get in it. Because you still got a shot all the way up to 475. You know? You still got a chance to get the VWAP on a bounce. It's 12.15 right now. You know, I do want to see this. I do want to see the SPY continue to be weak, but that's my analysis. We could bounce all the way up to VWAP. We could just ride this thing up, possibly put in a lower high. You know?
If we look in the fourth quarter of last year, no doubt, after having a phenomenal first half of the year. But I think within the large cap tech space, there are areas we would favor over others. When we look at something like an Apple, valuation's high. We're concerned about growth in China and having that slow and slowing iPhone sales overall. But when we look at other areas like a Salesforce and NVIDIA and Amazon, we continue to see opportunity there, whether it's from margin improvement overall with an Amazon and a Salesforce, or just with overall top line growth with an NVIDIA. So we think there still are opportunities within the group and would not categorize them just as one right. or nothing. But I think you have to be a little bit picky when sifting through.
You know, Brenda, you hit on something earlier in Worldwide Exchange we were talking quite a bit about. So historically, technology trades at about 17.7 times its forward PE. Right now, currently, it's at 24.5 times its forward PE. Brent, I'm going to come over to you. What does that make you think? I mean, there's the AI trade, NVIDIA, we're going to talk about in a second. Obviously, given a lot of enthusiasm and a lot of encouragement to investors on the AI trade, but that much above its historic valuation, what does that say to you?
I think it should give you a small lens into where we are, but I've said this so many times. PE is a terrible metric for making trades. And so let me just take a step back. I think we're all asking ourselves, can tech have another good year? And actually, last year was a great year. The NASDAQ composite was at 43. The Qs were up more than that. But if you look at the NASDAQ over rolling 2-year returns, the actual average return for 2 years is 25%. Right now, over the last 2 years, the NASDAQ is negative, and the NASDAQ 100 is only up 4%. So if history with any guide, if you take a 2-year lens, tech is actually pretty cheap. So I don't think we're entering that 98, 99 phase, and I still think there's room to run, especially as these companies are getting more excited about AI, implementing AI, and so I think there's room for multiple expansion.
All right, multiple expansion room. Bryn says, Jim, I'm going to come over to you. Today, Apple named a top pick by Goldman Sachs, reiterated the price target of $227, saying they see potential for upward earnings revisions to drive the upside. Agree or disagree?
I kind of mildly disagree, but let me put it in this context that all of these analyst notes on Apple in the first 2 weeks of the year seem to be a little hollow to me. They seem to be lacking specificity. They seem to be lacking data. I mean, sure, Apple could go up. If the markets go up, it's 6% of the S&P 500. Just passive index investing is going to generate flows into Apple. By the way, they buy back a lot of shares. But in terms of a catalyst up or down, I find it hard to find one. And I know last week there were a lot of downgrades saying that the iPhone market is slowing.
Goggles.
I mean, tell me something.
February.
Well, no, hang on. I know you want to go there. So, and I've listened to you on it. But
I just went there. I just said I don't know what the catalyst is. It's in 6 weeks.
Wait. Let me just finish.
Well, Josh, you legitimately have that much faith in those goggles?
He does.
It's the start of something.
You go ahead.
I'm just saying, I'm not saying it will be the catalyst, but you said I don't even know what a catalyst could be. OMG, it's the first new major product launch since 2016.
Josh, I'm not with you on this. I mean, I love you. I hear you.
You're not the customer they have in mind when they're developing these things? Like, in fairness.
I hear your passion, and when I hear you passionate, I take it very seriously. I just don't see this as, remember the watches when they came out? And how long that took to really gain traction, and we were waiting quarter after quarter for that to be the catalyst. You're right, I'm not the customer, so maybe that skews my vision, no pun intended, but I see this being more like the watches.
You do remember the scoffing at the phone, right?
I do.
Nokia laughed at it, okay? You remember the scoffing at AirPods. What kind of idiot would walk down the street with those? It's one of the big, if AirPods were a standalone company, it would be in the S&P 500. So I understand the skepticism, like who wants to wear goggles? Until I show you, I could simulate, literally, being a submarine captain during World War II.
You're my
and
XO?
I put them.
Are you my XO?
Sure. I don't think they don't let gentlemen of my size on submarines.
Well, Josh,
I put those on your head, and you go, "Oh, wait a minute, maybe this is the next category."
but Josh, let me ask you: where does Apple succeed where Meta failed?
You'll rock the goggles for sure.
But I have the MetaQuest headset, and I don't like it. I get dizzy. It doesn't make sense.
Yeah.
Nobody else is on there.
Yeah.
What do you do?
This is not that. That's straight video gaming. This is so different. Bryn has the Meta Ray-Bans.
Yeah, I didn't want to because we didn't talk about it before the show. But do you want to pull them out?
Yeah.
We're not doing show and tell. I'm not going to make her put them on.
Right.
But they're sick.
Pull them out so we
But
can see
I
them.
think that these products, I think we're going to have this resurgence of products that for the consumer, and all of these products are insights into Apple's AI initiatives, into Meta's. The Ray-Bans from Meta are amazing. You can say, hey, Meta, and it can do things for you. Right now, it's like, tell me the temperature, take a video. But you can go through and say, hey, they're going to be able to translate languages going forward. I think with the Apple, I think also you get this insight into their AI. To me, the Trojan horse of Apple is Siri. And so I think that's what we're going to continue to hear. What are they going to do? Because there's, I think, 2 billion installed user. They all of a sudden pivot, or not pivot, they share with us what they're doing with AI and Siri.
They haven't even whispered AI. They haven't even hinted at it.
Can you imagine? Quick poll. Does Apple outperform the market this year? Yes or no? I'm just asking. I want to know your opinion. Outperform the market, yes or no?
I don't know.
Okay, Josh.
Outperform the S&P 500? No.
Brenda?
I don't think so.
Me neither.
Well, that was quick.
What's next?
Did you just do science?
That was not Survey Monkey quality, Jim. That was not Survey Monkey quality.
Let's
Hey,
you
you three,
a sample size.
Very small sample size. So I want to switch gears a bit to NVIDIA. Hit a new all-time high today. Obviously, still riding the wave of AI enthusiasm. You guys were just talking about it. Following its chip that allows, quote-unquote, AI at home. Farmer Jim, I'm going to come back over to you. You're a skeptic when it comes to Apple. I mean,
Farmer Jim, tell us about AI.
Well,
also, Josh, if Siri was a standalone company, would it be in the Russell? I mean,
what's NVIDIA? I mean, somebody tell me, what's NVIDIA up this year? 10%?
It's already up 10%. Would you have said this is going to outperform the S&P this year? Nobody would. Myself
Actually, I might have on this one
year.
because, and I'm going to drive you particularly crazy on this, because starting this year, the forward multiple on NVIDIA was what, 26?
Yeah.
I will tell you that for a company that's growing its earnings 50% year over year, that's a bargain. I know we're not supposed to use valuation. A lot of times people laugh at me when I do it, but no, I would say that NVIDIA would outperform this year.
Well, you got your wish so far.
By the way, I would say that the Mag 7, we can't look at that as a monolith. Not every stock is going to outperform the same way. I know you love Tesla, and I'm so happy to see you in person today. I don't want to mess it up, but I think
we all agree on valuation. I think the key is to not be a slave to valuation.
Fine.
We're gonna talk about Netflix in the next block, I think. So I don't want to ruin that conversation, but I would point out. I would point out from March 2009 to January 2020. The average PE on Netflix was 165 times. The stock went up thousands of percentage points during that period. So it's not that valuation doesn't matter. It's just that it doesn't give you any idea of what a stock could do when it's growing and innovating in the way that an NVIDIA or a Netflix could.
Folks, you see that profile shot of him? He's talking directly at me. Love you, John.
Well, I'm just making one specific argument that you and I have been having.
We're going to have to break up this love fest for just a second. By the way, NVIDIA shares down just about 0.5%. Switching gears a bit, we're watching shares of Boeing right now. The FAA says it is formally launching an investigation after part of a Boeing plane. It just blew out in the middle of an Alaska Airlines flight last week. I'm sure you've heard about it. The FAA says it wants to know if Boeing, quote unquote, failed to ensure completed products conform to its approved design and were in a condition for safe operation in compliance with FAA regulations. Brenda, I'm going to turn to you. Boeing shares down 1 3/4%. You're a shareholder. A lot of miscues for this company in recent years, some of them tragic. Of course, the initial incidents with the 737 MAX 9 jets. Are you sticking with this company?
Yeah, I agree. Certainly disappointing and concerning. We are sticking with it, with our investment, simply because there are only 2 options for companies to buy planes, and that is not going to change the story for Boeing's backlog and the number of planes that they're able to sell. So we are sticking with it for that reason, but no doubt that we think that there needs to be some house cleaning going on, especially when it comes to looking at overall product safety for sure, and getting in the details. You know, we really need to focus
I think
on
you're
that.
leading me to my next question. We didn't get to it. I know you think NVIDIA CEO Jensen Huang's a visionary. What do you think about Dave Calhoun? You mentioned cleaning house.
Well, he's had a rough, a rough week, certainly, and a rough several interviews where he, I think, clearly is feeling the heat, of course, and knows that something needs to be done. So no doubt that his feet are being held to the fire here, and he needs to make some choices about and make some announcements about what's being done. So we would expect to hear that.
Speaking of announcements, again, the FAA launching an investigation into Boeing. Those shares down 1.75%. All right, coming up here on halftime, one of the biggest stories of today, Bitcoin ETFs, they begin trading. The Bitwise Bitcoin ETF, that's one of them. It's moving lower in its debut. Bitwise CIO Matt Hogan joins us next. Halftime, back in just 2 minutes.
All right, it feels like we might have some meat on the bone here. We may get some takers. All right, we may get some takers. Let's see if we start to get an extension to the downside. All right, let's see if we get an extension to the downside, everyone. All right, let's see. Market's down 0.7% now again. Damn. I feel like you get to that 0.6 level and then you start getting some takers because it's like, okay, we could probably still get, you know, 0.6%, you know, which would be 100% move from where we're at percentage-wise. And she's just weak up here, so. And cotton candy is very sticky. I did not intend on this. Gosh dang it. All right, let's go. Come on. Bring her on down, baby. Bring her on down.
All right, welcome back to halftime. Bitcoin ETFs are now trading. You can see several of them are in the red. That includes the Bitwise ETF. Let's get to Bob Pisani with the Bitwise CIO. Bob, over to you.
And Matt Hogan's here, an old friend of mine, known him for many years. It finally happened. How many years? 11 years we've been waiting for this since the Winklevoss twins. Bitwise, here it is, folks, trading right here, the Bitwise Bitcoin ETF. Your thoughts on the trading, specifically. Tell us how the volumes, how's the demand, how's the spread?
Yeah, we're really excited to bring the lowest cost Bitcoin ETF to market, expense ratio of just 20 basis points on BitB. The initial trading, I think, has exceeded our expectations. There's tens of millions of dollars of trading in our ETF. Spreads are pretty tight. There's a lot of demand on the buy side, so you're seeing some slight premium in our ETF and other ETFs. That's people coming into the Bitcoin market. That's what we want to see. Those spreads will tighten over time, but it's already the lowest cost way to access Bitcoin that I think American investors have ever had.
I just want to show you the panel here. So 2.5 million shares changing hands here. Here's Grayscale, 34
yeah, that's
million.
not bad. 25.63, 25.50.
20 million over at north of 20 million over at the iShares. This volume is good. Now, I want to just show somebody here, Matt. You could explain this to us. The spread here, 41 to 52. The bid ask, 25.41 to 52, 11 cents or so. And you're saying there's huge demand. People are just coming in. That's why it's a slightly wider spread.
Yeah, I mean, for starters, that's a pretty good spread, particularly when you pair it with BitB's 20 basis point expense ratio. But that spread is going to come in. You're seeing demand on the buy side. That's why the ask is where it is. But again, we expect that to bring in. These ETFs eventually should trade a penny, a few pennies wide. That's what we'll see in a week or so. Some people are getting in early, some people are waiting, but it's a big day for Bitcoin.
Now, a lot of people are asking me, okay, wait a minute, don't these track Bitcoin? We're up 1.7. Here's Grayscale down 0.6. Explain why this is not a good day to say it should track it, but this is not the right day.
These will track Bitcoin very well over the long term. They're buying and holding Bitcoin in a custodian. That's all they're doing. You're seeing some variance in demand. Grayscale, an existing product, so maybe more people moving into lower fee products. Bitwise, a new product, more demand on the buy side. But these are both great products. There are a lot of great products out there. Again, this will normalize over time. But these are probably the easiest way for people to get peace of mind when they're buying Bitcoin that have ever existed. It's day one. There's going to be 1,000 days of it. It's a very exciting moment.
Big volume and relatively tight spreads. You should be happy. And it looks like the other 9 are also doing well on top of that. Matt Hogan, thanks very much. Always appreciate it. Frank, big day. Back to you.
Yeah, very big day. Bob Pisani right here at the New York Stock Exchange. Bob, thank you very much. So earlier today, we also heard from the Grayscale CEO, Michael Sonnenschein. On Squawk Box this morning, his Bitcoin ETF is the priciest product on the market with the highest fee. He was pressed on how he plans to compete. Here's what he had to say.
We've been prepared for a world in which there are multiple spot products. GBTC has certainly been the product that has forged the path for all of these other issuers to come to market. Our court victory, our guts, our operations, our disclosures, our work with the SEC. Investors should have choice, but GBTC is coming to market in a very differentiated way. It is going to be, as of this morning, the second largest spot commodity ETF in the world. It has $28 billion of assets under management. And other issuers may try and differentiate on fees. For GBTC, it's about size, liquidity, and track record.
All right, GBTC down just about 0.5% right now. Bryn, you own the Grayscale Bitcoin Trust. Your thoughts on those comments and the action in the market right now?
I think it was somewhat of a, buy the rumor, sell the news. We all debated if it's going to be that or the opposite. But I do think it's important. All of these 10 other ETF providers owe a huge debt of gratitude to Michael and his team for actually suing the SEC, having the court side with them, because none of these would exist without that. And I believe there's about $28 billion in GBTC that was in the trust that's now converted. And so I think it was at 2%, now it's at 1.5%. So I think there's a lot of embedded capital gains. So for the short term, those assets I think will be very sticky. Longer term, we all know what happens to fees. In our business, they get compressed. So a year and a half, 2 years from now, I would think there's no way it's still at 1.5%. But they've just been a visionary in the space, and so I think that's why they're going to keep their fees there as long as they can.
Also, they're making like $2 million a day. So you wouldn't be in a rush to cut fees either. Yeah. I think it'll be really fun to watch, because a month from now, we'll probably stop talking about some of these, and it'll be pretty clear. Some of these will capture the attention of investment advisors like myself. Right. The RIA channel, eventually maybe the wirehouse brokerage channel. That'll be one horse race. Liquidity is really important to hedge funds who need to get in and out. That'll be a different horse race, and maybe that's the one Sonnenschein wins. But there will be a different version for different users, and we see examples of that in a lot of different asset classes. I just don't think there are going to be 10 of them.
I agree.
Right.
So,
I think a lot of people don't think that. Just in general, what percent of a portfolio do you think an RIA is going to make something like this?
I mean, we were like a little bit too ahead of our time. We launched an index product with Wisdom Tree a couple of years ago, right before Sam Bankman-Fried, et cetera, et cetera, et cetera. So I'm like a bad example. We have clients that are interested. Those are the clients who we allocate to the index product. So last year was a good year. The year before was terrible. But we don't like go out and say, you should do this. Right. We have a solution if people want to do it. And our solution, of course, is passive. It's an index. It's tax efficient, but like we're not running around screaming.
There's no one size fits all. Gotcha.
No, some clients shouldn't, and some clients should, and it's
All right. Right now, we got to get to the headlines with Pippa Stevens. Pippa, good afternoon.
Hey, Frank. GOP Senator Tom Tillis introduced a bill today that would give the Supreme Court the sole ability to decide candidate eligibility based on the 14th Amendment.
All right, guys. So
It
what I'm
comes as
thinking.
former President Trump
if you were watching that, I'm sorry. So there's two things I'm thinking here.
The 71-year-old Belichick said this afternoon he will always be a Patriot. Frank, back to you.
Man, okay, so I was thinking it was going to do it there. So what I'm thinking is if we can get the S&Ps, right? See, I don't know if it's going to break this trend line. We could get a pop and bring in some liquidity. This resistance level up here at 474.38 area. All right, so right around pretty much VWAP. It's tough because it looks like we're going to jump right to 474 now. Here we go. We're going to go to 474. We've been hanging out. We couldn't catch a bid. We've been hanging out here for a little bit. We tried to break below that level, but I want to, I don't know if we're going to get a gap up, gap down. I don't want to waste my time with this position. I need to just, listen, again, I did not mean to get into that position. So, now it's like, how do I manage it the best that I can? I have no idea. I can't even believe that I was in it. Right? I can't believe that I got in it. I don't know how I did. I didn't think I was that far in the order that if something happened that I was in it, but I am in it. And I'm not worried about it because I have a lot of time on this thing. Like, not a lot, but a decent amount of time. I have a decent amount of time on this thing. So, if we can just break this level, 473, I would like to try and ride it on down to here, but I don't know if that's going to happen. 470, 450 to 471. All right, that's where I'm looking. That's where I would like to be able to take it to. Now, like you can see here, like this is nice because it looks like we're making this resistance. Let's see if we can get some sellers to step up here. Let's see if we can get some sellers to step up to break this level. It's like they're just not showing up. All right, they're not showing up. Unfortunately. I also need, what I also came on here to say was, too, that I'm going to go ahead and look around for some trades to start trying to get something together for us. I was really upset that I didn't just go ahead and take this, playing around with Tiger Woods and crushing a drive.
Obviously has been pretty disappointing over the last several years, but I think if we look at what this year is likely to bring, we think that the overall losses will probably be lessened as the year goes on, given the company's focus more on profitability. We're also going to overlap the actor strike from last year, which should be a positive. So we think there are some reasons to be constructive about the stock. We're sticking with it because of the strong media franchise that's just second to none, and expect to have and hope that investors will revisit the name, just given what we think is likely to be some improvement in overall sentiment this year.
So here's why I'm hanging on, but like to this, right? It feels to me like there it goes. Like it's going to like here within the time frame. It's not breaking out to the upside or downside. Like that's a nice little test here, but it's just it's just something else. I don't know. I wouldn't have a problem, like, after watching this, like, entering in the 29, 28 area. Like, I wouldn't even be in this trade if I accidentally didn't get in. You know, that's a nice bounce off the 20-day moving average on the daily. All right, that's a nice 20-day moving average bounce. I still feel like we need to pull back. Like I think we need a pullback, right? And I think we can get it. It's just, see, this is what I like. Are you guys noticing now that, like, you know, you see like a bit of strength and whatnot, and it doesn't go higher. Like, it does not try to go to VWAP off of these levels. It's grounded here. Then it gets to a point where it's just like, bang, big volume comes in, and it starts going to the downside. The consolidation is okay, because if it consolidates, it'll help pull VWAP down on the 15-minute chart. It'll help, you know, we're still there with that VWAP. It may bounce here. It may start to bounce higher. And that sucks. It's a shame. It's my own fault. You know, I should have never entered it, but I didn't mean to. I didn't mean to enter it. So I still feel good about the trade. I still feel really good. And we had a really good trade coming into it already too. So it's like, you know, those four, what were we in? 472s for tomorrow at 40 or 50 cents. We ticked the bottom of those. They should be up $1.30, $1.50. They're probably around $1 now for tomorrow. For tomorrow, what did we say? 472 puts. There's the bounce. There's the bounce. God damn it.
Is trying to play catch up. And so what's happening is, I think this is ultimately very positive for Tesla. Because as the economy slows, we'll go through the cycle. I guarantee you that the other big U.S. automakers will stop.
Yeah, 472s. That's what it was. It was a 472. 472. Wait, that's January 11th. Yeah. Hold up. Yeah, 75 now, so still they were up $1.30. If you didn't, that's why I said, if you guys weren't taking profits at $1.30 from 50 cents, what you doing, bro? You damn near 200%. All right. I don't want more money out. I'm gonna scan the markets. I'm just gonna leave this trade on and be okay with it. Whatever happens, happens. Again, I did not mean to enter at this price. This is about where I wanted it. I'm going to be honest with you guys. Like, I would have liked to have gotten a lower high, like right here at the 15-minute VWAP, right? This is a resistance, 474.50. And I thought about getting the 475, 474 calls, but I didn't want to pay that for them. You know, maybe if we bounce back, we pull it back to 473.50, maybe I'll take it. Let's see. I'll wait and try and do it this afternoon. Things will be cheaper, and I'll be able to spend less to make more, if I'm right. Okay, and I'll also lose less because I'm spending less, but I'm able to make more, and I'll show you guys later on why that is. There's so much about trading that I think that there's so much that goes on there. It's like, there's probably even more that I don't know about, but even a lot of the stuff that I see and I know, I don't know if a lot of you guys even know about it. You know, I really don't think you guys have seen some of the stuff that takes place, you know, unless you have, you know, I don't know, you know, either you have to be told or you have to witness it. But you have to know what it is that you're looking for to even see it, because it could happen right in front of you and you not even realize it. So right now the market's just pulled back 0.5%. Yeah, I want to see if this weakness remains. I'm kind of like debating whether or not to take my limit order out. Alright, I'm debating whether or not to take my limit order out. Right here, I do not want to see the SPY get past. I would like to start seeing a rejection here on the SPY. But it ain't going to. She's just going to go higher and higher and higher and higher. 475. 475. You know what? It may give us a 476 test, guys. Let me see something. Let me see if I can get that. I'll spend it. But I gotta buy it at the low again. I'm not buying it at the low.
Top contrarian ideas for 2024. Brenda, it's your turn, and you're saying head on REITs. Give us the reason why. REITs.
Now, this is a dangerous play here. This is a dangerous play.
Commercial office space is actually a pretty small part of the overall investable universe for REITs. And then, of course, we have just REITs in general, where many of these are levered companies, and they have to refinance at much higher rates. But when we look out going forward with rates coming down, we think there's a more compelling a story here for not only the return and yield that they provide, but also for a better outlook in terms of fundamentals with rates coming down, with the economy still remaining relatively healthy. Sentiment, as I mentioned, was
Dude, I'm getting slaughtered on these things.
small piece of the overall market here. So we think there is opportunity in this part of the market.
So you're saying it's more than a dividend given at a 4%. You're saying it's beyond that.
I think it's beyond that. If we look at sentiment over the last year, it was not only the high interest rate environment, but also real legitimate concerns over commercial real estate, particularly in office. In the office space, if you look at the broad REIT universe, it's only about 4%. So it's pretty tiny. It's not the REIT universe overall, but I think it's all been wrapped up with that concern.
CNBC contrarian pick is REITs, Vanguard Real Estate, DNQ.
And later, we're going beyond the banks. The setup on the two other key names reported this week. Much more halftime coming up right after this.
Now, what I'm looking to do here is see if I can catch a little bit of a bounce to help pay for my accidental entry in my 2-week outputs.
You can help with that too, with the advanced connectivity and intelligence of global secure networking from Comcast Business. It's not just possible.
You know, because it could take us up until tomorrow to reject 475.50, and I mean that's what I told myself, that if it's not there, that's not where I'm shorting, right? I want to be able to get a short up at these levels, right? Even the high, because we could sit here and reverse it, flip it and reverse it. What's up? How you doing? How you doing today? Oh man, this sucks. I know. I'm just trying to get that cake. So 475, 476. It's a 20 cent, 18 cent delta. 18 cent delta. So let's do this. Let's figure out exactly what we got going on.
What is N? It's a variable. A symbol of flexibility.
So if I get this pullback here, Not sure if it's going to give it to me because it looks like it's going to break right now. But if I get a pullback, like something like this, I'm going to look for the break to try and take this thing a bit higher. So if I'm looking at the 476 calls for today, now I got on the other side of this trade, I have a January 20th 460 put with a lot lower delta. 18 cents right now. Let's see, 18 cents. 18 cents. 73. So here we go. We got a whole dollar we're working with. So at 20. So we could get a 50% if we just get from here. If we go from here to about VWAP, which you might have some trouble. We may have trouble right here. Appreciate it. Appreciate you showing up. All right, that's going to give you a 50% profit on a 50-cent move or 75-cent move. You should be able to knock out 50%. All right, if you don't know how to do these things, you should learn them. Actually, it's looking like you might right now. If you were to enter these now and it works, you're going to get 75%. If not, you're going to get 100% on these. Let's watch. 22. Say we entered right now, 22 cents, right? Let's watch and see what it does when it gets up here. If it gets there. Now the thing is I'm also watching. I'm watching my my longer dated puts, and again I'm trying to back it up. Trying to back them up. I did not mean to enter those. So now you're at 26. You are working a little bit further. See, it's going to pull back on you, and that would be the entry. And I think I'm going to do that. See if it pulls back here. See if it pulls back. And I'll probably take these because now I'm going to get them at a cheaper price and still have that higher delta. You know, I kind of want to wait until the end of the day because as that time premium starts to get, you start having 10, 20, half hour, you know, you're going to start to notice that you can spend less to make triple. And I have to show you that way at the end of the day. You know, these are a lot of things that I think a lot of you guys don't see. There's some helicopters above. A few of them. Volatility is getting crushed here, so I'm going to just scan these markets. If we do get a pullback, but you're going to watch these premiums get killed. This is why I want to wait until the end of the day when you have volume. You don't really want to do this on lunchtime because you're not going to have that extension. You're not going to get the volume to back this thing up. Let me see where, dude. I need to get rid of these. Oh no, you know what? Yeah, I need to get rid of these. No, I'm gonna wait until tomorrow. I'm gonna wait until tomorrow. It's my psychology. I'm gonna wait until tomorrow. I have a limit order. I'm so pissed that I got in these. I did not mean to get these. It's so frustrating. No, I don't want 128.
The street clearly doesn't believe that. It's at $6.50.
No.
What you're looking for Delta tomorrow is a confirmation that they're still on track for $7 a share. And that really comes down to demand. If you look at TSA passenger throughput, clearly the demand is there. Obviously, costs will play in, but jet fuel's been coming down with the price of crude oil. So I think this sets up well for the street to kind of come around to the fact that Delta's doing a lot better than it expected.
Still not enough?
Comes down to medical reimbursement costs. Those have been trending higher. There's some noise this week from CVS that their medical reimbursements have gone up a little bit. So you want to hear tomorrow what the projection is in 2024 for medical claim reimbursements.
All right, two things to watch right there.
God damn it. You gotta be kidding me, man. Like, you gotta be kidding me. You gotta be fucking kidding me. I'm so pissed that I'm in these. Like, I don't even know how I got into it. I don't even know how I got into them. I had the order up, and I guess I accidentally hit it. You know, the thing is I still think there is a lot of weakness here. I would just much rather be in it up at, like, these prices where it's at right now. Right? I know they've been cut in half and then enter them. And I'm looking at, you know, close to 100% gain while somebody else is down half of a, you know, on half the position and has to have 100% move to break even. So let's keep it weak. Let's keep it weak. 0.5%. 0.5%. That lower high is getting ready to come into play. And that's what we were looking for. And that's why I did not want to enter those options at that time. I should have immediately got out, and I thought about it, but I still think we could work ourselves up here to 475. As crazy as it sounds.
Your skin is ever changing. Take care of it with Gold Bond's healing formulations of 7 moisturizers and 3 vitamins for all your skins. Gold Bond.
SNOA, Sonoma, pharmaceuticals hitting a spike in volume here, hitting high. Penny stock up about 10%. Then you remember Oscar Alpha.
475. 475, 475, 475, 475, 475, 475, 475. Dude, Google's still tanking. I love it. Fuck. Come on, let's go. Send that son of a bitch down. 140. Fuck, man. There's no way I'm going to get this trade off. Wouldn't it be something if I was able to get rid of that Google trade? So, I'm still holding a Google short. Now, the thing is with Google is I took a long on Apple. So, Apple pretty much paid for that and gave me a little bit of profit. But I still have the puts. All right, I still have the puts. Because when we took off, you know, that trade was kind of like, you know, I felt like Google, like, look, you still have this 50-day, you still have this whole area down here that, and to me, it feels like it should have already been tested, and it hasn't. It just broke out from that area. You know, where is your liquidity grab at 135, you know, in between 135 to 136, that 50-day moving average? Right? If this thing's going to go off to new highs, you should at least know that you have support below at the 50-day. Am I wrong? So, and when I took it as a day trade, I don't know. I just felt very confident that I would be able to, like, if it didn't work out, like here, 142, like, say, really nice, could be a nice support level. 141, I'm sorry, 141. You have your daily 9 EMA. So possibly, you know, you get a bounce and a overhead resistance, and you start seeing it try to bounce, and it's rejecting 142.85-ish. Then you could probably take this thing short down to the daily trade line at 141. That's what I would look for. And they were so strong this week. I gotta figure out what it is that I'm doing wrong. I kind of see what I'm doing wrong, but I can't say that. I can't talk like that because we just had damn near 200% trade on the SPY. So this whole, like, getting into this longer term SPY put is kind of just frustrating me because I didn't get my entry. So to just see what kind of dislocation from a net premium or discount to NAV many of these funds have with regard to Bitcoin prices and their holdings. It's something to watch for sure in the coming days. I'll send things back over to you.
I totally agree. Fees, flows, all of it. Dom, thanks very much. Dom Chu. Today's hotter than expected inflation number spooking the markets a little bit as some investors think any rate cuts from the Fed might be a little further down the road. Steve Leisman is here with more. How much should we make of this, Steve?
Well, I think it's a good lesson, Kelly. The Fed has been trying to say for
and a quarter percent and 420. But Kelly, it will be very interesting over the coming days and weeks to just see what kind of dislocation from a net premium or discount to NAV many of these funds have with regard to Bitcoin prices and their holdings. It's something to watch for sure in the coming days. I'll send things back over to you.
I totally agree. Fees, flows, all of it. Dom, thanks very much. Dom Chu. Today's hotter than expected inflation number spooking the markets a little bit as some investors think any rate cuts from the Fed might be a little further down the road. Steve Leisman is here with more. How much should we make of this, Steve?
Well, I think it's a good lesson, Kelly. The Fed has been trying to say for several weeks now that the inflation numbers are not going to be coming as expected. Now the data is backing them up. The question is whether the markets are indeed listening. The message from the data, I think, is this. Yes, inflation is probably still cooling, but no, it doesn't happen in a straight line. And you just can't price the imperfect to perfection. Here's the data, month-on-month 0.3 for the headline number. That's up from 0.1. Pushing up the year over year to 3.4 from 3.1. The core coming in unchanged 0.3. Base effects help it decline to 3.9%, but still sticky at levels the Fed is uncomfortable with. Couple surprises in there. Energy had been negative. Now it's positive with electricity up 1.3%. Used cars, all the other data we have shows should be negative. And there's that shelter component, just won't go down, even though the other data we have, if you're bullish on inflation, that's your ace in the hole right there. And airline fares also reversing a series of declines, up 1%. Trouble for the Fed is that inflation progress looks to have stalled, certainly on the headline, which you can see there. It's gone a bit sideways. That's your blue line there. But also in the core, that's the orange line, where the downward slope is no longer as steep as it has been. Mike Ferroli from JP Morgan writing, with all the key data now in hand, it's hard to see how the January FOMC meeting would result in guidance to ease at the subsequent meeting in March. But the market still continues to price a 67% probability of a rate cut come March, just unwilling to give up that ghost for the moment. It's down just from 71% before the numbers. The next great hope for the inflation dove comes tomorrow. Get the producer price index. It has been more muted, suggested little price pressure from the wholesalers. That should help flatter the Fed's preferred indicator, the PCE price index. But Kelly, we got to wait till January 26th for that one.
All right. Steve, stay with us, if you will. Busy little while here. We've got a 30-year bond auction. Rick Santelli tracking that action at the CME. We've had some squishy auction results so far this year. Rick, how'd this one go?
You know, it's squishy in an average sort of way. So this is a reopened 30. The original issue was created in November. We've added to it now for the second time. 21 billion reopened 30-year bonds. The yield, 4.229. Pretty much right on top of the when issued market at 4.23%. And if you look at all the metrics, they're basically very
All right, so
close
there.
to
This
10
is the
auction
entry that I
average.
fucking
So
want for
close
this
to
thing,
10
man.
auction average,
Right
and
here.
it priced
All
right
right, and
where
it
it's
looks like we're
supposed
gonna
to.
work ourselves
There's your
up to
plus.
it.
I gave it a C plus.
Excuse
Charlie
my
plus,
French.
a little better than average, but
Excuse
as you
my
pointed
lingo.
out, if we compare this to some
God,
of the auctions in
I
Europe
can't
or
believe
some of the,
this, man. I
auctions
cannot fucking
specifically in the
believe
UK, Spain,
that I am really
Europe
in these
general,
fucking things right
we
now.
can't keep up with it. Their bid to covers are off the charts. The demand
I
is
still have
soaring.
faith in them,
Seems as though
but
Europe is really convinced that, you know, probably they're in a recession. Germany is, and they're going to keep easing. Here, well, let's look at it this way. You see an intraday chart, yields move down a bit. They seem to agree with the C+. You look at a 1 month chart. Well, 1 month chart, Kelly, we're at basically 1 month highs. Should we close 30-year bonds here? But maybe the most interesting thing of all,
I don't know why the hell y'all were worried about a
CPI,
bond auction.
about
Like
the
the last
expensive
time, what's funny
situation
about
on
all
the
this
long
is
end
the
of the
fact
market.
that
Well,
the bond auction last time had to do with the Treasury General's Treasury General account. All right, so that's why last times matter, and then the one after that was just, you know, expectations because of what they saw the last time. But anyway, I don't know. You know, you got your bond auction. There it is, 4.2. Right. Just look at the chart, you know, and if you know how to read a chart, you should be able to see where it's going, or have an idea. Is this okay? It is. All right. All right. 475. So here we go. 475 could be the area that we start to see an increase in the pullback. Let's see.
history. The Fed back in the 80s wasn't aggressive enough as it needed to be on inflation. Then we had a big inflation problem after. So I think if anything, they're going to wait until they see some real data that inflation's been beaten and maybe there's some deterioration in the economy for a rationale to really cut rates.
And Guy, meanwhile, you think March could be significant for quantitative easing purposes. You think they're going to end the program that soon?
Yeah, so I think it's certainly going to pave the way to end the program as soon as March. Last weekend, Lori Logan, head of the Dallas Fed and former head of the New York Open Markets Desk, talked about the level of banking reserves in the system reaching or approaching or heading towards what the Fed calls the lowest comfortable level of reserves. And this isn't a big deal. It's not a big problem. However, as the Fed shrinks the balance sheet, among other things, banking reserves in the system decline. And at some point, the Fed is going to have to stop doing that in order to ensure there's sufficient reserves. Our best guess, and it's frankly a very simplistic analysis because nobody knows with much confidence, our best guess is that the economy will hit the lowest comfortable level of reserves sometime between April and May of this year. Now, in March, if the Fed slows the pace at QT, they could make sure that staves off a little bit further and there's no short-term accidents in money markets. So that seems like an attractive thing for policymakers to do. It looks from the outside like they're easing, but in reality, it's just a technical adjustment.
But more and more people, Michael, are saying, wouldn't it be convenient, hey, we don't want a banking crisis, but also it would help us be able to still buy some treasuries and maybe keep that long end from spiking like we were talking about?
Yeah, absolutely. I think the market has wanted to see the Fed cut rates because they want that juice back. And unlike Europe, which I think is definitely in a recession, we're kind of teetering. And so I think, again, the Fed's going to be more slower. Obviously, what Guy's talking about with the Treasury is a little bit different. They're going to do some different things because they've got a couple different arrows in their quiver. But I think when you look at it, I think the Fed is itself on hold. I think growth's going to be hard to find. And in the parts of the stock market that growth can be found, you're going to have to pay for those. And there's some areas that I think are going to continue to do well. But growth is going to be harder and harder to find as we all slow globally.
All right, gentlemen, thank you. We appreciate it today. Michael Landsberg and Guy Labat. Let's get back to the CPI data, dive a little bit deeper into what they're telling us about the economy with Jared Bernstein, who is chair of the Council of Economic Advisors. Our Steve Leisman is back with us as well. Jared, thanks for taking the time. I know you've been held up with the president. Anything you want to share from that discussion?
No, thank you.
Well, thank you for joining us. And what would you like to share about the CPI report, the economy, inflation? Should the Fed cut? The floor is yours.
Yeah, well, thank you. I mean, I will tell you one thing we talked about with the president was this idea that you weren't going to get inflation down as much as has occurred. You wouldn't get as much disinflation as we've seen without considerably higher unemployment. As you and Steve well know, many economists were arguing that had to be the case, while in fact we've seen quite persistent disinflation in CPI core, headline, PCE, very much so, without giving up really much of anything on the unemployment rate. Now, look, from the president's perspective, he's happy to hear me talk about macroeconomics, but he really wants to know how is this sitting with families like the one he grew up in. So the important point, I think, for him and for working American families is that this combination of lower inflation while maintaining tight job markets is delivering real wage gains. We've seen that persistently. It's been a trend, not a blip. We saw it in this morning's data with real wages up about 1% year over year, higher than their pre-pandemic level.
The challenge, Jared, actually seems to lie, and this is kind of fascinating because you could see maybe some political rhetoric about it. I don't know.
I'm going to try to get along up to yesterday's close. All right, I'm going to look for yesterday's close grind.
Airfares, TVs, used cars over the last year, although they ticked up again.
And that's up there, so I don't think we have an issue getting there. We might, but I don't see why we can't test it. That's at 476.50. So if you took that, guys, if you were able to take that 478 at 20 cents, you're already up 50% right now. You're up 50%. You know, depending on where you got filled at. I don't know where it was on that pullback. See, I'm not spending $30 a contract. Even though I could get there, think I could get there, I need a pullback. I need a pullback. And I think you'll get it. Let's pull up a 15-minute chart. This is crazy. This is absolutely nuts. Absolutely nuts. Of course, we're going to get this move, and it looked like it was going to be one of those days.
These are actions that this president has legislated. Lowering the cost of insulin, lowering the cost of prescription drugs, lowering the cost of healthcare coverage. You know, it's not an accident that something like 20 million people and counting joined the...
I had such a weird dream last night. I was so tired yesterday. And I had the weirdest fucking dream. Not that, like, they're ever not weird, but, you know.
So I do think that macroeconomically, at least, that's the key indicator there.
Jared, where would we... Oh, go ahead, Steve. Yeah, go ahead.
I was going to see if I could get...
So, if we pull back here, you got a really nice reverse head and shoulders getting ready to be put in. We'll see. Let me look on a 5-minute. People ask me...
Do you think we will have the workers, or when you
Oh,
look at
wow.
what's happening with the unemployment rate, it has stayed low. There's not a lot of slack there. Will we have the workers to...
What's up, bro? Yeah, I took a couple trades today. I'm in one right now. I'm not happy that I'm in it. I didn't mean to get in it. I had the order up, and as I'm like watching my charts, not sure when, but I got filled. Yep, drowning my sorrows in a cotton candy. No, it's not. I'm not bad day today. We had the tomorrow, which they're probably down now, but I took the tomorrow 472 puts, and we got these in at 50 cents a contract. They went up to about $1.50, so about 200%, just under 200%. And then I was looking at some of these like a January 20th SPY put that I'm still in right now. I didn't mean to get into it though. This whole morning I said I wanted to wait for this area up here, you know. So we'll see if this still sticks. We'll see if this sticks, because I wouldn't mind being able to get out of this trade.
Yeah. Jared, when it comes to making a deal on the budget, are you optimistic here that we'll be able to keep the government from being shut down? What is your latest read of what's happening right now?
How about yourself? How'd you do today?
I'm optimistic. I don't want to get into ongoing negotiations. Let's give them the space that they need. I think when...
Oh my God. Are you kidding me?
On the top lines for the 12 appropriations bill, that takes the probability of a shutdown way down, but it's not over till it's over.
So yeah, that was a nice winning trade. Was the 472 put for tomorrow. And that went from, you had like, we hit the low on those. Right after we entered, bang, they just shot. Right here, actually, as a matter of fact. This is literally right where we entered, right there. Right there on that candle. That's where we entered. And they went to just under 200%. They probably hit 200%, but I didn't. I had enough. I'm like, I'm good. I'm Gucci. I'm good. I don't know what is going on with this chain. We got a whole lot going on here. Yeah, next Friday puts. So I'm going to go scan the markets and see if I can come up with something. Well, I put one on. Again, I didn't mean to take it. I had the order up and I was waiting, like I just had it up and was waiting for a bounce to get in it. And I bought the low. I think I bought the low. Like I said, the reason I have the order up is so I don't have to play around with like as like we're pulling up into an area and it's rising, bang. As it's getting into that area, I just had the order. I just had it up, and I guess I hit it. So, not I guess. I know I hit it. So, I'm in them, and they're down about 50%. About. So, I think we could get there. I think even if I just get halfway there, because I still think we could, like, pull it back a bit. It's just, I don't know. Now I'm questioning life, Like, this area still needs to be tested. Like, in order for us to move higher, we need to pull it back in here. All right, what is that, 460? This is the Fed day. We came down, tested that. We pulled back. I mean, give me 470. I'd be cool with that. All right, 470. Really, 469? 469 would be cool. So, we'll see what happens. We were making good progress to the downside, and then I don't know what happened. We just, we're just going to put in a lower high longer term, I would imagine. We don't have anything major tomorrow. Or we just go straight right back to the upside. But I am noticing some of these names from yesterday that we were talking about, or we've been talking about these all week. Google, Microsoft, strong as hell. They're actually pulling back. So, if for some odd reason we get like a nice big gap down or something happens, I still have those puts on Google, but they're paid for. That Apple long paid for those. So, I'm not worried about it. That's why I haven't sold them. 2. Banks. We have earnings tomorrow. I feel like I messed myself up. I got up early this morning at like 4:30, 5 o'clock. And I was like up and I was kind of just chilling. And I fell back asleep, unfortunately. And I was kind of pissed because my alarm didn't go off. And I think we pulled back today because of the jobs number. Really, even if it's not because of the data, it just, damn, we did get to that level. I feel like we have a lot of take profit up here on the SPY. I tried Tesla. I tried to get in. That was another one. That was a really nice trade below the 200-day moving average. That was a really nice trade. I tried to take that, but she never gave me the entry. And I said it on the stream. I'm like, this is a part of trading. Like if you're gonna go chase a move, and it reverses, and you're down in red, and you're the type that looks at your account, and even if you don't look at your account, right? This was where I wanted to enter, and I was watching it, waiting for the bounce, and like just giving it the little bit that it needed. And I forget, I was looking at another name, and I turned back around, and she already broke the low a day. But we tried. Like right now, you might get the second leg if it's going to give it to you. It might give it to you. If it's going to go lower, you're down 3% now. If it's going to be one of those days. Here's the thing. I'm not sure if it'll do it because the past 2 to 3 days that it's been pulling back, it's not giving anybody any type of follow through. It's not like you got to be on the trade in the morning, catch that move to the downside, and then just get out because then it's been chopping around like yesterday. Like we said here, we look for it to go right back to the high of day and just trading sideways. So, but yeah, so that's Tesla. SPY, I'm really curious if we get back to yesterday's close. That's the other. Now you're starting to get like some like decent volume on the buy side for a lunchtime breakout. It's already 1:30. Today is going by so fast. Fuck. What's Meta doing? Tomorrow, I want to be ready for these moves. Like, there's so much opportunity in these markets, and I feel like I started this week off on the wrong foot, and I'm not going to end it off on the wrong foot. Microsoft, Google, two of the strongest names, along with Meta, but Meta just took off like out of nowhere, right? This was just like boop, but still strong, still trending to the upside. I should have been long Google. I should have been long Google.
So if you just sit there and say, I'm not touching it, I think it's a 10-year thing, they hold it for you, but they don't make money. They make money when there's volatility. And this is exactly what's going away starting today.
And we've already seen the shares reset since the end of December. How much further downside do you think there could be?
I have a $4 price target, so I see, is ample a good word? I see ample downside from here, a lot of downside.
So this guy's talking about the volatility in Bitcoin. And he's talking about how it's going away today or something.
Exactly what's going on. That's part of the appeal of Bitcoin is kind of its decentralized nature and not owning an ETF to own it by proxy. Can't Coinbase do okay if people just continue to hold it on their platform?
And that's a great question. They only make money when you trade in and out. So if you just sit there and say, I'm not touching it, I think it's a 10-year thing, they hold it for you, but they don't make money. They make money when there's volatility. And this is exactly what's going away starting today.
And we've already seen the shares reset since the end of December. How much further downside do you think there could be?
I have a $54 price target, so I see, is ample a good word? I see ample downside.
I'm going to go wash my hands. I'll be right back.
Even though they're probably the pure play, would you extend that to any other parts of the fintech world that have previously benefited from kind of the fees they can charge for crypto trading?
Actually, I see the opposite for Robinhood, for example. We talk a lot about Robinhood. So Robinhood can actually benefit from trading the ETF, right? So a lot of people are going to come to Robinhood to trade those ETF. So what's better to be the custodian or the guy that benefits from actually trading the ETF? That's why there's beneficiaries of that trend as well.
It's a great point, Mike. A quick final question then. If
Yeah,
I'm
of course.
Brian Armstrong, do I say, hey, we're going to allow crypto ETF trading on our platform too?
They should. They should.
Dan, thanks for joining us today. We appreciate it. Dan Dolev from Mizuho. Meantime, a major player in the AI space is on Capitol Hill today. Emily Wilkins brings us those details. Emily?
Hey, Kelly. So as we speak, Speaker Mike Johnson and OpenAI Sam Altman are meeting together. This is obviously not the first time that the two have met. Sam Altman has been a pretty constant presence on Capitol Hill. And he told me today, right before the meeting, I just caught up with him for a minute, and he said that he's here to answer some questions that Johnson and other lawmakers might have. And the big topic has been election integrity. Despite the fact that there's a lot of stuff that's stalled in Congress, the elections are coming.
Let's see here. Spy's getting ready to bounce, or it's gonna drop. Drop it like it's hot. Drop it like it's hot. Come on, gotta talk to it like a plant. Talk to it. We could be putting in somewhat of a reverse head and shoulders here, kind of. It's hard to say. Man, I don't know. Man, this sucks because we are somewhat in a bull market, so you want to watch out for intraday bull patterns. Okay, cup and handles, reverse head and shoulders, and the S&Ps are kind of putting in something like that. Apple may start to roll over. Let's see here, UNH. Let's look at the overall market. So, healthcare is green, barely green. JP Morgan is red. Oxy, where I should look at like XOM. Oxy's getting ready to go red. Trying to. It's working its way down there. Yeah, Exxon's red. Nvidia is popped all the way up, back up there at highs. Holy shit. Man. The SPY might try to hold this area. Again, I'm not blind to a test of yesterday's close. Alright, yesterday's close. We could test it. AMD is up at that area where we were talking about. No, we said this area, 149. We wanted 149 to get short. If we were going to take it. 149 to 150. That's what I wrote down. So I'm not doing that until we get there.
Diversify into Bitcoin? Type GBTC into your investment account today, or ask your financial advisor.
So JP Morgan, we did healthcare, banks, tech. We pretty much covered the markets, kind of. There. So Microsoft's starting to catch a bid. I think I'm going to write down the next time I see that relative strength, relative weakness, I need to hop on it. There were so many good trades this week that I missed. Right? Not a bad week, not a good week. My week is going to be about break even. Right? My week is about break even. And like I said yesterday, that if we can get these markets to pull back, that will send Boeing down. Right? I think the Dow was trying to hold itself up a little bit. You had upgrades on CRM and stuff like that, so that's kind of holding the Dow up. It is red, but it's barely red. It's getting ready to turn green. So look at the SPY and see if we can't. I'm looking at that 476. I'm telling you right now. I know I'm fucking down on these puts, but it's not going to take me much. If I can just squeak out one trade green is going to pay for these puts. Because I don't have a lot of shares. Or I don't have a lot of contracts on it. Alright, and that's for 2 weeks out. Or not this week, next week, I should say. And you get listen, man. You guys can get those contracts right now, half off. Literally, I'm gonna need 100% move to get break even. Well, not really 100% move. Like, I need about 10 cents. All right, I need 10 cents. So yeah, technically, this option's going to have to go 100% for me to break even. So tell me if that's a good deal or not. You know, just keep an eye on it. Right, keep an eye on it. If the SPY does get to an area of resistance, you know, maybe you make 100% or 75%, and I break even. I'm gonna go wash my hands real quick.
Boeing after a door plug broke off that Alaska Airlines plane mid-flight last week. The agency said it was Boeing's responsibility to meet the high safety standard required of its manufacturing process. And Sam's Club will now use AI to check receipts at the exit instead of those familiar employees that it and Costco have employed. The program will roll out nationwide, but it won't mean the greeters lose their jobs. Sam says they will instead be able to refocus their time on helping customers. Kelly, back to you.
All right. Tyler, thanks. I'll see you soon. Tyler Matheson. Coming up, my next guest has a front row seat to the crisis in the Red Sea. He works with more than half of the top 20 global retailers and says this disruption has the potential to be as challenging as the pandemic. We'll ask him why after the break.
Alright, we need to start spitting out some fucking excellence here. Alright. I'm ready to like try and make the most money I've ever made this year. I want to make the most money I've ever made in a day. You know, that's the attitude that I've been trying to come in with. And I feel like I could be doing a better job. Alright, I'm only human, but that's not an excuse. Just because I'm human doesn't mean I can't kill it. So let's go through here and see some of these names that we can look at. It's 1 o'clock. If you guys have any ideas, if you guys want to throw them in the chat, I'll go over them. If you guys see anything with some relative strength, relative weakness, just holler at your boy. CRM getting ready to go red, getting ready to go green, high a day. Feel like Nvidia. I might get rid of these. There's Nvidia climbing. So Q's. Let me see here. Nvidia.
Seizing an American oil tanker off the coast of Oman today, extending the Red Sea shipping disruptions beyond commercial cargo, and it's just the latest in a series of conflicts that have pushed up global shipping prices. They've nearly doubled to almost $3,100 since late November, according to UK.
Another name we were watching was IWM. It just isn't giving you the follow through though. Or I'm not sure if it did or not. Look at Costco here, guys. This could be a. If we get a breakdown, this could be a nice trade. It could be. Doesn't mean that it will be. Because I'm seeing both sides to this trade here. Alright, so you got a double top, pivot high, bang, take the long. Or you're getting ready to bump.
Welcome back. Iran seizing an off the coast of Oman today, extending the Red Sea shipping disruption.
Or we're going to get a bounce. So yeah, we're going to bounce off this double top here. It's a nice pattern here.
UK-based jewelry shipping, and with no real end in sight to these conflicts, which could now stretch on longer than previously thought.
I mean, I guess you would call that, now that I'm looking at it, it's like, is it a double top? Excuse me.
For more let's bring in Jonathan Kohlhauer. He's Managing Director of Global Operations and Supply Chain Practice at UST. Jonathan, welcome. How bad is it?
And I'm looking at resistance also, though, right here at 672. So 672.
How long is this going to last?
Let's go look at a 5-minute chart.
So I think that it's just got lots of challenges to it.
How realistic is it, though, to ask people to build up supplies here? A lot of this still affecting cargoes, for instance, going from Asia to where?
Yeah, Asia to North America, Asia to Europe. It's interesting because not long after the pandemic, when
White House is
became
Brainerd said
available
White
again,
House
we
has
saw a
put
real spike.
forward proposals for first-time home buyers.
Retail were up about 28%.
Oh, a nice proposal for first-time home buyers. Okay. And what is that proposal?
Hopefully that's going to give retailers some
What is that proposal? A 40-year mortgage?
They're looking for their summer peak season.
5% down, not 20%.
I just want to make sure that that doesn't.
Wonder what that is.
Yeah, it seems like this could get worse. At least oil prices have not.
So everybody getting houses.
And I suppose
Everybody gonna get a house.
People go, well, if we made it through that, we can certainly make it through this.
Yeah, I hope not. I hope that they take.
You got student debt?
That's where I'm working with my clients.
Don't worry about it. Come on. Come on, folks. Don't worry about it.
What needs to be expedited now? And then
I'm not a good impersonator, as you can tell. But you get the drift.
because, quite frankly, the lead times are going to go from 30.
You know, when we were sitting at the dinner table, my dad, it's about integrity.
And you're telling clients to build inventory.
If you go to school, you shouldn't have to pay it off.
In Europe, and we've seen the kind of the bullwhip effect that can have. Not only is it going to raise prices, raise inventories now, but then at some point in the
All right, so that's one. That's one idea right there. Right? I feel like you break up above here and you start holding it as support, then you could probably look to go out to new highs. It's not. It's a bit oversold. It's a bit oversold.
we also have seen retailers like
But again, I will repeat, in a bull market, you know, things just remain oversold. So, damn, weekly chart way oversold. All right, I'm going to keep my eye on it, and maybe this is the start of a pullback. Let's go look at the IWM.
Absolutely critical when you're building a product and it relies on a component that's coming, out of Asia.
This was the area, 193.50.
And that's pretty much everything. I mean, if for all the intent of shifting the supply chain coming out of COVID,
I'm sorry, 196.
largely
196. That was the area. 196, 197.
To my knowledge, heard anything on that front.
They took it from us a bit pre-market, but it's all good. So we're trading way above the 50-day.
Around Southeast Asia with
Let me see here.
contract
I just don't know, like, so
that takes time, and that's where we are spending.
now that I'm thinking, right, like what would be our catalyst to pull back, right? What?
Brainerd said regional banking sector is much more resilient than a year ago.
Oh, well, I'm sure it is resilient than a year ago. I would assume it is. You gave them all the money they wanted. Did y'all just hear that come through? This is the Baker Hughes rig count. No, I'm just kidding. It's a joke from the other night. You guys know what I'm talking about, right? Yeah, look at this. Yeah, of course they're resilient. They've been look at the amount just since December 12th. Look how fast this has been going up. You were sitting around like, okay, we started out, right? Got all the way up to 100. Now from here, listen, this is over in about a month. The beginning of March, this is going to be no more. So about a month and a half. And now look, from 100 in just a month, really, from December, not even November. Let me slide this back because it's important. You're saying you're talking about banks being resilient. Well, I'm sure they are. You're giving them all the fucking money in the world. So pretty much from here, 113 to 150. We'll see what it's at Wednesday. Guarantee you it goes higher. Guarantee it. Maybe it flattens off, but the closer we get to this date that they got to say, all right, we're going to extend it another year, 6 months, or we're not. Again, if you guys have not watched my previous videos, please go back and watch them. This is the most important thing, because you haven't had a word about banks. You haven't heard about banks. Banks have been actually doing very well because the Fed is providing them liquidity. All right, they haven't had to worry about running low on deposits, because if they run low on deposits, they just exchange their bonds that they would normally sell for a loss. They just get it from the Fed for free, pretty much. And that's okay, but are you going to extend it? And if you're not going to extend it, where are you going to pull rates down to get that balance that the banks are going to be okay? Or are you just going to flood them with a bunch of cash so that you can like wait, so you can buy the banks time for them to get down to an appropriate level? What is that appropriate level? Is it 3.5? It's not 4.5. I'm going to tell you that right now. It's probably not 5. All right. I assure you, you still offer a 4.5, even 5 in a money market account. They're not going to put their money back in the bank. So there's got to be that area, maybe 3.5. Right. That's my in between 3.5 to 4. And I didn't think about this earlier on, but it's important. Some of these guys out there that think that they know it all will tell you, oh, they'll relate it to the Baker Hughes rig count. Well, guess what? I mean, this is an issue, because this is going to either give you that prior gap fill and give you a second, third buying opportunity, or we're just going to continue to highs. Because I'm telling you right now, you ain't going to highs until either the Fed cuts rates so that the banks are okay. But I'm telling you, if rates are still at 5%, 5.5%, I give it 3 to 6 months, and you're going to see banks right back in the news again. So you guys can think I'm crazy. That's okay. I'm telling you, that's the catalyst, because that's the catalyst that just about put in a lower high last year. But the Fed stepped up to the plate, solved the problem, and we were able to, that pullback off of that, we were able to extend higher and start making new highs of the year. So it is important. All right. I don't really pay attention to much data like the bond auction, right? Treasury general account may be different. There's going to be some volatility there, but I'm telling you, it doesn't matter what this Fed says about rates. They're not saying to you guys what's really going on and why Powell was so dovish. All right. So do they want a banking issue? They probably don't. So therefore, they'll probably extend it and won't have to bring rates down. And maybe that causes a whole nother problem. We don't know. But, I know I'm not crazy. The banks are sound and resilient. Well, yeah, I'm sure they are. Because all they got to do is say, yeah, we need X amount of dollars, and you guys give it to them. Well, I'm sure they would be. Anybody would be.
Posted its worst annual loss in 15 years, and yet the red continues, perhaps to some extent as upward pressure on rates here remains. Coming up, a rapid rundown with the Rapid Ratings CEO. From aerospace to shipping to retail, he's crunched the numbers and brings the names that are in poor financial health, along with one he calls very impressive. You're looking at it. He joins us next.
Feels like Google is not bouncing back like the others. Doesn't feel like Google is bouncing back like your Nvidia, your Microsoft, right? See, Microsoft's already at pre-market lows. Google is not there. All right, comparing it to Meta and such, it's not there. Just take a note of that.
com.
Welcome back. From trouble in the skies to the Red Sea, Rapid Ratings is taking a look at just how well the companies behind the headlines these days are actually faring. The firm's software gauges the financial health of suppliers, creditors, and customers to help indicate a company's future performance. They then assign a score on a scale of 1 to 100. 100 is little to no risk. 0 means very high risk. With that being said, let's bring in Rapid Ratings Executive Chairman James Gellert. It's great to have you back. Welcome.
It's good to be back with you.
We're going to start with the big story of kind of the month, the year so far, which is Boeing. And what's interesting to me is not to ask about Boeing, proactively now after the challenges they faced from this aircraft going back to Friday, and now the FAA is investigating. But you guys had actually spotted some issues beforehand. What do you see going on here?
Well, our ratings, the financial health rating, is an indicator of default risk over the 12-month period, but our core health score, which looks out 2 to 3 years, is evaluating how efficiently a company is run and how well it's positioned to withstand shocks. And if you look at those two things together, it's a dynamic that doesn't paint a pretty good picture for Boeing. They've been declining in ratings since 2019.
Which was when the stock price and the market cap peaked, by the way.
Exactly. And they currently have a financial health rating of 35
Tell 'em.
with a core health score of 18. Now, to put that in perspective, over the last 20 years, over 90% of companies that have failed have been at 40 and below.
Wow.
Now, that isn't saying Boeing is about to fail. And certainly if a company is going to get government support or is going
It seems unimaginable we'd even be
It does.
talking about any kind of default risk here.
It does, particularly in this market environment where it was just a few years ago that they came to market and raised $25 billion in one shot.
Wow.
So a lot of the Boeing story is the same story that we see throughout the market for public and private companies, that companies have been able to sustain themselves with relatively easy and very cheap access to capital up until now. And Boeing is a great example of a company that has been able to sustain itself that way.
And by the way, I mentioned the FAA is now investigating that incident. Boeing itself is out with a statement saying we will cooperate fully and transparently with the FAA and the NTSB on their investigations. Anything
Man, this is
further you would add here? So
bullshit.
what should investors?
It's fucking bullshit, man. I shouldn't even be in this fucking position right now. I shouldn't even be in it. Shouldn't even be in it. Low volume bounce. This is hilarious. Part of me wants to hold it because we could come in with a nice gap down, or we could come in with a huge gap up. This is bullshit, man. Fucking market's rigged, bro. Fucking market's rigged. All right, anyway, I was looking at those. We're coming up to 2 o'clock. I was looking at those 476 calls, and I am I'm kind of waiting until like the last hour or so because there's a reason why. There's a reason why. So yeah. All right, let's see here.
And together we looked at middle market companies, which of course are mostly private, and then we compared those against the Russell 3000. $750 million is the cutoff. And the things that we saw.
So there you go. You're at 475, and those 476 is at 20 cents. Are at 60 cents now. What'd I tell you? Right? What did we say? We said you could get $1 depending on how quick it moves. Right? We told you that you could get, what you paid just on a 75, like a $1.05 move. So could have made them free. Just this move here, right? That move right there.
Lululemon rated in the 90s is doing really, really well.
And I think the rate differential again highlights why we're seeing such struggles among some of these.
This is crazy. I'm so pissed. I should not be in these puts right now. I should not be in these puts. What a rebound. What a recovery. Seriously, what a recovery.
So this is Jay's Flying Pizza, I think is the actual name of it. The guy has this out of his house. He said since the 1970s. So how long have you been here?
I have no menus left, shoot. Since 1974.
And that's your house?
This family house.
Yeah.
Yep.
Unique setup. There it is, the little sign. We're in Bridgewater, right?
Yep.
I don't know if people caught that. In Austin's like, we gotta try this place. I think you're gonna like it. It's, you know, weird because it looks like the guy's doing it out of his house. Bar Pie. He has a sticker, which we didn't know. I don't know if people caught what he said for the Barstool Fund, which is just an amazing story. He's like, I donated $900 to the Barstool Fund to help small business when all the shit was shut down. This guy said he saved $200 a month. So every month he was sending $200, $200, and it must have done 100.
I mean, what you say is true.
Thank you. You can keep it, by the way.
No,
keep it.
No.
Please.
Hey, you know what? I donated, I think it was 900
to the Barstool Fund.
When you were doing that, I thought that was the best thing ever.
I appreciate it. That's why
it took me. Thank you very much.
Yeah, no, of course.
It took me 3 months to do it, but I had my nephew send it in. And I said, tell him, you know, if we can, we're going to do 200 for the next 3 months.
That means a lot.
And we did it. Oh, I think what you did was awesome.
I appreciate it. I'm glad we got here.
All right.
That's fucking crazy. Because when you think about it, it's clear it's like he didn't have $1,000 lying around. He's working his ass off out of the side house, slinging pizzas on a Sunday to save up to donate because you want to help
all
other small
about.
businesses during COVID. I think that speaks for itself. And we have a Bar Pie. Everyone across the country is getting a crash course. I started doing my reviews on South Shore Bar Pies. It was Town Spa versus Linwood. We went around Poopsie's, Cape Cod Pizza. I tried Monty's. We went to all the Bar Pies. A lot of people have done since, but those are the early. So everyone's like, do this, do that. I've done most of the Bar Pies. Never this one. And this is how I like it. Charcoal, well done, the crisp. Again, why I love Monty's so much is Monty's looks like this, except it's so thin and crispy and you don't need the paper towel. I love this guy. I love the story. So he's going to get a big score no matter what. Good crisp. Ate one. I mean, you kind of knew that was going to happen with how I'm scoring Bar Pies and the fact that that story is one of the best stories we've heard and how he donated to the Barstool Fund. So Jay's Flying Pizza. This is Bridgewater. Bridgewater. There you go. That's a review. We're just in the guy's.
Sorry.
No.
I got to ask him to move.
Oh, so you spoiled the score. 8-1.
What?
Yeah.
I didn't hear you.
It was an 8-1. He just gave you a score. 8-1.
I
watched the commercial.
Yeah, it's great. No, it's great. What a story. What are you blocking the car? What's going on?
She blocked her keys in the car.
It's wild. I'm on Scroll all the time.
Yeah.
I watch almost all of them. And I watch and I see this,
I know that's annoying and loud.
you look so much bigger.
Bigger? Fatter? What?
No, you taller.
Oh, I like
you know
that.
what I mean?
Yeah, I like that.
Glad you like it.
Yeah, great.
Again, thanks again for the Barstool fun. See ya. Take care. Yep.
That's awesome. That's cool. Bang, we're hustling right out the house, serving pies. All right, let's see what we do up here. Again, I'm gonna say, if you guys are wanting to know where the S&Ps are going, I think we're gonna go test yesterday's close. I know I got a lot of lines going on here, but we'll make it pink, right? You know what the saying is. Come on. All right.
Do you see today's CPI number as an indicating that inflation?
Oh my gosh, I gotta figure out how I am going to profit from this. What am I going to do? Never took the 476 calls that are at 60 cents from 20 cents. What is that? 2, 4. What is that? 150%? Like just every day there's opportunity. You just have to know how to do it, and you got to do it. I just did not think we were going to get this extension like in that manner, right? But it's okay. The day's not over with. We got 2 more hours. I am still looking for the last hour to really commit. All right, to commit and you know, get some of this putback that, you know, I shouldn't even be in for next week. So it is what it is. I accidentally, if you weren't here, I accidentally got a fill. I accidentally got an order. I have a limit order to exit it, so I'm going to leave it on. You know, I'll leave it on. I guess if we start breaking highs and I don't see no volume, then I'll get rid of it. Or I'll just hold it for, you know, anything can happen. I'll just hold it for protection, like an insurance gig there. Pretty clear where we're going, 46.50. This is where I wanted to short, was 47.50.
Staying away from some of the real high-risk recovery trades that certainly worked in November, December as we got relief from bond yields, but I don't think are going to continue working to start the year. We've already seen the Russell pull back quite a bit.
Let's do it. Give me...
So I think that comes back to earnings. We have, coming into this quarter, a 3-year high in large, mid, and small cap negative pre-announcements. Those are companies coming out and saying, hey, before we report earnings,
I can't do that. Now we're going to pull back. I'm going to wait for the pullback, guys. That's what I'm going to do. I'm going to wait for this pullback. If you're being impatient, you got to make sure you look at everything and see what do you think the markets are going to do. I want to see if we can put in a double top here. All right, I want to see if we can put in a double top here. And, you know, maybe we extend a little bit higher. Just a little bit. And then I want to take a short. That's going to do it now. It's going to do it now. It's going to do it now.
Quite a bit. Wells Fargo tend to miss by about 35% of the time. Again, the uncertainty has increased as well. And then Bank of New York, 40%.
Interesting. And then the one other name I wanted to ask you about is Boeing, because it is so significant to the Dow and, of course, the ecosystem around kind of aerospace more broadly. And you were picking up on weakness there as well, even prior to the latest incident.
Yeah. Boeing's been in our sell model for quite some time. Our sell model looks at a lot of kind of forensic accounting data. It's very fundamentally driven. It's not based on my macro outlook or market outlook. It's purely looking for what we call red flags across the financial statements.
I mean, it's pretty phenomenal that this area just decided to just step in and be a support zone like that. So this could be our lower high right here. Let's see what they decide to do. I was saying a little bit ago, I don't know why we would sell off though. Like, what would be the reason? Do you know what I mean? It's not like, oh, the Fed's cutting. The Fed, Powell just said they're going to start. They're going to cut their balance sheet in half within the next 12 months. That would cause this market to go down. So, labor market. That's the only thing I can think of. The labor market is why this news, I feel like the news today and why the market pulled back. It's because you had another jobless claims, and now we're going back below that 100 and some thousand mark. That's not the way. That's not the direction that the Fed wants to go. So, higher for longer. Rick Santelli. So yeah, I'm gonna focus and see what it. See if I can't bring something home today. I'm a little frustrated that I got up really early and then I fell asleep. If you guys have any questions or anything you guys want to look at, just let me know. Throw it in chat. If you could do us a solid, hit the like button, subscribe if you haven't already subscribed. That whole deal. We are on the road, literally right now, I-95, on the road to 1,000 subscribers. So, hop on in. Fuck. Hey, he just said it. He just said it.
From 2.9. Now, let's look at some charts quickly, Tyler. Intra of twos. We're doing a lot of work under yesterday's lows. Look at a 2-day and you can see what I'm talking about. Now, look at a 2-day at 30s. Exactly the opposite. We're flirting with yesterday's highs. If I recall, they were about 421. So, the 2s to 10 spread, it is the least inverted in 2 months. And when it comes to inflation, there's no better place to talk to traders than this floor, because obviously it's going to make a huge difference in how equities are traded and volatility. Chem, Happy New Year. All right, you saw the CPI data today. Your thoughts?
Look, it follows up on the employment data we just saw, right? A actually robust labor market. That doesn't mean, however, ironically, that the economy
That's my
is
French
strong.
Montana
GDP itself
impersonation.
is going to slow down. We're seeing all those clues out there. The thing is the irony and the disconnect between the labor market, ironically, and growth. Those things are very different, and that's not where it was 40 years ago. We're getting a rebalancing.
Well, last time we talked, you said a lot of this inflation is structural, so it's not going away. Quickly, what do you mean by that?
Well, it's stagflation, right? You get stagflation if you get people on the bottom with money and the top is coming apart, right? If the stock market, if growth and earnings are poor, that doesn't necessarily translate into trickle down right away. So I think we're getting a stagflationary environment, which is much more difficult for the Fed and entities to deal with. Yeah.
Last time I saw you, it was about this option expiration, the big quarterly expiration. What's the volatility? What types of contracts? What are you looking at as we move towards the middle of January?
So today, particularly interesting, right? We get a bad number and the market kind of tries to sell off. But what happens again? We bounce right back. Why are we bouncing back? January OPEX is the biggest OPEX for single stocks. So all the tech names are strong relative today. Not a surprise based on the flows. This is beach ball underwater activity. This tends to happen until through OPEX, or at least the Wednesday of OPEX the next week.
Now I have to ask. I know that on our channel we've talked about the SEC and the ETF and the hack, and all of a sudden it's good. And today, of course, we see all the listed contracts at CBOE. Give us some thoughts that maybe you haven't heard expressed on a final word on the
Some
ETF.
key news coming in here.
Right? Everybody's coming in. The flows are there. This is a whole new group of people that can now be involved in it. That's positive in the short term.
The monthly
But ask
budget
yourself,
deficit
is that
for
positive in the long
December
term if the regulators
2023,
start regulating Bitcoin,
129,
day in, day out?
52%
That kind of
increase
changes
from
the reason for
2022.
owning Bitcoin. So
especially if you listen to Mr. Gensler. He didn't give it a ringing endorsement by any means. Well, thank you for joining me today. As I said, Happy New Year, Chem. And we're going to turn it back over to Tyler and the gang.
All right, Rick, thank you very much. We've got some breaking news now on the national deficit. It is breaking. The Treasury making a big announcement just moments ago, and Eamon Javers is in our D.C. newsroom with the details. Hi, Eamon.
Hey there, Tyler. Well, we've got the monthly Treasury statement in from the Treasury Department. The national deficit, monthly budget deficit for the United States for December of 2023 was $129 billion. That's $44 billion higher than it was a year ago in December when it was $85 billion. That's an increase of 52%. So the deficit going up here in December of 2023. And it's a story of interest rates, meaning that it costs more to finance the U.S. government and everything that it does. Tyler, back over to you.
That's amazing. That item alone, that line item alone, as Kelly has pointed out, is going to be, if it is not already, the largest single item in the federal budget as we look at our new fiscal future. Eamon, thanks very much. Appreciate it.
You bet.
Cal?
Okay, so I'm looking at 477 right now. All right, 477's on the SPY. So 477, let me make sure they are, let me see how liquid they are or aren't. We're struggling here.
With over 50 years of loving kindness, we salute our residents, who remind us every day that age is just a number. LiveWithAxe.com.
Come on.
Internet's up. Want to hear a fun fact?
Come on. You know what? I'm going to go here. Here we go. All right, so 475. No, hold on. What am I doing here? 476. I want that high delta. I actually want, like, you're going to see, it can get real fun here at the very end. It gets very risky, but a small amount can go a long way. You know, I wouldn't, you know, I would only do it if you've earned the right to take that risk. Let's see here. I feel like I might have to watch the market for a minute and look at that tail. Jesus Lord. I can't believe this. I've got so many lines. It's not even funny.
Tech could just be the first. Now, as other industries adopt AI efficiencies, their pace of hiring, that could slow as well, having a major macro impact across labor. As for the mega caps themselves,
All right, so
core unprofitable businesses like streaming and devices.
I don't have the RSI on this one. I'd have to take it over to the other one. I would love to be able to heat that steak up I got yesterday, but it's fucking cooked. They fucked it up twice. I don't know how you mess up a steak like that twice and just cook the shit out of it so that the inside's tough as hell. But they did. Let's do this. So it is 217, 277. Quote details.
So I hear you saying effectively that the companies, maybe they're going to take a page out of Meta's book. Remember last year was the year of efficiency? In other words, that the companies may become leaner, but more focused.
Yeah, and I think that's the first phase, right? That year of efficiency, more focus. That's what Wall Street especially has demanded over the last few years after all of the pandemic hiring and spending. But what I'm saying is we're seeing the beginning of a new phase, one that's enabled or maybe supercharged by AI. They got efficient, and now they're realizing that they can keep that efficiency or become even more efficient by farming out tasks to AI. So Meta, for example, may not need as many junior
I'll be right back. What's up, Chris? So I was just putting in a random email addresses, right? Of course, Rob Bob comes up. And how is Rob Bob one, but Big Bill isn't? I was just throwing just random shit. And guess what? Crackhead is taken with a picture. and it's a whatchamacallit. I don't know. It's just hilarious. Oh man.
You just took the thought out of my head. I cannot say that I remember this. It's vaguely in there somewhere, but I don't remember it. Therefore, I'm sorry to say I'm not going to miss it.
I guess not as much nostalgia.
Bertha, thank you very much for that sad news.
Oh shit. So how'd you do today, Chris? Fucking Rob Bob. Richard Millet is one. Richard Mill, however you want to say it, Richard Mill. Let me see something.
It shows me how much I'm spending on eating out, online shopping.
But yeah,
It creates a personalized spending plan.
I don't know what to do, guys, right now. I really don't. I feel like I'm not getting any momentum. I'm going to wait. So what I'm going to do is I'm going to go grab this steak that's overcooked. I'm going to heat it up in the microwave, unfortunately, because it's already ruined. So I'm going to heat it up real quick, bring it back, get something to eat because I haven't ate yet today. I mean, I've had some candy, but that's about it. Yeah, we'll see what we can do this afternoon, because this afternoon I want to see if we start getting ourselves back up here on the S&Ps, and if the big boys start to step up again and try to give us a little bit more selling up here at 477.50. I was looking at the 477 calls for today just to catch like a little bit of money. You know, these could really pay you, but they'll really pay when the day is almost done. When there's like 15, 20 minutes left, these things will give you 100% to 300%, just like that. Could depending on the volume at the end of the day, but yeah, I closed green. Could have been way better green, so I can't be mad. Listen, dude, I feel, bro. I feel. So I took 472 tomorrow puts, and we caught the low on them. We got them at 50 cents, and they went up to like $1.30. So it's like just under 200%. But what I also did was I took I was trying. I thought we were going to have like a trend type of day, but I also wasn't blind to the fact that we would put in, like, if we're going to pull back a bit, you know, that higher low, and I ended up bringing up next Friday SPY puts, and I got filled because I pressed the button. I had the order up, and I'm like scrolling through. I'm like going through, and I look down. I don't know when I entered them. I mean, I could look up the time, but it is what it is. So I got them. I'm just sitting on them. You know, I'm just going to see where we're at tomorrow. See if we get a little bit of a gap down, or let's just say something happens with the banks. It could go higher. It could go against me. Then I'll close them out and take the loss, but I'll be okay. Yeah, they did. Yep. What time was that? Was that like 10:30-ish? Yeah. Well, listen, I said here in the morning, like if you see the chat, this was the first thing I said. All right, was right here. Guys, the labor market, right? Higher for longer. That's why I said that. That's why the market was pulling back. It had nothing to do with CPI, in my opinion. In my humble opinion, I think it was the labor market. All right, because once again, We're getting ready to get below that 200,000 mark. It's at 203,000 jobless claims. The sole focus right now, I feel like, is the unemployment levels, and this is higher for longer. All right, if the labor market doesn't soften, it's higher for longer, and that's okay. But here's the thing with that, though. Everybody says higher for longer, but I'm telling you, there's got to be something done with these banks. Either rates got to be down, or if this ends, they need to either reinstate it, or if they don't and rates are still at 5.5, I guarantee you in the next 6 months, you will see banks starting to have to raise capital. We got this whole FDIC issue again and all that fun stuff. That is not forgotten. The only reason we have not heard about banks is because the Fed is giving them free money if they need it. So, because here's the thing. As long as rates are higher, there is not going to be money in deposits because people are going to have money, especially people that have money and make money and use their money to make them money, which makes up a large majority, okay? They're going to have it in a money market account. They're not going to put it in a bank to make 0.8%, not 1%, okay? When they can go buy treasuries or have it in a money market account, getting 5, 6. So where's that middle ground that they got to bring rates down to? I think it's like 3.5. I'm going to be honest. And I didn't think about this a while ago. It kind of just came to me. I'm like, why is the Fed bringing up 1970 and how they don't want to bring down rates too quick, but yet 6 weeks later, literally 6 weeks, a month, we go from that to we're going to be probably cutting rates and blah, 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 blah. Well, it's because of the banks. So it's either they're going to help bring this economy down by not helping the banks out, but it looks like it's like they're all floating it. And today's Wednesday or Thursday? Today's Thursday. So let's see. Let me refresh this and see what it was yesterday. January 3rd. Today's the 11th. It should be the 10th. Where's the 10th on here? They don't have this up yet? Look at that, 141. They go from like 100, and they've already increased 50-fold. 50%. So that's my catalyst. I know you've probably seen it. Oh, at 9? Yeah. I figured it was the labor market, so I feel like I need to do this market just pulled back, and I never really got long. I tried, but like I say, like on the S&Ps, I was waiting for that bounce back. Never got it. Okay, so then what do? I just bring it down. All right, try to get it there. Never gave it to me because it never pulled back in there, just shy of it. So I had a tough time this morning. I was able to scratch out a winning trade, though, which was good. Tesla. This was the one that I was trying to get. And when she decided to go, I was already looking at another name. So she just hasn't been giving us any follow through. She hasn't been giving us that Tesla move. Feels like there's a fighter jet outside. Sounds like it. Meta. Let's see what happens here with Meta. See if we start to get a rejection. I want to be ready for tomorrow. Like, I want to be spot on, ready for tomorrow. I want to end this week on a good note. I want to crush it this week. Like, that's my goal. So hopefully tomorrow or even this afternoon, I get a nice opportunity and something sets up for us. Tomorrow. The markets are just holding up. All right, so Mara's still holding up. Boeing hasn't sold off like I thought it would because the market's been holding up. The minute this market pulls back in a real manner, in a decent manner, then I think you'll get Boeing to pull back. All right, it's 2:30. Let me go. I'm gonna go grab my food and I'll be right back, bro. Chris, it was good to talk to you, man. If you could hit the like button for me, that'd be sweet. Appreciate you guys. I do.
This has happened days. On Friday night, I wrote a story about some people had already said this is what our fees are going to be. Monday morning, that was changed. They were changing around. Other people announced new fees. Then Tuesday, they changed it again because they all looked at each other and said, oh my gosh, we're going to lose if we don't cut the numbers. And literally Tuesday, Wednesday, they were changing the numbers overnight. I'd come in and the number I had before was wrong on the day before. So think of how much the investor is going to benefit from this. The beauty of it when you have a lot of people involved in it.
And Kate, that also raises the question about Coinbase. The CEO obviously was excited about this earlier on our air. He said they're going to be a custodian, they're going to be involved. But Dan Dolev, who's been a longtime bear, says, they're going to lose money because they're charging 2.5% on trading right now. And these ETFs, of course, are going to, they're not going to be on their platform and they're not going to be trading as much. And perhaps maybe they will go the Robinhood route and start letting ETFs trade on their platform. But it does have big implications for their business model. And the stock's down more than 6% today.
That's been one of the big arguments around Coinbase is that why would you, if you're a new investor in Bitcoin, for example, why would you want to go to Coinbase versus buying this alongside any other equity in your Fidelity account or Vanguard? Actually, Vanguard, we should mention, is not allowing this Bitcoin ETF to trade. But the ease at which you could do this in a Robinhood or Fidelity is a threat to Coinbase. We talked about fees. Coinbase still charges about 300 basis points or 3% on a lot of the retail Bitcoin trading. So talk about pressure on fees. This could be a forcing mechanism for them to need to lower fees like we've seen play out in the brokerage world as well. But guys, I also want to make one point. I thought this was the best way to think about this, and I think, Kelly, you'll like this reference especially, pickleball. So you think about Bitcoin. Bitcoin and this ETF is like pickleball getting added to the Olympics. So it's got a lot of momentum. People like to play pickleball. It's kind of this divisive thing. You've got these country clubs saying, hey, it's too loud. We don't want to add it. But pickleball is here to stay, and this Bitcoin ETF is here to stay. I just thought that was such an interesting way to think about the relevance of this whole thing. You think about it like pickleball. It's popular. And now, in this case, it's here to stay.
Wow.
It has not been added to the Olympics, but
It's
a good framework.
Did I miss something? Is it in the Olympics? Pickleball in the Olympics. Hey, one real quick thing. People are asking me about why don't they track Bitcoin right now? Because the prices are all over. These are new products except for Grayscale. And so there was a reference price that the company started, just like an IPO. They pick a price, they're going to do it. And don't worry about it. In the next few days, these products should track Bitcoin. If they don't, there's going to be a problem. And so just don't use the prices today. The reference prices don't mean that much of what we're doing today. Let's start tracking that as of tomorrow.
That's interesting. We are out of time, but there is so much. I don't know how we liken this to the pickleball analogy, but Hester's dissent, the questions that we had, 5 years ago when they denied these ETFs about, where the pricing is coming from, some of the platforms that they're citing and all the rest of it. This story will go on, but we'll leave it there for now. Thank you both very much. We appreciate it. Bob Bassani and Kate Rooney. Taiwan's elections could have an impact around the globe for investors, businesses, even our relations with China. We will discuss what's at stake there when Power Lunch returns.
We got another one, Big Rick. And he's white. Big Rick is white too, by the way. It's hilarious. I've been coming up with these random ass names and seeing if they were taken or not.
Taiwan holding its presidential election Saturday, and given China's claims to Taiwan, the results in the aftermath could have a major impact on the already delicate relationship between the U.S. and China, depending on which party wins. Eunice Yoon is live for us now in Beijing with more on the importance of this election. Eunice.
Thanks so much, Tyler. Well, Beijing is framing this Saturday's vote as a choice between peace and war. There are three candidates. The front runner is the ruling party's Lai Ching-te, also known as William. Beijing has described him as an extreme danger. The Xi Jinping government perceives him and the DPP, his party, to be pro-independence. And since the Chinese Communist Party insists that Taiwan is part of China and not an independent country, they see him as a threat. Now, his two main opponents, especially his main rival, Hou Yu-ih of the KMT, are perceived by Beijing as safer and more likely to maintain the status quo, even though the difference between the parties isn't really very different. So for investors as well as U.S. businesses, if Lai wins, which of course is expected, then they could expect that Beijing will maintain a very hostile stance. Hostilities will be ratcheted up most likely militarily as well as economically towards Taipei. They should expect to see a greater risk of global supply chains. If there is an upset, however, there is a possibility that there could be a reduction in tensions, and possibly because Xi Jinping's government has suggested that it is willing to engage in talks under that scenario. But either way, whoever wins, it's really seen as very important because of the concern in Washington that President Xi Jinping might be preparing for military action over the coming years. So this this period and this particular presidency is seen as critical. Guys?
Is this perhaps you know, perhaps you don't, is this a straight up vote? In other words, does the winner of a plurality win, but could the presence of win, or does the presence of a third party set up the potential for a runoff?
The expectation is that there wouldn't be a runoff at all because the third party candidate is seen as trailing, even though he has been able to attract much younger voters. The main focus has been on Lai and how the polls have actually been narrowing, but the most likely expectation or most likely scenario, if it isn't Lai, is that the winner would be the main opponent from the KMT.
All right, thank you very much. We appreciate it. Eunice Yoon reporting from Beijing, where it is the middle of the night. Our next guest says no matter who wins the presidency in Taiwan, it's going to be a big deal for China's President Xi Jinping and relations between China and the U.S. Let's welcome back Dennis Unkovic, partner at Meyer, Unkovic & Scott. He advises U.S. companies doing business in China and has been there more times than I can count. Dennis, welcome. Good to have you with us. There are the two main parties here. I find it slightly ironic that the more, quote, acceptable or moderate one in the eyes of Beijing is the KMT, the Kuomintang, which is the party of Chiang Kai-shek.
That is amazing. When Chiang Kai-shek essentially lost and moved his people to Taiwan, the Kuomintang was the big enemy. But at this point, the DPP, the Democratic People's Party, which is the party of the current president, it has, over the last 8 years, drawn a very careful, but I think planned movement away from China and toward the West, particularly the U.S.
Would a victory by Lai be seen as Eunice seemed to suggest, as a more provocative result for China, or would cause them to become more bellicose and belligerent?
The answer is yes. I I go back to the we had an interview a couple months ago. Do you remember when the president met with Xi in
Yes.
San Francisco?
Mhm.
And the most famous quote from that was, reunification of Taiwan with China is inevitable. That is what Biden was told by Xi. And if anything since then, from observing from afar what's going on, they've ratcheted up that even more. And when you see Xi saying, look, this is a question between peace and maybe war, that's really very frightening.
But I wonder, Dennis, to your point about its inevitability, if this is actually a choice about war, or if everyone is coming around to this idea of its inevitability.
Kelly, I don't think that war is inevitable because China
No, reunification is inevitable. And I'm not sure at this point, do you feel like the stakes are being lowered somewhat, that it's almost as if the international community is preparing itself to resign itself to this reality?
I hope not. China has said by 2049, 100 years, Kelly, since the Chinese Communist Party took over, we are definitely going to have Taiwan. I don't think that reunification is going to come about through a military situation now. Basically, Xi Jinping has three options. Do something with the islands surrounding Taiwan, blockade Taiwan, or actually militarily attack. I do not think that the Chinese at this point have the capability or are willing to risk their overall economy with what would come as a result of that from an invasion. But are things being ratcheted up? Yes. And is the DPP, if they win, William Lai? Yes, I think it's going to be more
What
serious.
should American businesses that have a stake in China, either as a manufacturing source or a market, what should they do on Monday morning when the results are known? Is there anything they need to be doing by way of preparation or reaction?
A great question. I think I would advise what I've advised for the last 5 years. If you are sole sourcing out of China, the PRC, you need to look at alternative sources of supply. That doesn't mean you stop doing business, Tyler, in China, but you have to say, look, I cannot expose myself, as many companies did during COVID, to a sole source supply out of China. And that means the board of directors and the C-suite executives have got to say, this is a major priority, and that's what I would do Monday morning.
All right, Dennis, thanks. Great to see you. Dennis Unkovic, once again, on China.
Thank you.
Well, Microsoft briefly overtaking Apple as the world's most valuable company. Coming up, we will trade it in 3-stock lunch. We're back in 2.
I don't have any room. Running out of room. You guys don't have to watch me eat steak. Wait. I want to show you something. I want to show you how bad they fucked this thing up, bro. Look at this. It's a little hot. All right? Look at this. You want to talk about no pink on the inside? Look at that. How could you do that? Like, twice. 2 times. I was the first time it was like a brick. I'm like, whoa, what is this? And so they took it back and they give it back. I'm like, guys, they're like, I didn't say anything to them at the second time, but I'm like, they're excuse me, no pink, nothing, ain't nita nada nothing. I'll see you, Chris. Have a good night, buddy. He fucking ruined it. Ruined it. I feel bad for the cow.
Sit.com.
Time for today's three-stock lunch, starting with Microsoft briefly overtaking Apple as the most valuable company in the world before retreating some. Here with our trades is Ava Ados, CIO of ER Shares. Ava, what do you think of Microsoft? Welcome, first of all, but what do you think of Microsoft?
So Microsoft is a hold. It's almost, as you said, a $3 trillion stock, almost at its all-time high. But we need to remember it has among the best margins in its sector, 43% for EBIT. That's 3 to 4 times larger than its peers. And also, we have seen recently a shift when it comes to the market to a less aggressive position, and that has benefited large cap stocks, mega caps, and in that case, Microsoft. And so, for that reason, with the tensions in the Middle East, in the Red Sea, the supply shocks that we are seeing, and also the recent inflation reading with a 0.3% increase, and that's slightly elevated. So I think this tension in the market in a less aggressive position is going to benefit Microsoft and also large cap and mega caps.
Exciting day to see them at least briefly overtake Apple. Feels like a preview of a bigger story this year. In meantime, KB Home, Ava, better than expected Q4 results beat on the top and bottom lines, but EPS and revenue were down year on year, and the stock.
All right, guys, you know what I might do, and I hate to sell it here. I hate to sell it here, but all right, so here's what we're starting to do, guys. If we get, let's see, 470, man, we're starting to get back into the number. We're starting to get back into the number. So we broke this when the number came out, and now we're back into it. So I'm kind of curious if, yeah, I'm going to get rid of this put that I have in. So if anybody tailed, I doubt that you guys did. I'm just letting you guys know that I'm probably just going to limit order out of this and try to get a good fill on it. Now we're going to start going higher. Let's see what we do here. Like right here. That's where I want to see like what really happens. So I'm going to get out of this play.
Ava, great today.
Thank you.
Ava Ados.
And there's more Power Lunch after a very quick break.
Kind of funny that it's coming up to 3 o'clock right now, and we're just getting into this area. And what we getting ready to come into?
Stand tall.
So be careful. Be careful.
Welcome back. See, I was the one who wanted to do 3 stories.
Yeah, we're going to do it.
All right.
Here we go.
Less than 2
Minute
minutes
and a half.
left, 90 seconds. Let's start with Hertz. That's the big stock story. Shifting gears and selling 20,000 electric vehicles from its U.S. fleet. The shares are down 4% today. A lot of these are Teslas. They had that big agreement with Tom Brady, and Tesla shares are down 3% today.
All right, they've invested a lot in those cars. Well, now, if you drove on the highway this holiday season, you likely noticed an electronic safety board featuring festive joke-themed sayings. Well, the federals don't like that. They say, lose the humor. New guidance, they say, cut that out. No fun on the road. I think they're good.
New Jersey has these now, and they're, you roll your eyes sometimes, but it catches your attention.
Yeah, all
and
right.
It gets you thinking.
All right, now, we've got 45 seconds left. It is a day of joy and melancholy. Melancholy because Kelly's going to step away for a few months.
Thank you.
To do the most joyous of things, and that is to add to your wonderful family.
Or certainly the most difficult.
Yeah, the most difficult thing. So there you go. We've got 1, 2, 3, 4, and there is number 5 coming along shortly. Kelly, the floor is yours. We're going to miss you so much.
Is it bad if I still want to do the football story?
Yeah, no, you can do the football story if you want.
Because I need everyone's. Taylor Swift gave them and everyone's got to watch Peacock. We have the exclusive game this weekend.
We have the exclusive streaming playoff game this weekend. That's amazing. She never stops working, this woman.
Belichick
she never
out.
Stops working.
What do you think about Belichick and Saban out? End of an era.
Yeah, and Pete Carroll. We'll see.
And beginning of an era for some of us.
We'll let the people come in here, but I'm not going to let them get too comfortable.
Oh, thank you. I will miss you.
Closing bell starts right now.
All right, all the best to Kelly. Welcome to Closing Bell right now. I'm Mike Santoli in for Scott Wapner. This make or break hour begins with Wall Street playing it cool after a slightly warm inflation report. The majority of stocks in slow retreat, but the big cap index is very firm, a 1% comeback from early losses after the headline CPI came in a bit above expectations, leaving the S&P 500 less than 1% away from its old record high. That sits near the 4,800 mark. With an hour left in the session, big growth names continue to bolster the index and have led the intraday comeback from that early weakness to about the flat line, while small caps and banks continue to struggle after their strong fourth quarter rallies. The Treasury market took the CPI release in stride. Yields moderately lower across the board, even as some Fed officials refuse to ratify market expectations of rate cuts coming soon. That leads us to our talk of the tape. Has the sluggish start for most stocks in 2024 lowered the bar helpfully entering earnings season, or is it a warning that an economic soft landing featuring a friendlier Fed cannot be taken for granted just yet? Let's get into all that with Liz Ann Saunders, Charles Schwab Chief Investment Strategist. Liz Ann, great to see you.
Hi, Mike. Nice to see you, too.
So, I guess the real simple story of how stocks have held up as well as they have for a while now is inflation coming down faster than the economy has weakened. How did today's data of last Friday's jobs numbers, how do you feel that all works together in terms of setting expectations for the markets and the economy this year?
Well, obviously, it was a little bit hotter than expected. And I think we're at that point in the disinflation cycle where it is unlikely to be linear. I think there are forces, including things like geopolitics and what's going on in the Mideast, that could disrupt a nice clean path for inflation getting back to the Fed's target. But as you point out, there is still a disconnect between essentially what the Fed's been saying, what's embedded in the dots plots and their summary of economic projections, and what the market has priced in. I was a little bit surprised that you didn't really see much of a needle move in terms of expectations for the March FOMC meeting, which still is about 2/3 cut, 1/3 stay the same in terms of probabilities. I think that may still be a little bit of a stretch in terms of the market's expectations.
Yeah, it's interesting. We obviously a couple of months till that March meeting. We do have the PCE report, which is where the Fed's actual inflation target is reflected, and that comes in a couple of weeks. Folks looking at the CPI number saying maybe it translates to a little bit of a softer PCI number. But all that being said, how much do you think the priced expectations in the Fed funds futures market really reflects what most investors want to see and expect to see, as opposed to it just being, somewhere along the spectrum of possibilities? How much does the stock market rely on deep Fed rate cuts this year, perhaps?
I guess we're going to have to see, to the extent the market's expectations are wrong and the Fed has to more aggressively push back or do what they don't tend to do, which is actually surprise, let's say, at the March meeting by going against expectations, assuming those expectations don't adjust between now and then. I think it would be probably a pretty swift adjustment. I think not only has the market done well and stabilized here because of an expectation of yields moving down, as well as the Fed starting to cut interest rates, but that helps to explain the move down the cap spectrum, and not every day, but some of the lift that we've seen in small caps, the Russell 2000 equal weight relative to cap weight. But anytime there's a little bit of uncertainty, what you do see is you see a little bit of that reversion to the mean kind of trade. Today is a perfect example of that, where earlier this afternoon, only energy was in the green, but then you saw technology leapfrog that. So I think that there is still some money that automatically goes back to that corner when there's any uncertainty with regard to what has been the biggest driver, which is the combination of yields and Fed policy.
Yeah, no doubt about it. It's sort of the defensive trade. Feels like it's the easy way to sort of hide a little bit. What do you make of the overall action so far this year? I mean, obviously, in trying to figure out how much we're reacting to the data in the last week or two, we're also trying to digest a massive rally from the final 2 months of last year. We obviously, by everybody's acknowledgement, got a little bit stretched. You had sentiment needing to come off the boil. Where does that leave us?
So I think sentiment is mixed right now. You have seen some of the attitudinal surveys of sentiment. The bullishness, which had gotten pretty rampant, had eased pretty quickly, and that was alongside some of the weakness that we saw up the cap spectrum. If you look over the last 4 to 6 weeks, you've seen that better performance by equal weight down the cap spectrum. The one thing I would express is that I think investors should be really cautious if they're looking for opportunities outside of not just the Magnificent Seven, but up the cap spectrum into sort of the growth trio of tech communication services and consumer discretionary. I don't think you want to sacrifice quality, particularly if you're using as a base for ideas the Russell 2000, because it's still got a hefty share of zombie companies, not profitable companies. Just as an FYI to viewers that aren't aware of this, the S&P 600 as another small cap index, although not used as a benchmark as much, has a profitability filter. So you start with a higher quality component of stocks maybe from which to choose. I don't think you want to sacrifice quality. And from a factor perspective, we are emphasizing almost what used to be called sort of a GARP approach. You want to look for those growth factors, but without sacrificing valuation factors.
Right. So growth at a reasonable price is the GARP approach. I guess if you look at quality, I mean, quality really performed great last year based on most ways it's approached. That's largely, in part at least, because it has so much of those big mega cap tech names that work. That also usually gets captured in the quality filter. Are there other ways to approach it, or modifications you would make to just sort of trying to make sure you have quality more of a broad base as opposed to just essentially having a proxy for the NASDAQ 100?
Yeah, I would say the way you expressed it is absolutely true, that if you had taken a quality-based approach, you would have benefited from also getting those names, many of the Magnificent Seven, because they've got strong cash flows, they've got that interest coverage, some of those factors that were leadership factors last year, and I think to some degree will continue. But factor leadership at the factor level was pretty consistent last year outside of those names too. So I think you can apply factor-based screening, and the factors we've been emphasizing would be that GARP type blend of factors, quality factors. So high return on equity, strong free cash flow, positive earnings surprise, positive earnings revisions. The one that we've been emphasizing a lot last year that could change a little bit is interest coverage. When we get to the point where the Fed has actually pivoted to easier monetary policy, that may fade a little bit as a dominant concern. That was clearly the case last year, where you
see how it just fell right off of that level at 476.
But those would be
I was looking at.
Emphasis. And you can apply
it's funny, ain't it?
Those factors across the spectrum of sectors, across the spectrum from a cap perspective.
It's so funny.
If you want to still emphasize those companies that have the more consistent, predictable earnings power and better balance sheets, does it suggest you don't think overall earnings growth is going to be that strong, that we're still going to be contending with pockets of economic weakness, the consumer fatigue? You know, if you really believed the economy were going to reaccelerate and the Fed was going to cut, you might say, you know, buy lower quality.
So I'm not terribly worried about the current earnings season in terms of whether the bar is set too high or not. I think we could have yet another quarter where you get a better than average beat rate, a better than average percent by which companies beat. What I'd be paying more close attention to, and this really has panned out over the last several quarters, is looking at the performance. What you've seen in the last several quarters is the benefit accrued to the stocks of companies that have beaten is more constrained than the hit taken by stocks of companies that have missed. But it's also the innards of the reports that I think are particularly important. The differential between top line and bottom line, the protection of margins. If those margins have been protected, how are they doing it from a cost-cutting perspective, a productivity perspective? And then importantly, because analysts are not really flying blind like they were a couple of years ago during the worst part of the pandemic, but they're not being given the same kind of precision around guidance, allowing them to be confident in out estimates. They're generally just confident maybe in making an adjustment out 1 or 2 quarters based on what companies say during the reporting period.
Right.
But now that we're in that outlook period, we may get a better sense of whether calendar year 2024, which is low double digits, is realistic, and that's what's embedded into valuation models, and that's
all right. So I'm going to go limit order 20 cents on that, guys.
Absolutely.
Let's do that. Limit order 20 cents. I'm going to bring it down. You know, I kind of want to hold it, but
you know, we were
I feel like I could get a better entry.
Resilience today, if nothing else, and actually all year it hasn't really sustained sell-offs. It's been kind of choppy and sideways and small cap underperformance.
I might just be a man about it and not fucking sell and go get something else to pay for it. Make something to pay for it. All right, that's what we might do here if you haven't done so. If you're not hitting the like button, then what are you doing? If you're not subscribing, then what are you doing? Okay? If you ain't got some ideas, what are you doing? I'm just playing. I mean, you know, the regulars, y'all are cool. You guys do whatever the hell you guys want. But, you know, any newbies in here, y'all just propping your feet up like you own this shit. Okay? You gotta pay your dues. Just hit the like button. Subscribe if you haven't already done so.
And now moving back lower once again.
Just pay your dues for a few weeks, and that's all it is. Then you can kick your feet up.
Yeah, well, for sure.
All
You're
right.
going to live with that, I guess, that unanswered question for a little while. Now, Greg, I know that you don't necessarily think we should be able to pencil in the earnings
I gotta
growth
find
here
something.
and the Fed
I got
starting to sort of ease up anytime soon. What leads you to all that?
Yeah, first let me say, in terms of the earnings growth, yeah, there's no path for us to get to 8% earnings growth in the first quarter, and certainly no path to 12% earnings growth for 2024.
All right, so I'm going to scan. I'm going to look at, so it's 3 o'clock. I'm going to look at Meta. I'm going to wait for the SPY at like,
I don't know if it matters.
let's see here. Give me this 5 minute. Let me see this 5 minute volume real quick.
As I said, there was no path to 8% growth in the fourth quarter, and here we are.
Malik, what's up, man? How you doing, bro?
That is the expectation. We're down to about 1.3%.
What are you watching today? How was your day? Oh my gosh, I'm sitting here talking. You guys can't hear me because of this.
And so I'm equally dubious about earnings for next year, but might it not matter again? And we know the reasons why it didn't, as Lizanne was remarking.
All right, so real quick, if you guys just joined us here, we are taking back. Oh my gosh, we are taking back that labor market number, CPI, if you want to call it that. Now, one of two things: the market's waiting to see what PPI does. I don't think the market's worried about PPI or CPI. We know the long-term trajectory. I think the labor market is the more concern. All right, is the Fed going to lower rates enough to that we don't have to worry about banks getting their ass busted? And they're back in the news 3 months, 6 months from now because they never extended the bank term lending program. All right, that's what I think that the markets are. You know, we have earnings. How are earnings going to be? So, but that's good, Malik. That's what's up. Busy, I feel. My day was a little bit busy too. I kind of my day was good. Any day above ground is good. I kind of was a little upset with myself that I did not, kind of get on that rally early this morning. Because I said it. I said that it felt like one of those days where we would trend all day, but now we've taken back this area. We're turning it into support. So I'm going to look for this, see if we can't get this 477.50. Okay, 477.50 and lock it in. I'll let you guys know when and if I do it. If you guys follow me on this, please do it small. Please do it small because it is only going to take a very little bit of an amount, especially as we get closer to 4 o'clock, to where these things can go from 20 cents to 80 cents. Right? You can get 200-300%, if there's movement, okay? Which I presume there more than likely will be. Let's see here. What time is this? 5:10. Actually, the volume is drying up a bit, which is not cool. We had some nice volume this morning. I want to see if we can break this level and not hold it. If we get down here, we start reclaiming 476. Let me see this. Where are we at right now? I don't know why this is like that. 477, 10 cents with, okay. Again, be careful if you guys do this. Again, it will only take a very little bit amount of money to lose your money, or you're going to make triple, double, triple in a quick time. So I'm wondering if these sellers still have a decent amount to load off, if they want to start unloading some of their shares up at this double top all-time high. All right, I have some time on these SPY puts. I have about 2 weeks. All right, but there's Martin Luther King Day on Monday, so that's really going to eat at my premium. So by tomorrow, I want to be out of this thing. Right? I should have already been out of it, but I kind of wanted to just let the market do what it needed to do. To me, it's a break here on the daily chart. We broke this previous 476.55. All right, we broke it. Now it's coming back up to test it. And can we remain under it? All right, yesterday's close. Can we remain under yesterday's close is what I want to know. Look at the volume. It's so low. So I guess today's volume was low. Am I crazy or something? I thought we had some decent volume this morning, but we didn't. Holy cow. All right. So that's a low volume pullback. I need to get rid of these. Maybe it was maybe you know what it was? It was pre-market volume that had me a little mixed up. So this is crazy. This afternoon, I like Lucid. Well, listen, here's the thing. Not me, but my dad and his friend, they have 2, I think going on 3. All right. My dad and his friend still hold the top land speed record for Lucid. Okay. At the Salt Flats. So if you go to like my YouTube page, you'll see one of the Lucid Airs, the Lucid Dream Air that is on my page. And that was the one that they set the record. I'm pretty sure it still stands. The top speed record still stands. But I really love the cars. I really love them. I love them. They're like, there is no comparison from a Tesla to a Rivian. Like, it's luxury, it's big money, but it's early, and it's like you're coming into a time where, are people going to start losing their jobs and stuff? If this economy can continue to go and expand, my biggest worry would be that they need to raise money to start paying off debt because they're new, and that's not going to help the share price. So with that said, you can kind of see how I feel about the stock, but not the company. I'm not a buyer of Lucid right now. My father would love to just own this thing. And at these prices, maybe he should. With the understanding that, hey, this thing, there is a chance 10 years from now, they may not be a company anymore because they can't pay down their debts because they're an expensive car company. And you're only talking about a selective group of people that are going to buy them. You know, are they going to tap into that lower market where, you know, just your regular sedans? Are they going to compete to sell and move units? Right? The whole game is to make money. But if you're going to pick top tier clients, you better deliver and win that category. Because if you don't, you know, you see Fisker. You see, how many times has Fisker been a company? They're trying to compete with the Ferraris and Lamborghinis, but they're not Ferrari and Lamborghini. You know what I mean? So I'm not a buyer. I am not a buyer. And I'm so glad my dad did not buy the stock. He wanted to buy this thing so bad. It was like $25, $26, right up in this range. And all his fucking money would have been gone. Because he's fallen in love with the name of a company, thinking long term that they could be something, but not understanding, like, it's early. Like, at these prices, I wouldn't mind nibbling, but you got to remember, they're going to do offerings which could take that from $3 to $1. $3 to $1.50. Do you know what I'm saying? Just be aware of stuff like that. That, like, as their share price comes down, their valuation comes down. That means here's the thing. When their valuation comes down like this, right, and they go to the bank and say that they want to, you know, that they need money. They want to borrow money. Well, their valuation is not 100 million, it's $1 million. So they're not going to qualify for as much money, and they may have to pay more, which they're going to have to pay more because rates are up. And at that point, it comes to a point where, okay, where are we going to get our money? Right at the share price. They'll dilute shares. So that's the stage that you're fighting right now with a company like Lucid. You know, I know they have the SUV and stuff. Yeah, is that their EV cars are expensive and EV business requires a lot of capital, knowing I don't know why this thing keeps coming up. I mean, I know why it's coming up, but I don't want it to, because I can't really read the chat if I don't. You know what? I can read it. So here, and you're exactly right, Malik. Malik, you're exactly right. Malik says, yeah, exactly. My dilemma is that their EV cars are expensive and EV business requires a lot of capital. Knowing what Tesla went through, the price is also appealing now, though, but they could vanish. Exactly, they could. But $3, it's like there's got to be a risk to reward there. That's the market. The risk to reward. I don't think they'll go anywhere because they got a lot of backing. They got a lot of backing from the Saudis. They have a beautiful vehicle. I don't think it's like a Fisker where it's just like it's ugly and nobody wants it, right? So I think they're good on that part. But here, you're exactly right. And you know what? It's not just EVs, man. It is literally the car company. It's the automotive industry. You're exactly right. Right? It's so capital intensive. It's like, I don't even want to invest in it. Just like Boeing, you got a risk, you know, you're talking about a risk of flying 180 to 160 people, 20,000 feet in the air. Like, something can go wrong and you're going to suffer from it. In the automotive, you know, it's material, buildings, engineering, you know, the R&D that goes into it. Like you said, it's very expensive. It's capital intensive. $3, why not, nipple? You know, you might get a short squeeze and be able to, you know, take some of that profit, put it in your pocket, or have a position. Let's just say it's $3, right? You buy 100 shares at $300, $315. 2, take $50 of that. Okay, not 50. Well, yeah, you're spending $300. Take like $75. Take like a quarter of that whole position and trade around it. Like, as in like you could always buy and sell calls. That's one way. Or you could just buy the stock outright with 25% of the position. So you have like $1.50 would be 50%. Take out of 300, you're taking $50, and you're using that $50 like right now. You would be buying, you would buy the stock down here like a quarter of your total position, and you're just trading around it, right? You're just trading around the price. Right now it's in a downtrend, but that's another way that you could bring in capital as insurance to bring down your cost. Okay, to bring down your cost, that's what I would do with this. Like right now, if I bought 300 or if I bought 100 shares, I would take a quarter of that, and I would have sold a piece up here, all right? Then I would have bought it back. I would have bought the dip, right? And buy it again and trade around that little bit, and you'll start bringing in profit. You could sell calls, you can sell puts, and you could also, take a quarter of that and just trade it. Whether it's buying the stock outright or, you don't want to try to like buy calls or buy puts because of time premium. You want to buy the stock, right? You want to buy the stock. I would have sold quarter of this position, and then I would have bought it back here. It goes up to like 340. We cut it. We buy the dip, all with a quarter piece, and then it pays for your position over time. A lot of people don't do that starting out. Because when you're starting out and stuff, not saying that you are, but you want to worry about getting your net worth up and getting your capital built, however it takes. Whether you got to buy long, you half of your portfolio is long term, and you're just buying stocks and maybe a little bit of options. At least if you can understand those options, That's awesome, bro. I'm happy. I'm happy about that. That's sweet. That's why I did this, man. That's why I did this, because there's not anybody that I have seen on YouTube that, is out here trading live and actually knowing what the hell it is that they're even doing. All right. There's a video I seen where this guy or this kid says gold's going up right now because people are taking their money out of banks and putting it into gold. I'm like, Jesus Christ, this motherfucker got 100,000 views. No, gold's going up. One, because people are buying it, obviously. But two, who is buying it? Because of Basel III, right? Basel III, the banks, it is where gold was considered a tier 1 asset. So if gold is a tier 1 asset, then banks can buy gold to back up their loans, right? They buy bonds, they buy different assets to back up their loans. That was why, because the February Basel III had came into effect, or gold came into effect, where they were a tier 1 asset. They considered them a tier 1 asset, and banks were then allowed to buy gold. So therefore, gold was starting to shoot up. But I was long gold in November and early December, and I think I sold it like late January into February-ish. It was just stuff like that. I'm like, yo, this mother trucker really just said people are taking their money out of their bank accounts to buy gold. I said, Mom, are you taking your money out of the bank account buying gold? She looked at me like, no. I'm like, okay. Right? Like, ask someone if they're taking their money out of their bank account to go buy gold. No, they're not. All right. So if you're going to come on YouTube, please just do yourself a solid and don't look like an idiot. It's okay to because some people just want it for the clout and it's all about views. At the end of the day, they want to turn it into money. I get it, but don't sound stupid. It's going to be a disservice to yourself when somebody like me comes along and says, who the hell do you think is taking their money out of their bank account buying gold? You sure it's not going into a money market account or treasuries? So, but I am a uni student who is very busy. I'm just looking for money to earn directly as stocks. Wait till I'm out. And that's what it's all about, Malik. That's what it is all about, right? Just building your net worth up throughout. And that's exactly what I stress. Exactly what you just said, right? That's exactly what I stress. Is that this is one of many tools that are out there to help you get your, your net worth up, bring in some extra money. Maybe it's for a vacation, maybe it's for a home, whatever it is. Maybe it's just retirement. It's one of many tools at your exposure to use to get you wherever it is you want to get in life. If there is something monetary value that you want, this is one way to get it, right? This is just one of the tools that you can use to get it. I appreciate you stopping by, Malik. I really do. It was nice to talk to you. And if you have any other questions, don't be shy, ask away, because, if you have a question, someone else out there has the same question or is wondering the same thing and maybe is a little shy and doesn't want to reach out, So it does help other people. So we did get that rejection. I like to see that. That's good. That's a good sign, right? We are still just pulling back and still holding this pivot from yesterday. It feels like, though, 474, even if we rally from here, 474 should be tested tomorrow or sometime. All right, 474, because we pulled into that area. All right, we pulled in here. 475, 474, it's like $1. I was hoping right there we could just turn that into resistance. Man, if we could have turned this back into resistance, then I would have taken a short in the 474. So we did make it support. I'm sorry, we did. Barely, though. 474.50. What are these at? So we're still rejecting here. If you're still here, Malik, what are you going to school for? Curious. And do I think tech stocks are doing really well right now? And will this carry us out for the rest of the year? Again, in my opinion, there's really, as of right now, there's just one event that I'm waiting for. Oh, awesome. Electrical engineering, second year bachelor. Awesome, bro. All right. There's one event, in my humble opinion. Okay. It is my humble opinion that it's not about whether or not we're in a recession or going to have a recession. I'm not even worried about that. All right. Because as of right now, it's not here. Labor market continues to come in as tight as that is. You're not going to have to worry about a recession, okay? So until we start getting those job numbers ticking up and the rate of change on those job numbers is like jumping and jumping and jumping higher and higher, then we can talk that talk. But right now, rates are still at 5.5%. All right, and I've been saying this over and over. Rates are at 5.5%. This bank term lending program is over in the beginning of March. At the end of February, it's done. So that means if the banks need to raise money, or if the banks get low on deposits and the banks need money, they either have to, one, raise capital, which isn't good, or two, if the banks were... So here's the thing. If they have to, like, if rates are still at 5% and these banks have trouble, right? If they have to take, because what it is when banks are run low on deposits, they'll sell things like bonds. If these banks have to sell their bonds, they may be selling them at a loss, like we saw 10 months ago. right? A year ago. All right. So if rates are still at 5.5%, their deposits aren't growing because money is in money market accounts. It's in, it's not in the bank. Anybody who is anyone who owns a business, like even a small gas station, right? Business franchises that aren't publicly traded, their venture capitalists are going to have that money in bank accounts because any extra money that is brought in from the company, you still want to grow that capital, right? You're a business. That'll help pay, like Apple, right? Bonds, interest rates in particular, just pays their payroll because they have enough cash on hand. All right. Their payroll is through, the majority of their payroll is through bonds. Like they can buy a bunch of bonds and just through the interest on that pay payroll. But plain and simple, if rates are still at 5.5% and banks start to have trouble and the Fed does not continue this program, tech stocks, bank stocks, healthcare, we're going back down, and it'll be probably one of the last times we'll have for a dip buy. Now, I don't know if they're going to continue. If they continue it another year, yes, we're going to see tech stocks. We're going to just see the whole market continue to rally. And I expect through this bank term lending program that the banks are going to do pretty well tomorrow. They start reporting tomorrow morning, and that's going to help us just either continue to a new high or pull it back. And we may just like we may just make a new high, and then we start getting news like if the Fed doesn't continue this program. I mean, listen, there's just a lot, like I don't know what they're going to do. You know what I mean? So it's like I am wondering what the Fed is going to do to either help these banks out, because right now interest rates are still 5.5%. If the Fed pulls rates back down to a level where the banks will be okay, which I think is like 3.5 to 4, and then we look, over time raise rates, right? I still think if you're going to lower rates, then tech stocks are going to do very well, right? Banks, tech stocks, the market as a whole is going to do really well. Yes, I do, because there's only a few things that happen, and that is the Fed continues the program with giving the banks liquidity, the money that they need, right? So then banks go up, the whole market goes up, like things will be just how they are right now. And you know what? And some of those tech stocks, it all depends on what market cap they're at again, because it'll depend on what market cap, which if they need to raise money, as we get down the road, some of these smaller names may need to raise money. And if they do, they're going to be paying more for it, and they're not going to get enough. So there's a lot of reasons why the Fed should push rates back down. In my opinion, it may sound bad, but I, as a citizen of the United States, and what would be good for the people and the country, right, is I would not lower rates. I would not extend this bank term funding program. And I would actually let us pull back into a recession. A couple banks may fail. People will lose their job. Okay. But I would do it, and I would just get it over with. I would get it over with. That way we have a setback. Prices can come back down a little bit. The prices of homes can be affordable for the average person who is at a 9-to-5 job that doesn't make $80,000 to $120,000 a year. Maybe a single person, right? There are a lot of people like that, right? You're not getting by, at least in my area, on 50 grand a year. You ain't buying a house, especially if you're single, right? I would pull things back to try to bring rates down, or to try to bring prices of homes and all these things back down. And with some banks going out of business, they'll get bought up. But where there are ones that leave, there's new ones that are made. And I would do it, and I would just get it over with, right? You seen what Volcker did? Yeah, it was a few years of pain, and you're only talking 3 to 4 years. This is not like 20 years of just 15 years of just nasty, recession, no jobs, misery, suicide rates up. No. it's a short term. Like, we could have already had it over with, but they don't want to do what's right. Okay, they don't want to do what's right. They just want to keep this thing going. And there's going to be a time when it just gets to this point where they just step away, where the big boys step away, and the smaller one, the middle class person, cannot afford it anymore. And then, I that's what I would do. I would. There's no reason why. Like, you got to think. It's just, we've been going straight up since 2008, and it's okay. We can still live that way, right? It's just, you got to think about the government. You got to think about what comes out of the government's pocket at that point, which in turn is your taxes. Because if things continue to go up, your taxes are going to have to go up. Section 8, the food and shelter for homeless people and stuff, the checks that go out, those are on an inflationary basis. So the higher just things get going, that's more you're taxing. That's more that's less you're bringing in. That's you're paying more for stuff. So now you have less extra money. You're paying more for taxes. Do you know what I'm saying? So there is just a whole string of just different routes on how all this plays itself out. Or, that what happens when you don't, handle a situation, right? You got $7 trillion. It's going to take, it could take 10, 15 years to get some of that money just out of the system. Okay, there's a thing called velocity. If you look it up, it's called the velocity of money. The Fed used to measure that. There used to be a measurement of how fast money, pretty much the rate of change of money changing hands, right? It is the rate of money circulating. And it has slowed down, but at one point it was just, velocity was high, money cycle was high, and that in turn also ties in with your M1 and N2. And I'm not trying to get technical with it, but, it's like, to what point, it's like, what was your sole purpose then of raising rates if you're just going to bring them right back down, right? I get you want the unemployment, or you want the labor market to be tight. We all do. But you start getting into the retirement. What do you think about the people that can't work, that are on Social Security, right? That can't, that are struggling because they're not getting raises. Right, so there's this whole thing where inflation should be moderate. It needs to be moderate, and what we just had was not moderate. Again, that's my opinion. That's what I would do. All right, I would have kept rates up. I would let a few banks go under. I would, obviously FDIC. See, people need to be educated to understand. If you have over $100,000, you're not going to be covered for over $100,000. All right, your random person doesn't know that. Like our mom and pops, generations before us, were just told, not why, but told to put their money in the bank. Well, yeah, if you're going to put your money in the bank, use the bank for what it's for, and that is debt, right? That's lending. If you're not going to lend, if you're not going to get money from the bank, and I don't mean just buy a fucking, or excuse my French, to buy a vehicle, to buy a hunk of metal that's going to go to zero in 10, 15 years. I'm talking about using the bank to use that debt for asset prices, I don't care if it's stocks, companies, right? Whether it's real estate, whether you want to get money to start a business or just use the bank for what they should be used for. If you're not doing that, why do you have a bank account? They're not paying you any interest. You might as well just go buy the company, right? You might as well just go buy Bank of America or something, Not to say you'll make more or less, but it's just, that's what they were told. They were told to just save their money, put it in the bank. And that ain't the way it should have been. Nobody really, that only benefits them, right? The bank also has a margin account, right? They can break down your money more than we have in margin. But that, I was on a little bit of a rant there, but that's my opinion. I think we needed to pull this market back. We did have some good buying opportunity, but I would have done it and got it over with, where we would probably still be in the middle part of it now, but we would be working our way out of it. We still don't even know if we're going to have a recession. So everything is just getting pushed back. You also got to think see, when it comes to this stuff, notice right now, here's what I do. As far as the markets, right? Apple, Okay. So Apple has had a little bit of a tough time. It had a good week this week. I was long this stock. All right. But the real winners right now are Microsoft, Google, and Amazon. And they're not at all-time highs yet. So I still feel like, you know, they have room to run. And how do I explain this? So Apple's struggling a bit here. But in 2 days, it's had a really nice run here. Now, if we bring up Microsoft, like Microsoft and Google, they're all up here, right? They're up here making new highs up here. So what I'm going to do is, but with even that said, right? You see how Google's up here, right? Apple's down here, and Microsoft, Amazon, and Google are here. But long term, on a daily chart, really Google and Amazon are below them. So it's finding this catch-up trade, right? Because you have your leaders and you have your laggards, right? Apple, Microsoft will be your leaders, and then followed behind that will be your laggards, like let me give you guys an example, like AMD, right? Like AMD, I guess you could say, even though it's a semiconductor in a whole different sector, but understanding those things that are at play. And this is why I am so bullish on Google, because I still think Google and Amazon together, they have been lagging Apple and Microsoft and Nvidia, right? So like there you go, Sony Group. Oh my gosh, come on. So this whole sector for consumer electronics, what's going on? I was gonna say, did my stuff freeze up? LG. So you can see here, Apple's pulled back, and as a sector, it's red. But yeah, so that's all, Malik. Yeah. Apple, Netflix, NXP. You think I should redistribute money, or you think I should? You think this is solid? Listen, I would keep those. In any new money you acquire, I would think about buying other names. So like, I can't tell you what to do, but for your best interest, I would, it's not that I would think about diversifying. I would, you want to have names that, some more names in there. It's like, so if I bring up Apple, right? Just look at it. Here's how I look at it. What are some good companies that are still like on their lows? And if this market is going to go higher, which ones have the room to the upside for this next like year to 2 to 3 years, right? Where the market catches up at the highs if we're going to go higher. So here's a chart of Apple, right? Apple is up here. Even though it's pulled back, it's still up at highs. It's still up past that 2021 high. Now, if we pull up like let's just say like Snowflake, right? Here's Snowflake. Look at Snowflake, still way down here. All right, this is a double. So, sorry, I hit my cat is just fucking with me. Notice how Snowflake's way down here. Right? So you have, what is this? Even just catching halfway up, you're talking a 35% move. So you want to see where the leaders are, which is Google, Apple, Netflix, Microsoft, Amazon, right? They're all the leaders. Then you want to look for that mid-cap technology to like catch up with them, right? Because I was taught as a market, yeah, I know, because I hit it. I got all this stuff on my desk, and my cat jumps up here, and I got my laptop and stuff over here, which is getting ready to fall. I have a drink, I have a bottle of water, and she was trying to jump up here. I'm like, babe, I don't have room. So things like Snowflake, for instance, okay? The big boys are up at highs. The big boys are up here. So for me, as a buyer, if we get a pullback, Okay, chances are these aren't going to pull back as much because they're on their lows. We should have been able to commute, like, you know, we could have picked up some of these names because they were on their lows. Like, we could have gotten Coinbase at $30. I even said it the other day. You know, I'm like, man, Coinbase was at $30 and I didn't buy it. Like, why didn't I buy it? I just didn't even think about it. Like Snowflake. There was another name that I had in mind that I can't remember what it was, but it's a good company. And, you know, so I was always taught, like, you want to look for the leaders to lead, right? And in a healthy market, you know, the other laggards should start to lag. They will lag, but they will catch up. You know, as a market as a whole, whether it's healthcare, banks, technology as a whole, you want to see the leaders lead, like JP Morgan in the banking sector, and then as a retail bank like PNC to eventually catch up, but still be flowing in the same direction is a healthy market. If you have JP Morgan making highs and PNC is making lows, that's saying, okay, the big boys are all right, but the retailers are selling off. Like, what's going on here? All right. I want to look for some of these technology companies, right? Because I feel like they have the most to gain if they're going to catch up to the big boys, right? Like Snowflake. What are some other ones? You know, if you get me, like, personally on Netflix, I think Netflix is at a point where they're a great company. Don't get me wrong, but where is the growth going to come from for Netflix after, like, where they're at? Like, what's next? Okay, because if you're not growing, you have to be you're either a growth stock or a value stock. All right. What was the one name that I was thinking of? Man, I forget what it was. We could look at like Uber and stuff, right? Like, so if we have Snowflake here, and then like we look at Uber, right, as a technology company, even though they're like, look, Uber's way up here. So there's something obviously wrong with Snowflake. Is it just a sector thing? They're in the cloud space, I think, right? I think they are. I think they're in the cloud space. Oh, Shopify, that was the company, right? That was the company. So you can see here, Shopify, which is a stock I looked at the other day, is starting to like make its way up there. So these are the names as an individual. I'm going to buy these dips because this is going to give me the more meat on the bone. And then at the same time, if there's a sell-off, it's not going to take me very long to exit that position if something were to happen, right? So this is what I would look for. This is the, the bigger boys are up here already. Like, how, like, are you going to go from 2 trillion to 4 trillion just like that? I don't think so. That growth is it's not that it's over, but like Shopify and some of these other tech names, you're talking decent percentage moves just getting back to like, so like even this level, right? That's a 65% return. And it's also about what sector is hot, what's going on, right? Energy was hot at one point. There was a war. We were opening back up, it was energy. Then it was semiconductors. And the next one, I think, is going to be banks. I think that'll be one of the next. Now, the banks are not going to give you that AMD, NVIDIA return. You're not going to get 200-300% on banks. So, it's 352. It is 352. Fuck. So, we're not moving, but we are turning this into resistance. Let me use the restroom real quick. Malik, I hope that helps. And you said you have NXP on there. That should be one that's you have some solid companies there. I think you said NXP, right? I don't know what their ticker symbol is. I forget what their ticker symbol is, but they are a semi-play, aren't they? NXPI, I think it is, maybe. Nope. NXPI. Yes, NXP is NXPI. Yeah, so like NXPI, right? Now I don't know what, like you say, they're transistors and stuff like that. you know, there's some companies that we'll have to see. You know, maybe I'll do a video on this tonight, and that's what I'll go over is like, you know, if we're not going to go into a recession, or if the Fed's just going to, you know, pull rates back and continue this bank term lending stuff, and we're not going to have a banking issue, what are the sectors that we could, you know, look at to catch up to, you know, that'll give us like, that have a nice chunk of meat on the bone, and that we could look to grab and you know, take up the highs, right? Which, like, you know, like even like Walmart and stuff, right? They're up there just like Apple. What is that? Consumer discretionary or consumer staple? I think it is. Consumer defensive. Consumer defensive. That's what that is. All right. Consumer defensive. So you can see here they're still at highs. It's those tech stocks that, you know, like Snowflake, stuff like that, that that still have, you know, we need them to get going. You know, we need them to get going. All right, here goes the spies. Shit. Yeah, let me use the restroom. I'll be right back, guys. If you guys didn't get anything today, if you didn't make any money, or if you lost money, don't hang your head on it. How are you going to fix it? How are you going to fix it tomorrow? So what I'm saying is, don't trip. There's always tomorrow. We'll finish out the week strong.
Said about it.
Investors should have choice, but GBTC is coming to market in a very differentiated way. It is going to be, as of this morning, the second largest spot commodity ETF in the world. It has $28 billion of assets under management, and other issuers may try and differentiate on fees. For GBTC, it's about size, liquidity, and track record.
Mike, one place you're not going to find a Bitcoin ETF today is Vanguard, the firm telling us that spot Bitcoin ETFs will not be available on that platform. And quote, we also have no plans to offer Vanguard Bitcoin ETFs or other crypto-related products. These products do not align with our offer focused on asset classes such as equities, bonds, and cash, which Vanguard views as the building blocks of a well-balanced long-term investment portfolio. Back over to you.
Kate, thank you so much. Joe, the Vanguard news underscores the fact that you do not have universal buy-in, that this is a real asset class. You have true believers believing it's the only money or whatever it is, and you have deep skepticism. And then you have people in the middle. Does the existence of a spot Bitcoin ETF wrapper change your conclusion about whether to allocate toward it or not?
Over the course of time, we'll understand if this is, if Bitcoin is able to traditionalize itself as an asset class. Really, the referendum on that is going to be, does the institutional investment community really show up? Because that's been what has been missing so far from the participation. I think hedge funds overall are only about 10%. So in the coming days, it's going to get interesting. Look, this is a new shiny toy for the algos. Yeah. You'll get options on the ETFs, which will be coming. In the near term, I think the real battleground is Coinbase.
Yeah,
Coinbase
exactly.
was 6.5% higher this morning. Then it reversed. I think it was 6%
Yeah, it's down
lower.
almost 7%
Yeah, so that's the real battleground in the near term.
Off 19% this month. And when you say battleground, I mean, the degree to which you think Bitcoin ETFs are the dominant vehicle is exactly why you would think that Coinbase loses some of its reason as being an important intermediary.
Yeah, the cannibalization of the high margin spot Bitcoin trading. Yeah. I don't know necessarily how good that is for Coinbase.
All right. Let's get to Pippa Stevens with more on this pretty big natural.
All right, guys. The market's getting ready to close up here. I am going to do a little bit of work here. We didn't get really the volatility that I was looking for the last few minutes like we got yesterday. Let's see where we open up tomorrow. We have PPI. I feel like there is still, like, just by looking at some of these names that were strong yesterday, or really just strong all week, like right now. So there is, you're noticing Google turning red, right? Really strong this week. First day closing red, which is, it's not a big deal. Okay, MSFT. Closing green. Okay, closing green. The reason I'm bringing this up is because you want to take notice of the ones that are closing red and the ones that are closing green. All right, Amazon pretty much flat, but still closed green. Okay, this will help you sense rotation. All right, Apple. All right, so there's a bit of weakness here. Apple's trying to close flat. So this whole pullback from CPI today, maybe that was just it. But it looks like and feels like once we start getting up to these levels, you know, the big boy, the institutions are there taking their profits. Now, do they step away for a day or two? Possibly, right? Possibly. But it's going to be pretty hard because here's the thing is you have so many people that still haven't bought this market that there's still a lot of buying that needs to be done. So anytime we pull back, I think we just got confirmation that when we get these pullbacks, you got to be a buyer. Okay? Until there's a reason not to be. Here comes the bell. So, great job today, guys. I tried to get ahead of it so that it wasn't too loud. I do have a SPY put right now. Hopefully, I will get out of this, you know, in the coming days. I didn't intend on getting into it. All right. The thing is, I had the order up, and I hit it. I must have clicked it twice. It is what it is, and I never stopped out of it. You know, because I have time on it, and it's not like it's killing me. So, that's a nice reversal. Point blank, if you're going to take one thing out of today, what would that be? All right, what would that be? It would be this. This is what I'm taking out of it. Come on. I don't know what is going on here, but all right, IWM still weak. IWM is still pretty weak. All right, IWM is weak. And then the SPY and Qs pretty much took back that CPI move. We haven't taken it back completely, but, you know, the fact that we pulled back as far as we did and then quickly recovered tells me we got some more upside to go, and we'll probably come in tomorrow with a gap up. I'm just telling you guys right now. So if you guys have any shorts on, in my opinion, unless PPI is that bad, right, that the market cares about it and we get some type of news, I think you get a gap up tomorrow. I'm being honest. That's just, and again, that's just my opinion. So, you guys have a great rest of your night. I'll have a video up in a few hours, and we'll cover some of these names and see what's set up today that we can look for to take advantage of tomorrow. Love you guys. If you guys haven't done so, do us a solid. Subscribe. Hit the like button for us, for me, and subscribe if you haven't done so already. This year we're getting to 1,000 subscribers. All right, we're getting to 1,000 subscribers. We're going to bring some institutional players on here, and we're going to have a great year. You're going to have a great year with us. If you guys have any questions, throw them in the chat or throw them down below in the comment section. I read them. I'll get back to them. Appreciate you guys. You guys have a great rest of your day. If you had a bad day today, don't get hung up on it. We open up tomorrow. Find out what you did wrong. When the bell opens tomorrow, be ready and attack. Manage your risk. Capital preservation is first. Okay? If you keep losing all your money, there's going to be a day where it opens and you ain't showing up because you didn't manage your risk and attack the setups. All right? You got to care about your money. You got to care about treating this as a business, because that's exactly what this is. Okay? The biggest financial markets, biggest financial banks in the world are in these markets, and they treat it as a business because they are, as such, a business. So you guys have a great rest of your night. I'll see you guys later on the watch list. See you guys in a few hours.